You're requested to kindly post in the questions on the slots which you're going to be seeing as you scan the QR code. You're requested to kindly open the app and then we'll have the questions there. So on behalf of the organizers, on behalf of IBAI, I would also like to extend our heartfelt gratitude and our regards to all the past presidents who are present with us, who have given such a strong foundation. We have Mr. Sohanlal Kadel present with us right in front of me. सभी हमारे पूर्व प्रेसिडेंट जो रहे हैं, अध्यक्ष रहे हैं, उनका भी हम हार्दिक स्वागत करते हैं. विशेष धन्यवाद उनका सहयोग, उनका आशीर्वाद IBI को as it moves from strength to strength we have been receiving. We would also like to thank all our partners in success, all the supporters, all the sponsors who have extended their support to us, very graciously extended their support. Thanking ICICI Lombard General Insurance Company Limited for our co-title sponsors, New India Assurance Company Limited, again our co-title sponsors, and GICRE, our co-title sponsors. Also, thank you to all our diamond sponsors, Bajaj General Insurance Company Limited, Indus General Insurance Company Limited, which, as you might be aware, it was formerly known as the Reliance General Insurance Company Limited. Shema General Insurance Limited, Oriental Insurance Company Limited, Axis Max Life Insurance Limited, ICICI Prudential Life Insurance Company Limited, and Care Health Insurance Limited. These are our diamond sponsors. उनका भी विशेष रूप से धन्यवाद और उनको हमारा आभार for all the support, because organizing a conference like this, and that also a 2-day conference, it's not easy. Of course, you need investments towards it, and we thank for them not only towards extending that financial support, but also being as our guide, guiding us in organizing these sessions also. So thank you very much. To our gold sponsors, ACO General Insurance Limited, to Agriculture Insurance Company of India Limited, to Cholamandalam MS General Insurance Company Limited. They again stand as our gold sponsors. Thanking Go Digit General Insurance Limited, IFCO Tokyo General Insurance Company Limited, National Insurance Company Limited, Raheja QBE General Insurance Company Limited, United India Assurance Company, Royal Sundaram General Insurance Company Limited, SBI General Insurance Company Limited, Tata AIG General Insurance Company Limited, and Tata AIA Life Insurance Company Limited. They stand as our very valuable gold sponsors, our partners in success. And also, thank you to our silver sponsors, Precision Informatics Private Limited, Smart Pink, Binary Semantics, Lawyered, and Lumic AI, our silver sponsors. तो हमारे सभी स्पॉन्सर्स का, प्रायोजकों का बहुत बहुत धन्यवाद. और जो लोग अभी भी प्री फंक्शन एरिया में हैं, उनसे मैं निवेदन करना चाहूंगी कि आप जल्द से जल्द अपना स्थान ग्रहण करें. Once again, thank you and welcoming our past presidents who have joined us. We have Shri Sohanlal Kadel ji present with us. Shri Sanjay Kedia is joining us on this momentous occasion of Silver Jubilee celebrations, and the immediate past president, Shri Sumit Shantilal Bora. And let me also take this opportunity of introducing myself to all of you. I'm Bimit Chaudhary. I'm going to be the program conductor, being with you for the next 2 days. And I've had the good fortune of anchoring your events even in the past. And once again, it gives me extreme joy and great honor for me to be standing here on this 25th year celebrations, the Golden Jubilee celebrations of IBAI. So thank you to the organizers for giving me this opportunity, and good to be back with the insurance fraternity, with the reinsurance fraternity, and all the other stakeholders. May I request you all, I understand it stands as a great opportunity for each one of us to be meeting our peers, but then we intend to start our sessions on time so that we don't have that cascading effect and effect on all the other sessions. तो सभी से निवेदन है आप प्लीज अपने स्थान पर बैठ जाएं. And ladies and gentlemen, today though we have our industry, we have the industry sessions. Tomorrow we are also going to be joined by the policymakers. So that's we'll have another inaugural session tomorrow with our policymakers. We're expecting our Honorable Minister of State also to be joining Finance. We have our DFS, the Department of Financial Services from the Ministry of Finance joining us, and our regulators, the Chairman IRDA, who's going to be joining us tomorrow. But that's the session with the policymakers that happens tomorrow morning, the very first session, the inaugural session of tomorrow. In the evening today, we are also going to be recognizing our IBAI office bearers. It's been a tremendous journey of 25 years, which we are going to be showcasing here also. And all who have been in thick and thin and part of this journey, we are going to be recognizing them. As for now, once again, a request to everyone to be at your seats so that we can start, please. Our very distinguished dignitaries who are standing just in front of the stage, may I request you to kindly take your seats, please, so that we can start the conference. Capital of India. A lot much brewing here in the capital. Many of you must have read and seen in the news. But then, in spite of that turbulence, we as Indians stand ready to be facing those turbulence and coming out with more informed solutions. And even in our insurance sector, we continue to address these challenges with the greater collaboration with all the stakeholders. So I thank you all for joining us. A very warm welcome to all the stakeholders, especially joining us on this celebratory occasion of 25 years of IBAI. आप जल्द से जल्द अपना स्थान ग्रहण करें। आपका हम इंतजार कर रहे हैं कि आप सेटल हो जाएं और फिर हम अपना आज के कार्यक्रम को और उद्घाटन सत्र से अपने कार्यक्रम को आरंभ कर सकें। Also at the end of the day when we are going to be further celebrating over dinner. But as of now, we stand good to be starting with the first session. Once again, a very humble request to everyone to kindly be taking their seats. So namaskar to all of you, ladies and gentlemen, wishing each one of you a very pleasant and a happy morning. And it's a pleasure and delight, in fact, with profound significance and a deep sense of gratitude towards all present in this August gathering. I welcome you all on behalf of IBAI, the Insurance Brokers Association of India, which is the collective voice of approximately 840 firms as members pan-India. An association which has been protecting the interest of its members, an association which has been working with the policymakers and the regulators, supporting policy development, an association which has been working and collaborating with all the stakeholders, national as well as international, and an association that has been safeguarding and championing the interest of the policyholders. On behalf of this remarkable, responsible, committed, and dedicated association, I welcome you all, ladies and gentlemen, to this very momentous occasion and a milestone event for IBAI as we all come together towards celebrating 25 years of IBAI in nation building. Welcome to all of you, ladies and gentlemen, to the Silver Jubilee celebrations of IBAI. And as it is said, let your celebrations be such that they pave way for further celebrations. What it means is let your celebrations be more meaningful, more purposeful, more impactful. And it is in this very spirit, ladies and gentlemen, that IBAI is organizing this 2-day conference, which is on a theme which is not only relevant, but then it extends and echoes the very vision and the very purpose of our insurance industry. Bimit Bharat, Surakshit Bharat, a shared vision for insurance for all by 2047. A theme that ensures that the promise of protection extends to every individual, every citizen, every enterprise. A vision, a theme that ensures and drives in social security, financial inclusion, and economic resilience as we march ahead towards shaping Viksit Bharat, a developed India, by 2047. For a developed nation, and for that matter, any developed enterprise, is not just shaped by the wealth it creates, but also the wealth it protects, the assets which it protects. And as we all understand, insurance today is no more just about managing risk. It is also about empowerment. It is also about enablement. Empowerment and enablement of families so that they can take their decisions and keep their hope alive. It is about empowerment and enablement of organizations and enterprises to be taking those more informed decisions without any fear. And then it is about empowerment and enablement of our communities, of our nation, not only to withstand uncertainties, but then to come out of them more stronger and more faster. So in these 2 days, with all the stakeholders, as I mentioned, national as well as international experts joining us, and that is where we thank extremely glad and honored to have also the presence of the Vice Chairman of WFII and also the Director joining us, who are going to be addressing us in the first knowledge session of the day. And with everyone together, we collaborate towards building this conducive, empowering, enabling environment. We not only discuss the current status, but we plan for the next phase of growth. We discuss on the topics of reinsurance, health insurance, rural insurance, SME insurance, where the insurance needs to permeate and penetrate more, going to the people at the last mile. We also address dispute addressal and other topics with our global partners, with our national partners. So it is not just about celebrating that 25 years. It is in fact aligning the very purpose of each and every member of IBAI with the aspirations of a secure and a developed India. That's the larger vision which we are focusing at as we plan for the next 25 years. So, ladies and gentlemen, we are entering the next phase of growth. The next chapter of IBAI is going to be unfolding with this conference. So we mark its auspicious inauguration as per our Indian traditions and customs by lighting the ceremonial lamp, invoking the blessings of the Supreme Power. ईश्वर की स्तुति से, ईश्वर की वंदना से, ईश्वर के आशीर्वाद से अपनी भारतीय परंपरा के अनुसार आज के इस 2 दिवसीय कार्यक्रम का और IBAI की 25वीं जो सालगिरह हम यहाँ पर मना रहे हैं, उसका हम मंगलमय शुभारंभ करते हैं ज्ञान और ज्योति के प्रतीक इस दीप को प्रज्वलित कर. And I would like to first invite here on the stage our past presidents who've given such a strong foundation to IBAI that these last 25 years journey, which we are going to be sharing with you, they've played a tremendous role giving that strong foundation. So please join me as I invite first Shri Sohanlal Kandil ji, the past president from 2010 to 2015, Shri Sanjay Kedia ji from 2015 to 2020, and the immediate past president from 2020 to 25. And then the present leadership, ladies and gentlemen, Shri Narendra Bharinwal ji, the president, Mr. Nirmal Bajaj, the secretary, Shri Ashok Jain, treasurer, Shri Kishanlal Agarwal, vice president, and Shri S. Mohan, the vice president. देवीय सजनों, अतीत से संवाद करते हुए, wherein we have our past presidents, आज को आधार बनाते हुए, where we have the present leadership, the current, to be with all of you. to our past presidents. May I request him to be kindly taking the seats in the front row, and I invite the current leadership of IBAI to be please taking the seats on the stage. मंच पर आमंत्रित करते हैं हमारे प्रेसिडेंट श्री नरेंद्र भरेंद्रवाल जी को, सेक्रेटरी मिस्टर निर्मल बजाज, मिस्टर शोक जैन द ट्रेजरर, मिस्टर किशन लाल अग्रवाल वाइस प्रेसिडेंट, and Mr. S. Mohan, Vice President. As you can see on the screen, broker है तो भरोसा है, और यही भरोसा as members we have been extending to the policy holders, working with the policy makers, working with the international experts, the global experts, and all the stakeholders. So it's been that tremendous 25 years. And I think all will agree that the success of any journey is built by people, by partnerships, and then a continuous pursuit of excellence. And the journey of 25 years of IBAI defines that. So we take you through these triumphs and tribulations, the successes and the failures, the lessons learned, the relearnings which we have done in these 25 years, and the milestones which we have achieved. Taking you through the journey of 25 years, I invite our Secretary, Shri Nirmal Bajaj ji, to kindly open the conversation here by presenting this remarkable journey of 25 years.
Thank you. Namaste and good morning. Our distinguished dignitaries, respected past presidents, fellow board members, international delegates, leaders of insurance industry, our esteemed members, ladies and gentlemen. It's a very warm welcome and heartfelt welcome to all of you. There is one old saying, when well begun is half done. अभी शुरुआत में हमारी गणेश वंदना से चालू हुई, प्रभु का आशीर्वाद से अभी हम विनती से चालू किए हैं, तो आई एम श्योर we'll be having 2 days program fully blessed with the God's blessings. अच्छे से होगा सब. First, let me congratulate each one of you on the occasion of Silver Jubilee of our association, an amazing journey of a quarter century. Today, I invite you to travel with me from a dream 25 years ago to an institution now, and from institution to legacy. Today we celebrate not merely our 25 years journey. We celebrate 25 years of vision, perseverance, professionalism, and service to the nation. Around 25 years ago, when India's insurance sector was opening up its door for private participation, a new challenge emerged. Customers had suddenly had wide choices, many choices, but they also needed one independent professional advisor who would represent their one channel, that's in policyholders. The need of this gave the birth of the insurance broking, and this need gave birth to the insurance broking professional institution. On 25th July 2001, 7 visionary leaders led by our founder president, Sri Bharat Bhai Boda, came together and signed a memorandum of article of association. And can we have the video, please? We had our founder president Bharat Bhai Boda, and may I request the AV team to present that? Yeah, that was the article of association signed by 7 signatories. Incidentally, happily, we are having one of them present in the audience, which in last many years we forgot to found out. Today, should I invite Srimati Manju Mahindra ji? Please come in the front. One of the 7 signatories and our 3 past presidents, Sri Sohanlal ji Kadel, Sri Sanjay Kedia, and Sri Sumit Bodhadru, please come in front. May I request all our participants to give a standing ovation and thundering. और अभी हम लोग we are 800 plus brokers, just 800 plus broking houses and thousands of people working in the broking houses and millions of POSP working under with these 800 brokers. So we have, thank you for our founders. You have started something and we have reached to this mammoth level. Friends, I'll take you through a journey of where we started and where we have reached in terms of numbers. Initial 5 years, we have roughly less than 200 brokers. Now we are 800 plus. We started first few years, probably we had few 100 crore of premium done by the brokers. Now we are having 1,25,000 crore premium. Salute to you, sir. The industry started, when we started, the broking started, in the general insurance industry was roughly below or around 10,000 crore, if I remember correctly. Now we are above 3 lakh crore in last 25 years. Out of 3 lakh crore for general insurance and 8 lakh crore for life insurance. All put together, we are having 11 lakh crore new premium every year. Last year, this is as per the IRDA data. And more than this, we are having more than 75 lakh crore AUM, asset under management of all these insurance company. This is not a small number. This is huge, huge number for any country. I will request somebody to translate it for our foreign delegates, how it work out to be in billion. Insurance today is not merely protecting risk. It is protecting aspirations. It is building financial vigilance. It's strengthening Indian economy. It's helping building nation. Many people ask what the IBAI has done in the last 25 years. So I'll just give you few examples what our founders and our earlier presidents and the team has done. Friends, IBAI has remained true to its founding purpose to protect the interest of policyholders, to strengthen the insurance broking profession, to work constructively with IRDA, Ministry of Finance, Department of Financial Services, IFCA, and every stakeholder. Over the years, we have advocated reforms, participated in consultations, suggested improvements, built consensus, and served the bridge between the policyholder and regulator. One of our earliest victories was removal of provision, 5% discount in lieu of agency commission. Those who are here for decades, they will remember how draconian this provision was. If that provision would have continued, probably we would not have existed. And thanks to our founder president, Bharat, during his term, this was actively fought with the regulator and we won. We got the removal of this. Sir, you are also part of that. During the presidency of Sri Sanjay Kedia, the profession faced another existential challenge arising from the proposed reduction in brokerage commission. Under his able leadership and with the unwavering support of the board and our members across the country, IBAI successfully navigated this difficult phase and contributed to the evolution of a balanced, transparent, and regulated architecture for commission and rewards. Thanks, Sanjay Bhai. That's great for all of us. This approach was really appreciated across the country. During the tenure of our immediate past president, Sri Sumit Bora, we encountered significant challenge relating to the proposed disclosure of broker remuneration on the policy. Yes, it was very damaging provision, broker remuneration and removal of 5 crore premium threshold applicable to bancassurance corporate agents. Through his sustained representation before the Ministry of Finance, the Honorable Finance Minister, IRDA and other stakeholders, IBAI effectively articulated the concerns of the profession and secured outcomes and protected the long-term interest of our broker members. Thanks, Sumit Bhai. More recently, one of our landmark achievements has been introduction of perpetual broking license, significantly improving the case of doing business. Thanks to Narendra and the entire IBAI team who has really advocated for it and got this approval done. This is amazingly good. Thank you, sir. One of past regulators is sitting there and is just smiling how we have created. Can we have you, please, can you please rise, sir? People will like to appreciate you, both of you, sir. They're our regulators who help us. Or Mahipal, sir, please. Mahipal, sir, is the Executive Director of Gift City, IFCA. I missed out something important. Thank you, President. During the tenure of our respected past president, Sri Sohanlalji Kaderi, the industry witnessed de-tariffing and the abolition of commission on third-party motor premium. Through his persistent efforts and sustained engagement with the regulator and stakeholders, IBAI successfully secured and the restoration of commission on third-party premium, an important milestone that protected the interest of the insurance broking fraternity. Thank you, sir. These milestones were not achieved overnight. They were results of constructive dialogue, perseverance, and collective efforts. They are just a few examples from our remarkable journey over 25 years. They are not the complete picture. Please congratulate yourself for a big round of applause for successful achievements of our predecessors. Every president inherited challenges. Every board faced defining moments. Every generation of members stood shoulder to shoulder in protecting the dignity, independence, and future of our profession. That was always been true strength of IBAI. Not one individual, but the collective wisdom, commitment, and unity of our members. Friends, further, I wish to assure you that our recognition, your association has been actively engaging with all our stakeholders, government, regulators, consistently and regularly. Mary, can I have the photos here? Oh, already having. So nice. Can you keep changing? Yeah. This is last with the recent current our regulator, Sri Ajay Sethji. So your board has been actively engaging with all the stakeholders to ensure we enjoy the freedom and the respect for our profession. Friends, today we have IBAI has always been believed in excellence requires continuity. Our partnership with premier institutions such as National Insurance Academy and the Insurance Institute of India laid foundation. Over the years, we expanded this thorough journey through online BQP programs, POSP certification, mock examination, and continuous learning platform. More than 25,000 insurance professionals have been benefited from these initiatives across Tier 2 and Tier 3 cities. Our knowledge series, our claims handbook, which has been very well accepted, respected in the industry, our iBroker magazine, continue to strengthen the knowledge of the members of our profession. IBAI has proudly carried out India's voice to the global insurance community. We have 2 foreign delegates here from WFI. Through our engagement with WFI is World Forum of Insurance Intermediary. May I request our foreign delegates, WFI representatives, please raise. BPAR, Broker Association of Japan and Australia, through the establishment of our GIFT City IFC chapter, and have opened new opportunity for international collaboration, offshore reinsurance, and cross-border placements. Friends, as we celebrate our glorious past, our eye must remain firmly fixed on the future. Our Honorable Prime Minister, Sri Narendra Bhai Modi ji, have given our nation an inspiring vision, insurance for all by 2047. We sincerely appreciate the Government of India, Ministry of Finance, Department of Financial Services, IRDA, IFCA for their visionary leadership and progressive reforms. On behalf of IBAI, I reaffirm our unwavering commitment to partnering with the government, regulator, and industry in achieving this national objective. Before I conclude, I express my heartfelt gratitude to our regulator, the government, insurance companies, surveyors, international partners, past presidents, board members, committee members, and above all, you all our esteemed members. Your dedication has made this institution what it is today. Friends, 20 years ago, our founders planted a seed. Today, it has become a mighty tree. Let us continue nurturing this tree for generations to come. As we embark upon the next chapter of journey, I leave you with 2 lines. सफर अभी खत्म नहीं हुआ है, ये तो बस आगाज है, अभी हमें छूना पूरा आसमान है. From together from vision to legacy, and now from legacy to limitless policy, limitless possibilities. Jai Hind. Thank you.
Thank you very much, sir, for sharing with us this tremendous and remarkable journey of 25 years. And as you said, हम तो चले अकेले ही थे, लोग मिलते गए और काफिला बनता गया. So now we are entering the next chapter of growth for IBI. What next? And I think that is where we seek, and it stands extremely fitting that we are led by the leadership of IBI, who have not only curated and very thoughtfully curated this 2-day conference, but then whose vision and mission will define the next 25 years. So please join me, ladies and gentlemen, as I invite the President of IBI, Shri Narendra Bharindwal ji, for his presidential address.
A very good morning, everyone. Respected dignitaries, distinguished guests, past presidents, esteemed members of IBAI, colleagues, my international delegates, and my dear friends. A very warm good morning to all of you. Today is truly an emotional, historic moment for all of us, as we gather here to commence the Silver Jubilee celebrations of our association, Insurance Brokers Association of India. 25 years represent much more than passage of time. They present a journey of vision, resilience, commitment, and collective endeavor. As we celebrate this significant milestone, we respectfully acknowledge and pay our heartfelt tributes to all those visionary leaders who laid the foundation of this great institution. We remember with immense gratitude our founding president, late Shri Bharat Bhai Boda, whose foresight and leadership gave shape to the broking movement in India. We also acknowledge the invaluable contributions made by Shri G.R. Vora, late Shri V. Sitapati, our past president, Shri Sohanlalji Kadel, Shri Sanjay Kedia, and the immediate past president, Mr. Sumit Bora. And also all former secretaries, directors, committee members, and every member who devoted their time, wisdom, and energy towards building IBAI into the respected institution that it is today. This Silver Jubilee belongs to each one of you. Friends, when insurance broking was introduced in India in the early years of liberalization, the vision was clear: to create a professional intermediary that would represent the interests of policyholder, bring global best practices to India, and act as trusted advisors in an increasing complex risk environment. 25 years later, we can proudly say that insurance brokers have fulfilled this responsibility with dedication and integrity. From a handful of pioneering firms in 2001, today the broking fraternity has emerged as one of the most important pillars of Indian insurance ecosystem. Insurance brokers today contribute significantly to the overall premium growth of the industry, serve millions of policyholders across retail, corporate, and rural segments, facilitate insurance awareness and financial inclusion, help business identify, measure, and mitigate risks, contribute to product innovation and market development. The testimony of that is the motor product development that has happened over the years. Generate employment and entrepreneurial opportunities across the country. Most importantly, brokers have consistently stood beside policyholders during moments of death, disease, disaster, and despair. Insurance at heart is a promise, and brokers have played a vital role in ensuring that this promise reaches every individual and enterprise with trust, transparency, and professional advice. Friends, as we reflect upon our past, we must also recognize the tremendous transformation taking place in India today. Under the visionary leadership of our Honorable Prime Minister, Shri Narendra Modi ji, India is progressing towards becoming a developed nation under the vision of Viksit Bharat 2047. The financial services sector is witnessing unprecedented transformation driven by digital infrastructure, financial inclusion, innovation, and regulatory reforms. The insurance industry now stands at a defining moment in its history. The vision of insurance for all by 2047, as articulated by our Honorable Prime Minister, government, and regulator, is not merely an industry aspiration, it's a national mission. It is in this context that IBAI has adopted the theme of our Silver Jubilee celebration, Bimit Bharat, Surakshit Bharat, Sabka Bima, Sabki Suraksha. This theme is not merely a slogan, it is a commitment that every family should have financial protection, a commitment that every MSME, farmer, entrepreneur, and citizen should have access to risk protection, a commitment that no individual should be left vulnerable in times of adversity. And I firmly believe that insurance brokers will play a defining role in making this vision a reality. Friends, as we celebrate our achievements, this is also an occasion for introspection. The next 25 years will demand from us greater professionalism, stronger governance standards, enhanced technological capabilities, and deeper engagement with all stakeholders. The future of insurance broking lies in expanding insurance penetration in underserved markets, leveraging technology and digital distribution, developing specialized risk advisory capabilities, supporting MSMEs and emerging sectors, strengthening policyholder education and awareness, and it is good to know that the regulator has now instituted the Policyholder Education and Protection Fund. And I think we as brokers, who are the last mile and the first touch point to the policyholder, will play an active role in that. Also, building capacity among small and medium brokers, which are the strength of our association. We have done a lot of initiatives, and going forward, we are going to take a lot further initiatives to ensure that our small and medium brokers are benefited in technology, capability, capacity, so on and so forth. Also, collaborating closely with insurers, without whom our survival would not be there. It's the product and the policies that the insurance companies create, which we take to our policyholders and regulatory and government institutions. IBAI remains fully committed to supporting this transformation. Over the years, our association has continuously engaged with regulators, government authorities, and industry stakeholders on issues impacting policyholders and intermediaries, whether through advocacy, knowledge initiatives, claim studies, publications, training programs, or international collaborations. Our objective has always been singular: to strengthen the insurance ecosystem and serve the policyholder better. Friends, as president of IBAI, I consider it a privilege and honor to serve this great institution during its Silver Jubilee year. I am deeply grateful to all the members of the board, past presidents, office bearers, committee members, and our secretariat for their unwavering support and guidance. I am also sincerely thank our insurance company partners, reinsurers, service providers, and international associations for their continued cooperation and friendship. Most importantly, I express my heartfelt gratitude to each and every member of IBAI. Your trust, support, and active participation are the true strength of this association. As we enter our next chapter, let us collectively resolve to uphold professionalism, to protect policyholder interest, to strengthen ethical market practices, to work collaboratively for increasing insurance penetration, and to contribute meaningfully towards building a Bimit Bharat, Surakshit Bharat. 25 years ago, our predecessors sowed a seed of vision. Today, we celebrate the tree that has grown from those efforts. And tomorrow, it's our responsibility to ensure this tree grows even stronger and provides protection, opportunity, and trust to generations to come. Thank you very much for the opportunity and having me over here today. Thank you.
Thank you very much, sir, for your way forward address as we all come together towards shaping a more modern, efficient, technology-driven, globally competitive, and then a sustainable, resilient, ethical, and a future-ready insurance ecosystem. Thank you very much, sir. And ladies and gentlemen, would also like to mention here that today in the inaugural session, we were supposed to be joined by Dr. V. Anantha Nageswaran, the Chief Economic Advisor to the Government of India. He stands as a policy thinker, economist, an author, with his very deep insights into public policy and macroeconomics and the growth trajectory of India. But then, unfortunately, he's not been able to join us. He sent his good wishes, and we really respect that. And we are going to be in touch with him. Moving forward, ladies and gentlemen, as we celebrate these 25 years, जरूरी है कि हम अतीत से भी संवाद करें और अनुभव को भी सुनें. And that is where we would like to once again seek the guidance, the advice on the way forward from our past presidents. Herein, I would like to first invite Shri Sohanlal Kadil ji, our past president from 2010 to 2015. आपको मैं मंच पर आमंत्रित करती हूँ इस सभा को संबोधित करने के लिए और आपके आशीर्वचनों के लिए.
Respected President and all my brothers, really it gives me immense pleasure to be here on occasion of 25th year. When I was coming, I just referring my old diaries, and one mention was that at least one truckload jalebi or samosa I have eaten in IRDA, along with Randir ji, Suresh ji, Mathur, हमारे भाई, one of founder is sitting here of IRDA. First time I met him when he was in the Delhi LIC building. I think that in the parking area we have an office, IRDA office. I had an opportunity to interact with IRDA on behalf of all of you. It is going average 50 times in a year. Either it is a chairman level, either it is a any level. And IRDA was so open, they never say no. Whenever we wish, we could have entered there. And two specific problems I would like to mention. That after Bombay incident of hotels by terrorist organization, Tourism Commission was abolished by insurers. Then from IBAI, we requested IRDA that because of brokers and agents, tourism premium is coming, otherwise won't come. We go to the client, we pursue them, we make them to understand why you should take, then only coming. This issue was taken purely by IBAI, and there is a pool, it's created in GIC, tourism pool. We followed all the members, then IRDA, ultimately Sri Ram Prasad ji was the member, non-life that time. And after fighting for 6 months, they passed an order where they mentioned that 2.5% brokerage commission can be given subject to collection of extra premium for the client. And luckily, that circular from pool came to IRD2 first. Then my office was called IRD2 on those days. I went immediately through IRD with Ram Prasad. I said, what is this? You are asking to collect 2.5% extra from client and few pay to it. This is not justified. And you are getting because of brokers and agents, because of marketing you are getting. Then he also agreed. He wrote back, and in one day we could reverse this, and 5% brokerage was allowed without any overloading charging. So this is because of IRDA we could do. And second time, Sanjay Gadia, my friend, is here. If you know, IRDA proposed 1% brokerage in group policies. All were agitated. Some 16, 17 brokers came to Hyderabad to meet IRDA chairman and could not succeed. I was also there, but I was not president. I was working under the leadership of Sanjay Kedia. One day, morning Sunday, I telephoned to Vijayan Saab, he was the chairman. Sir, मैं घर आना चाहता हूँ. क्या बात है? बोले आप हमको जिंदा रखना चाहते हैं, नहीं रखना चाहते हैं? तो आ जाओ 4 बजे आ जाओ. I went to 4 o'clock to his house, discussed with 1 hour. I said, what 1% is not our expenses. What we are going to get? We cannot do free service. 1 घंटा बात करने के बाद में, हाँ. Next day was a advisory committee meeting. Sanjay was president. And luckily, unluckily I can say, हमको थोड़ी बात करने का थोड़ा कम था. But नहीं, in interest of broking community, I should not have any what you call ill feeling or anything adverse. Even straight away he said, Kadel Saab, tomorrow 10 o'clock is a meeting. Ask Sanjay to come 9 o'clock. Evening I telephoned to Sanjay. Sanjay immediately rushed to Delhi, Hyderabad. He next morning came. We went to IRDA. Again we sat together with the Vijayan Saab. Somehow he agreed, and 10 o'clock the meeting started. Before that, it was resolved. This is IRDA we could do. And Randeep Saab and Mathur Saab, भाई साहब इनका नाम भूल जाता हूँ इसलिए कि वो भाई साहब ऐसा शब्द जवान पे आ गया कि वो भाई साहब ही आता है. तो ऐसा हमने प्रयास पूरा किया. हमारे से जितना संभव हुआ we could do. And with the grace of God, once I was one parliamentary committee was also formed by the government. Sundar Mitra was the chairman of the parliamentary committee. Broker Association was invited, and half an presentation I gave. What is the difference between broker and agents? Till then, our honorable MPs was trying to understand. I said, this is the clear-cut difference. What is meant by broker? What is their duties? What is the dharma and karma? What is it? Then they agreed. I have all proceedings with me. Anytime you can take. And second thing, I was inducted in the IBAI by great Rangachari ji. He asked Bharat Bhai to take Somalal Kadel in their board. Similar way, I also inducted one Narendra Modi sitting here. I inducted him because whenever I take Narendra, automatically Modi automatically added. So he is here, and I have no regret that I inducted a good person who is leading today this much of. So everything we appreciate his hard work. And as a member, I'm not, though I have completed 75 years, but that is the own calendar. I'm same 25. Anytime, any broker, of course, IBAI is there. My office is open 24/7. And I have a friend like Randeep ji, Mathur ji, हमारे महिपाल रेड्डी जी. महिपाल रेड्डी जी, he speaks very less, but he works more. Oh, whenever we went to Mahipal, and we ex-Oriental, both are ex-Oriental. In one time, he as a branch manager used to come to me, and as a IRDA officer, I used to go to him. So हम दोनों बराबर हो गए. आप भी आए और मैं भी आया. तो इसलिए हम जो भी हमसे हो सकता है, एक्सटेंडेड बोर्ड कहिए, हमें तो प्रथम सेवक हूं IBAI का. आप जब चाहे मुझे याद कर सकते हैं. न तो मैं थकता हूं, न तो मैं टायर्ड हूं, न मैं रिटायर्ड हूं. आप कभी भी बात कर सकते हैं. मुझे ये अवसर देने के लिए बहुत धन्यवाद. और मैडम का हमारा बहुत पुराना परिचय है. मैं तो समझा आज 25 साल के बाद में मिल रहा हूं तो वही नीवी दिख रही है जो पहले थी. तो ये स्ट्रीम इनकी, और हर जगह डिफेंस के कार्यक्रम में, और जहां देखता हूं टीवी खोलता हूं तो प्रधानमंत्री दिखे नहीं दिखे, ये तो दिखी जाती है. तो ये इनकी एबिलिटी है. आई अप्रिशिएट. हमारे तो उनको जितना इंश्योरेंस का नॉलेज हमको नहीं, उतना नॉलेज इनको हो गया. अभी इतना लेक्चर दे सकते हो. तो बहुत धन्यवाद आपने. थैंक यू वेरी मच. एंड आई especially welcome to my foreign delegate. I also attended in Singapore, and for 14 countries I presided the program. President of 14 countries, including China, I presided in Singapore. That opportunity IBAI has given to me. I am a very, मैं तो खेत में पैदा हुआ, झोपड़ी में पैदा हुआ छोटा सा इंसान हूँ. ये IBAI ने मुझे यहाँ तक पहुँचाया. बहुत धन्यवाद.
Thank you very much, sir. And from my personal side, I would like to thank you for those words of appreciation and further ensuring my space and place in IBAI. Thank you very much. But thank you indeed for sharing those very heartfelt anecdotes of passion and experience with us. I now invite our next past president, Shri Sanjay Kedia ji, who's present with us in this August gathering, president from 2015 to 2020. May I request you, sir, also a few words of wisdom and guidance.
I have no idea. A very good morning to everyone. I had no idea I would be called upon to speak, but I'm very happy to share a few quick remarks. It is always very pleasing to see our community come together, and particularly on the occasion of 25th Silver Jubilee celebration. It has been a great journey for IBAI, and some of the remarks which I picked up in the morning sessions of our Secretary, Shri Nirmal Bajaj, and President Narendra, that what are the few things which we could always keep in our mind when we continue to work together and move forward. And one particular message which I remember the entire board and all of the members came together and agreed upon. Something which we all know, but it's good to keep reminding ourselves. We all know the core distinction between us and all intermediaries is that we are representative of the policyholder, which is a very unique distinction, but more importantly, a very important responsibility. Responsibility which we all take very seriously, and the reason why we exist. A small distinction that we are not appointed by the insurer, but rather appointed by the policyholder. And policyholder always has a choice to go direct and not even appoint us. So given this very unique, so subtle but so important, in all our representation with the regulator, with the government, and all bodies and larger society, never forgetting the core reason why we exist. And the only reason why we exist is that we do something genuinely good for the policyholder. That's why they choose us, and that's why we exist. And therefore, in all our representation, we keep what matters to them at the foremost. And I'm so proud and so happy to share that your association, in any number of opportunities, when policyholder interest was at fundamental risk, and there are so many instances, it's good to celebrate that, okay, we got our commissions changed and we got this changed, but I think the biggest victory is when we got something achieved for our policyholders. During the time of COVID, insurance policy wordings were what they were, that if the customer has not visited the premises for X number of days, the cover becomes lapse. The entire nation on the property policy, technically the coverage was lapsed. The policyholder had paid the premium, but there was a fundamental doubt whether the coverage technically had lapsed. We had taken up this issue. Your association had taken up this issue. Nobody else but your association. We took it up with force, with the regulator, and highlighted that this is of a grave concern. There was a complete denial and refusal by the insurers at that moment because they were also going through their own challenges. But finally, the regulator listened and asked the GI Council to issue a public clarification on that. There are any number of moments like this when coverage issues, The claims handbook, how insurers truly settle the claims or not perform. Your association took the responsibility, and I want to thank Sri Randeep ji, and in fact, the idea came from him and the regulatory body that this is a void in the market and somebody needs to take the responsibility, and your association took the responsibility. This is being quoted by the parliamentarians, this is quoted by policyholders, and they use this document in their decision making. And this has become a guiding handbook when they want to compare different insurers. So there are so many occasions one can keep going as to what your association has done, and I only wish and appeal to all of us, we should never lose sight of doing the good work for the policyholder. Insurance can be a noble profession if it responds to a crisis, and is a noble profession, and broking profession keeps the insurance noble. We keep it on check always, and that is what we must continue to do so. So in every single representation, if we keep the policyholder interest supreme, then I would say broker is also protected. And in our society, broker is misunderstood, will remain as a level of doubt every time when there's a change of guard in the authority, they try and understand. But the key is, if we continue to do our good work, we will be safe. I remember a time when our commissions were changed to 1% and group medical and many other areas drastically reduced. And the annual event which we had was in Hyderabad. The attendance was bigger than the Silver Jubilee. It was houseful. Crisis brings us together. And there is an element of doubt or cloud around what the future of our distribution model will remain. And there's an expected paper to be released by the regulator on how the commission structure should operate or not operate. Your association from day one articulated that what is in the interest of the policyholder should be the structure, and the interest of the policyholder is a free market. We fought, always represented free market in wording, free market in insurance pricing, and free market in commission discovery. The policyholder benefits when there's a free market because customer has a choice across all aspects, whom to select as an insurer, get the best pricing for the risk they carry, seek the coverage they want, and choice of intermediary whom they want to work with. And we have always articulated and supported the principles of free market. So this is the second thing which I wanted to leave a message to all of you. First is always champion the cause of the policyholder, which we do. And second, champion the cause of free markets. We have represented to the authority in a recent representation that the top 30 markets globally, which have highest gross premium and highest level of insurance penetration, vast majority of them, barring two, have free market when it comes to commission decision. India market also has free market commissions, except that we have an overall cap on the EUM at 30%, which also doesn't exist in any market. This transition of 30% cap was done so that commissions don't go haywire and there's a level of check and sanity. Ideally, this 30% cap should go away and India should be allowed to invest heavily in distribution and grow the whole insurance distribution. Caps restricts growth. It's a self-defeating purpose. But the dialogue is going in a reverse direction, that rather than 30% cap, the cap should come much lower, it should get into different segments, and possibly cap on policy should come back. These are dialogues and debate. We wait for the final outcome of the discussion paper, and we will continue to represent the two themes. What is in the interest of the policyholder and the interest of supporting the free market. We all know the ills of caps. When caps come, commerce continues and payments beyond the caps happen, and it brings black money, not payment of GST, wrong practices, and something which the Insurance Act prohibits, rebating. So all these bad practices come in. So we are essentially a huge supporter of two causes. What is in the best interest of the policyholder, because they always have a choice not to work with us. They choose to work with us because we are adding value in helping them make their risks better, right price, right coverage, and most importantly, the claim when they need the most. So if we are adding value, the customer is choosing to work with us. And we should always support the free market enterprise, because that allows the best efficiency for the policyholder. With this, I hand over back the mic. These two principles: work always for the policyholder and support the free market. Thank you all.
Thank you very much, sir, for your very constructive suggestions and recommendations, and emphasizing on safeguarding and championing the cause of the policyholder and that of free market. Herein, we would also like to acknowledge the presence of Ms. Sushma Bhandari, present with us in this August gathering. Ladies and gentlemen, Director, Insurance, Ministry of Finance, thank you, ma'am, for joining us. And may I now request and invite our immediate past President, Shri Sumit Shantilal Boraji, to please address this August gathering now.
A very good morning to all of you, and thank you IBAI for inviting me. And obviously this was unexpected. I never thought that I would be called to address you all. But having said that, I think I'm in a soup again. Even when I became the president in 2020, I was absolutely unaware that I'm going to lead the delegation that day. It was a COVID time, and we were performing our board meetings on a virtual note, and suddenly all the members thought that I would be the right choice to lead the organization. So I took that opportunity, and obviously it was tough time during COVID because we all were in a virtual world and we never knew what exactly the world will look like. And maybe a year and a half, it was very, very challenging because there was hardly any communication. We could not travel. We could not go to the regulator's office. And it was tough. At the same time, you have to perform your business. Virtually doing business was something which we never thought of. And I think we all learned, and in fact, we all came out with bright colors in terms of, the market growth. We also got to understand how do we support our policyholders during those tough times. As Sanjay mentioned, we came to know a lot of things which were in the policy which never came to earth, because we never kind of, went into that kind of situation which he was talking about, a 30-day block which was there in the fire policy, which we never emphasized. So we weathered all those tough times. And as my predecessor said that, our job is to make sure that our policyholders are protected, and we are here because of them. So that objective will always remain, and that will be paramount. But I feel always that, I never talk about commissions, brokerage, because I think it's a byproduct of the kind of work which do. The hard work will always pay. These are some of the hiccups which will happen every now and then, because the relationship between the intermediaries and the insurers and regulators, I think, is common worldwide. So there's nothing new, but I think the kind of work which we carry, I think that will speak for ourselves. So I feel in India, where the penetration is very low, in general, it is almost 1%, and on the life side, it is around 3%. I think education is the key, where we could take this to a different level. I think we are blessed with 140 crore population. So, countries like Europe and, maybe Australia, where the population is so less, so you find it very, very difficult to find different markets. But I think we have that kind of opportunity. The only objective is whether people are aligned, people are educated, people do understand, And I want to see that day, maybe it is 2047 or earlier, that people queue up against the insurance companies and brokers to buy a policy rather than we going from door to door. So that's the message, and I thank you and I congratulate all the board members for this wonderful opportunity, and all the best.
Thank you very much, sir, for your very, again, constructive suggestions, education, awareness, and be a student of insurance throughout. And as you said, tough times always make you learn more, leave you with experiences. और लोहा तब कर ही सोना बनता है. That's, I think that's as we move forward in these 25 years, these are guidance and suggestions from our leaders coming. With that, ladies and gentlemen, we close the inaugural session and we're going to be moving into the next session. May I request the gentleman to kindly step forward for a group photograph. May I also request our past presidents also to be once again joining us, and we'll have all of you together. May I also request Ms. Sushma Bhandari ma'am to please join us for this group photograph. May I also request Mr. Mahipal Reddy to join Mr. Jagdeep Mr. Suresh Mathur, Mr. Randeep, Mr. Pramod Chandar, Pramod. So you have the young and the experienced both all captured in this one frame. Kal, aaj aur kal. Thank you very much. That's Ms. Swagat Bhandari. My apologies for that. And as we move to the next session, that's the global insurance markets and India's international opportunities. We have been discussing that insurance today is a truly global industry where capital innovation, opportunities, and expertise transcend borders. So in this session, we are going to be exploring global best practices, international trends, and the opportunities for India to strengthen its position in the evolving global insurance landscape. I once again invite the President IBAI, who's going to be moderating the session, inviting Mr. Narendra Bharindwal. Our panelists for the session, Mr. Nicholas Geoffrey Cook, the Vice Chairman of WFII and the President, the National Brokers Association Australia, a very respected leader, ladies and gentlemen, in the global insurance broking fraternity, extensive leadership experience in insurance intermediary sector. He's been a committed voice for strengthening professional standards, fostering international cooperation, and then promoting a resilient and a customer-centric insurance ecosystem, which we are aiming at. Our next eminent panelist, Mr. Nico Mariam de Massachalk, the Director of the World Federation of Insurance Intermediaries, and also the Director General of PIPAR, the European Federation of Insurance and Financial Intermediaries that represent 48 national associations across 32 European countries. He once again brings in decades of experience in representing the global insurance intermediary community. He's been a strong advocate for international cooperation, regulatory dialogue, and then strengthening the role of insurance brokers and agents worldwide. And our next eminent panelist, Shri K. Mahipal Reddy, Executive Director, IFSCA, GIFT City, the International Financial Services Centres Authority, headquartered at GIFT City, India's unified regulator for international financial services, fostering a world-class regulatory ecosystem, positioning GIFT IFSC as a global financial hub. Representing this vision, we have Shri K. Mahipal Reddy ji, the Executive Director, IFSCA, who oversees the insurance, pension, and ancillary services verticals. And I hand over to our able and dynamic moderator, the President IBAI, Mr. Narendra Bharat.
Thank you. Friends, this is a great opportunity for us. I would like to briefly mention about IBAI's association with WFII. So under the leadership of Sumit Bora, the immediate past president, and just in post-COVID, IBAI got an invite from COPIBA. COPIBA is the Confederation of Asia Pacific Insurance Broker Association. And with the chair of COPIBA is National Insurance Association of Australia. And after we joined that particular forum, we became a member of WFII through the COPIBA Federation. And we had 2 rounds of virtual engagement with COPIBA in the past. And then after COVID, it died down. But since 2021, we have been an invitee for every year at WFII conference. So we had the opportunity to participate in Singapore. Thereafter, Sumit went to Mexico, US. And just this last March, myself and Nirmal Bajaj, we had the opportunity to represent India at in Cape Town, South Africa. So very interesting discussions we've been having over there. I will request Nick Cook and later on to Nicole Murray also to briefly mention the structure and architecture of WFII for the benefit of all our broker members and what they do and how they represent us and how they engage with the IAIS, which is the International Association of Insurance Supervisors. Over to you, Nick. Yeah.
Thank you. Thank you, Narendra, and good morning, everyone, and congratulations on your 25-year silver anniversary. It's a wonderful achievement to see so many people in the room and also to hear the past presidents speak about the achievements that have been delivered over the course of the last 25 years. So thank you for the kind invitation. Thank you for your hospitality and best wishes for the next 25 years. It'd be fair to say that the world that we're in today is challenged, from geopolitical to climate to economic issues. We're in a world that is in a real crossroads around where it goes. But that's the role where we shine, because brokers, insurance brokers, help clients navigate what is an increasingly complex world. And when you look at the emerging technologies, the emerging ways distribution will be delivered, one fact doesn't change, and that is the advice that we and our colleagues around the world are providing our clients every moment of every day, helping them navigate an increasingly complex world. So our role has never been stronger. Our role has never been clearer. Artificial intelligence won't replace an insurance broker walking through a factory or a shop or talking about the things that are challenging them and the risks that they are perceiving in their business. So that's where the World Federation of Insurance Intermediaries, of which the IBAI is a wonderful member of. That's where we bring together the best of broking around the world, and we feed in to the IAIS, and Nick will talk in more detail around how that also channels into the OECD. But you are part of the peak body that is helping shape policy in, as I said, an increasingly complex world. It's wonderful to have the regulators here with us today, because it's never been more important that the regulators around the world hear our story and, importantly, understand the role the broker brings. We are not an insurer. We are an insurance broker. We provide advice to our clients, and as the previous speakers this morning have said, we represent them. So it's critical that we are at the right place to help shape policy, to input to regulation, and ensure that this profession, and we are, is allowed to thrive over the next 25 years and help clients when they need it most. Nick?
Yes, Nick, you can mention about WFI briefly and IAIS and how we are engaging with them.
Thanks, Narendra, and congratulations also from my side. It's interesting that, in fact, WFII also exists since 25, 27 years. And I give it a little bit of background. It's interesting because mid-90s were the years of globalization and liberalization. 1997, for the first time, WTO was established after the rounds of negotiations, Uruguay round of negotiations. And in fact, services became part of the liberalization discussion. GATS, General Agreement on Trade and Services. Now, if you want to have, let's say, an ordered kind of liberalization worldwide, you need rules where people can recognize. And that is, in fact, where IIS is coming from. So IMF, International Monetary Fund, and World Bank, they said we don't have enough specialized insight in the insurance sector. So therefore, we create the IIS, or we ask the supervisors from around the world to create the IIS. So in fact, it were the supervisory authorities like the IRDA, they came together 1997. They said we are going to set up an international organization of supervisors. Today, they group 200 supervisors. Supervisors from 200 countries, jurisdictions. What we saw at the time was that, if these are going to sit together and have discussions about us, then we better make sure that we have somebody or that we have a group that can represent the intermediaries with these authorities and with these regulators. And this is in fact what WFI is about. So WFII is in fact IBAI, your organization, but at international level. And what is very interesting is that in fact these people, they do have exactly the same things on their agenda as were discussed this morning. And I can assure you I travel quite a little bit on behalf of you, and I thank you for your confidence, all, and I mean this because I believe it's a privilege to have the possibility to represent you in these bodies, because I believe it is still a sector where you represent people's business, people who want to serve other people. And so in these organizations, what you see is that in fact, I just checked it because I was not so surprised, but I want to double check. So I went to the IIS website, and when you see the topics of this morning, they come back. Conduct and culture. Words that I heard this morning, perhaps another word, but okay, I mean, it's the same concept. Operational resilience. resilience, digital, but also operational, making sure that your company continues and is able to serve people, even, for example, in times of COVID. Digital innovation, AI was mentioned this morning. Financial inclusion, I heard it already very often this morning. And protection gaps or closing protection gaps. Now, very interesting, these are also the topics in Europe. And these are also the topics in Latin America countries. And these are also the topics in Australia. So, 25 years ago, when we had a WFIA meeting and we invited people from the IIS, the OECD, or the WTO, because Narendra, you know, and Sumit can also witness this, and you can witness that we always bring people from IIS and OECD in order to have this dialogue, the same dialogue as you have at national level. But when 25 years ago we brought these people in our meetings, they thought, or some of our participants thought, that we were coming from Mars or one or other planet, because there was an enormous gap between what the supervisory authority had in mind and the regulator had in mind and how we looked at our own sector. And in fact, over these 25 years, I also believe, thanks to all these organizations sitting together, that we learned to look at ourselves from outside, inside the box. And I believe also that that has enormously contributed to establishing a better relationship, a better dialogue, more respect of one another with regulators and supervisors, both at national and international level. So this is giving a little bit of the picture. If you want to know more, WFII is about 80 national associations from around the world. We work in 5 chapters because we are a very small secretariat. We are very efficient, money-wise, I must say. We work with, in terms of chapters, so you have the Asia-Pacific Indian chapter, if I may say so. You have the European chapter, Latin American chapter, North American chapter, and African chapter. And we group all the national associations of insurance intermediaries, not only brokers, also agents, but agents that are having, let's say, this independence also. So they are self-employed, yeah, not the integrated agents, if I may say so. So that is the picture. I invite you to go and have a look at the WFII website or talk with us over coffee if you want more. But I think that is a little bit the picture that I wanted to give.
Thank you. Thank you very much, Nick. Interestingly, India, over the few years, the Honorable Prime Minister has invested significant amount of time, energy of government in what is called as GIFT City, the Gujarat International Financial Tech City, where we have got an integrated regulator, and we have our colleague from there, IFSCAI. IFSCAI has recently opened up its doors, and in view of the reinsurance regulation changes that happened in India, we have had many of the cross-border reinsurers register over there. Mr. Reddy, I would request you to kindly brief about that and also the recent MGA regulation that you have bought. And probably then we can touch upon how WIFI or the World Intermediary Federation can engage in a dialogue with you and look at global opportunities coming at our doorstep over here.
So, good morning to all of you. At the outset, I would like to congratulate IBAI for celebrating this 25 years. And within that 25 years, my association with, of course, I have been interacting with you for the last 2 decades. And in many of the meetings which you have come up with all your issues, I think I could witness many of them. Maybe today when each president is telling you are mapping to some policy issues which are taken up by the IBA and could get it. I feel that still there are missing issues. Maybe may not be correct for me to correct it, but one of it in 2011, you have batted for claims consultancy. Though it is not in regulation, IRDA has brought it by way of circular. But you know, a circular cannot circumvent what is there in regulation, but still, the then chairman, went ahead by issuing the circular. And that is one of, I think, big issue that now it is being part of the regulation, and that has become one of the important functions of the insurance brokers. And in one of the meeting, I remember the delegation came and they have put forth one more issue. They said, "Sir, we want recognition for IBAI, maybe in the context of being an SRO." Then chairman just paused, just thought, complete silence. He said, "Recognition is not given, recognition is earned." So today, IBAI has earned the recognition, and it is not just given. So that is how I could see the journey. And recently you have opened chapter at GIFT IFSC also. And thereafter we could see a lot of traction gaining by way of awareness. And also some of the activities have picked up a lot. With the help of IBAI, we could spread the awareness about different frameworks. And today, because I have two caps like IRD and IFSC, I could take liberty to give some of the memories which you could cherish in your journey in the 25 years. So coming to the existing frameworks available at IFSA, you know that it is international jurisdiction within India. And the first objective is to onshore the offshore. And mostly it is India-centric business. But however, today, after 5 years of journey, now it is found it is no more just India-centric business, but it will emerge as a regional hub. And slowly it will scale up to a global hub. And today, so much so that we have 24 reinsurance companies already registered at IFSCA. Out of them, 23 are foreign reinsurers. And there are equal number of intermediaries present here. And around 30 composite brokers are already present in GIFT IFSC. And you know that the contribution from the reinsurance area is almost 95%. And slowly on the direct insurance front also it is increasing. In the last financial year, we could see good traction in the life insurance area. More NRIs started taking life insurance policies from GIFT IFSC. And therein the opportunity is there for direct brokers too. And we have seen some of the direct brokers started applying and taking registration. And that is one part. GIFT IFSC, it is not just a traditional way of doing insurance. It is much more than that. For example, we are moving away from the traditional type of reinsurance to something like alternative risk transfer, where we would like to enable a framework where insurance-linked securities, catastrophic bonds can also be issued from GIFT IFSC, which is a correct destination to cater to the needs of Indian economy as well as global. So in this context, we are just awaiting a notification from the government, and we are sure that soon it will come as a reality. And before that, post the Act amendment, the MGA has been recognized as a specialized intermediary. Even before that, you know, GIFT IFS has enabled MGA framework, but it is not in terms of intermediary, but it was a joint registration of one insurance company and MGA. Before we could authorize few of the applicants, the Act amendment became effective. So we asked the applicants to convert into the new framework. And now the new framework is notified, and within 3 months after the effective date of amendment, we could come out with the MGA framework. It is effective from 8th July. So in this framework, it is multiple insurers can come on the platform of MGA. But however, some inquiries have come whether reinsurance can also be taken up on this platform. We said right now the framework is open for foreign insurers on the direct side. Maybe reinsurance is maybe the next stage due to some reasons that was not immediately taken up. But however, now it is open for the direct insurers also to come on the MGA platform. And now it is multiple pen providers. Earlier it was one-to-one, but now it is multiple insurance companies they can authorize, have a binding agreement with MGA and provide services. This could be foreign to foreign business. When I say foreign to foreign business, when there is a global opportunity, maybe coming to the domestic side also, maybe one of the achievement, I do not say the achievement, but it may be still not very clear. 2010 onwards, we could find that some of the brokers are already doing foreign to foreign business. Maybe the currency also going foreign to foreign. So already you have established it from foreign jurisdiction here. So it was not clear in the regulations whether you can do it or not. But later on, though it is not explicitly provided in the regulations, IRDA said you provide the data. Maybe that is taken as some kind of consent. But if it is ambiguous, if it is not very clear, now it is open for them to come to IFSCA because there is no such restriction. Foreign to foreign business is very much allowed. Maybe the premium that you are doing here may not be getting accounted in the domestic premium. It may be out of the scope. So any such foreign to foreign business, if the composite brokers are doing, it is also an opportunity to come there, set up their branches without disturbing your domestic business, and foreign to foreign business can be placed from there, and you can have a tax concession. Unlike here, you may not be getting tax concession. There, the tax certainty is there. Now the government has announced 20-year tax holiday out of 25 years. Thereafter, again, the certainty is that only 15% tax will be levied on the profits earned by the entities here. So this is the broad framework, and maybe based on interactions with the Federation, we'll have, if some more clarity is required, we can happy to clarify.
Thank you, sir. Thank you very much for the insights and input. And I'm happy to say that last April, when we started our chapter in Gift City, we spoke with sir and with Chairman IFSCA. A lot of thoughts and ideas came out for direct insurance brokers to explore doing business over there. So probably if our broker members can seek time with Mr. Maipal Reddy, reach out to IFSCA, there's tremendous opportunity to address the Indian diaspora working overseas and do direct business from IFSCA itself. Thank you for the insight, sir. We'll just quickly move into, during the Cape Town summit of WFII, we had discussed about regulatory stability and the impact of AI. So I would request both the Nicks to briefly take us around this and how you see and what is it that we as intermediaries should be looking at and be prepared for. Thank you. Probably you can start first, Nick.
Yeah. Absolutely. No doubt AI plays a role and we're aware of that. Just this week in Australia, it was noticed that AI is now interrogating ghost broker license holders. So now artificial intelligence, within the sphere of it, ghost licensees have been set up of which AI is utilising to provide advice back to clients. They aren't real. They are set up by other purposes, but because, and this one in particular is ChatGPT, it's identifying literally thousands of responses to client or people requesting advice, and they've been accessing that through ghost license holders. And that's going to be the challenge for regulators, because as fast as they move, they won't be able to contain what is a lawless, unregulated AI landscape. So that's the challenge I think we both have. As brokers, as regulators, how do we keep in check an environment that effectively can be false? And I'm sure you're seeing it, but we are seeing now when you send your renewal terms or a new business submission to a client, they're running it through AI. And you know because of the response you receive back. At the time of a claim, also occurring that it's being put into AI, and now insurers and brokers are having to deal with this multitude of responses that AI produces. And a lot of that can be based on a falsehood. It's not real. So this is one of the great challenges we've got, is that this is moving way too fast. In Australia, just the last week, the Prime Minister has established an Office of Artificial Intelligence. Not a department, but within his own Prime Minister and Cabinet. Because this is an area that is moving, as I said, so fast, so unregulated. It's coming from outside Australia often, and we're trying to keep it in rein. So when you bring that back to insurance broking, that is our challenge. And when you look at the regulators, we can only work with the regulators to help both of us navigate what is a fast-moving, complex area.
You also talked about the regulatory stability. So I make here the link, because in the IIS, I talked about the topics that I have on the agenda, but that are, let's say, the side topics, if I may say so, that are the longer-term policy objectives. But the IIS is, of course, also, but it's not a regulator, but it's grouping regulators, and it is an international standard-setting body for supervisors. So they have what is called insurance core principles. They have 28 of them. Very interesting. Go and check on their website. And this sets, in fact, the world standard for supervisors how to deal with the sector. Now, of course, a lot of that is done with everything that is solvency and prudential, but ICP 18 and 19 is specifically dealing with us, and that is setting, in fact, the standard worldwide on how they should regulate and supervise insurance intermediaries and insurance distribution and the conduct of insurers. And Narendra was so kind to send me an English version of your national legislation here applicable to you, 286 pages. And I must say, when you look at it, all the boxes are ticked. And in fact, everywhere in the world, you will find regulation on intermediaries that is saying you need to be licensed. In order to be licensed, you need to prove training or experience. You need to have some financial security for the money of your client. You need to behave in a certain way, conduct rules, conflict of interest management, that kind of things. I must say that capping commissions is not in that list. Yeah, because it is worldwide recognized that it is not about commissions. If there is something that needs or could be or should be looked at in case there is kind of doubt, then it is to individual situations and overall costs compared to the value of the product. But that should be done individually, because that is why we have supervisors for. You have a set of rules, and it is up to the supervisor to look whether these rules are applied. Now, of course, that are the debates that are going on, and I can assure you that everywhere in the world, there is debate upon costs and commissions and everything that is related to insurance, because, of course, and in particular, in these areas where the private market takes over or could take over some of the role of the public market, and then I'm thinking about hospitalization, health, pensions, and that kind of risks. So we have to keep that in mind. There is this tension and this discussion, what is the social role of a private insurer? Yeah, and that is the phase worldwide that we are in. our governments are all bankrupt. So they try to get rid of the costs to look after their people. Sometimes. In some cases. Now, when I mix this with AI, then the framework, the regulatory framework, according to ICPs, is mostly activity-based. If you do something that looks as an activity of a broker, then you become a broker. So you are captured by the regulation and you have to comply. Now, this is more or less where they are starting with AI. The problem is who to capture. That's a little bit the problem. Now, if we are talking about AI, I always ask the room, whether it are supervisors, regulators, or industry people, to do a test. You take an LLM, whatever it is, ChatGPT or Copilot or whatever, but an LLM, not an agent, not a specified agent, an LLM. And you ask, voila, you take your own situation. I have an apartment in that city worth so much, more or less, or I have a car. Can you please advise me what insurance I have to take? And you start softly, but little by little you use regulated wording, advice, selection, or whatever is in your regulation. And you see how far it goes. In some jurisdictions, the AI is answering, I cannot answer you because I don't have an intermediary license. In other jurisdictions, it will go much further and it will even propose you a very specific policy of a very specific insurer. And if you then tell the AI that in fact they cannot do this because this is a regulated activity, then you will receive a very interesting answer on how they try to escape from this. But that is just the test, and we will have to go all together, as Nick says, I believe, all together to try and handle this. One thing we should not forget. It's not an insurance issue alone. The entire market, even our private clients, are now insecure about what AI will bring. So that is where we go together, I think, in a new phase of this world. Probably something that will be seen in a couple of years as being the new, not industrial revolution, but probably the digital revolution. I think it only starts. And I would like also to invite you to have a look at the MCP protocol. MCP protocol will bring within a couple of months a completely new set of things where all these agents will start to communicate with one another on the basis of the MCP protocol. So that will be a very interesting evolution also in our world that we have to watch. And we are calling upon the supervisors and regulators worldwide to start watching this now, because it's rolling out now over the world, but we better be there sooner than later.
There's a huge debate in Australia around data privacy. And when we talk about disruption, I don't see disruption coming from this room. Disruption's going to come from a Google or an Amazon who already track every data point we have. They know when we leave of a morning, they know when we turn on the car, when we fill it with petrol, where our office, where our home is, and then using third-party data, we'll know, to Nick's point, the value of that home. So I believe if we play this data more that's getting shared forward a few years, the threat's not going to come from an insurer necessarily or a broker. It's going to come from Amazon or Google, who will provide a hyper-personalised product just for you. Not a generic policy wording that covers motor or home or whatever it might be, but a product just for you that knows that you will go away 4 weeks a year, so you won't need, accident damage on your vehicle, but you'll need some enhanced cover on your home because it's unoccupied. All of that will come because as we get into a more technology and AI fluid world, When all that information is out there, someone, and I suspect it will be them, the tech giants, will pull that together. That's where I see disruption over this next period.
Thanks for the interesting inputs. Recently, our regulator also came out with a circular on dark patterns and asking all the entities to comply with it and submit the report. So we are also doing that. Plus, Government of India has notified the Digital Personal Data Protection Act, which is going to come into effect, I think, November of this year. So we are also gearing up to complied with it and so on and so forth.
Very briefly in this, if I may, there are international standards now also developed by the IIS, 10 principles, let's say, where, you know, and I think they are exactly the same in India, they are the same in Europe. We just try to follow it, transparency, human oversight, that kind of...
True. Yeah. So the interesting session, time is always a challenge for us. Good that we started this conversation and dialogue, and Nick, both the Nicks and Mr. Mahipal Reddy are around today and tomorrow. If anybody wants to reach out to them and have a conversation, they're welcome. And it's very difficult to cover such a deep subject like AI, regulatory stability, and understand the entire functioning of IFSCA and the opportunity it presents to all of us in 30 or 40 minutes time. I thank all my panelists for joining today for this panel and sharing your insights with us. Is anything that we have to do now? Okay, so we close this panel and I'll request our anchor to take over from here now. And thank you very much for the opportunity.
Thank you so much, everyone. Thank you.
Thank you very much to our panelists. And ladies and gentlemen, we spoke about customized products for our insurance sector. And herein, we would like to extend very customized and personalized mementos to our speakers. I would like to request our president to kindly present these special photo frames of our panelists. And if you also intend to have one, there is a photo booth outside, and you can get your photo framed and have it for yourself. Also from the next sessions, if there are any questions from the audience, once again reiterating, you have it on your tables. You have this card, there's a QR code. You requested to kindly scan the QR code. And any questions you have to the panelists, you requested to extend through the app. Also, we have our sponsor stalls outside. During the break times, please pay a visit to the sponsors' kiosks. The tea outside is a running tea. In case we directly move to the next session and we don't have the break, you can, any time of the day, you can move out, get your teacups and be back with us for the sessions. For we are running slightly late, we are just wanting to catch on time towards that. Yeah. So the next session, that's towards managing new age risk and emerging risk. We have been speaking about, with changing times, that risk continues to change. The risk of today are no more the same as that of yesterday, and the same goes for tomorrow. We need to continuously evolve, come up with the new products, address these new age risk of emerging technologies, and then the geopolitical risk, the supply chain disruptions, the new financial risk. We understand them from the experts and then collectively look into finding solutions, exploring these new emerging risk solutions, which can create new markets, strengthen resilience, and drive sustainable growth. The moderator for the session, Shri Pavanjit Singh Dhingra, may I request him to kindly take center stage, Director IBAI. The panelist, Shri Rajiv Dogra, the Managing Director and CEO of Raheja QBE General Insurance, extensive experience spanning public as well as private sector general insurance. He has led. Can I request the hotel staff? So Shri Dogra has led various transformative initiatives across underwriting, claims, underwriting, claims distribution, and then business strategy. He's been the managing director and CEO of Raheja QBE General Insurance, and he's steering the company with a very strong focus on innovation, customer centricity, and sustainable growth. I invite as a next panelist Ms. Geisha George. Ms. Geisha George, the President, Product and Underwriting, Commercial Lines and Reinsurance, Liberty General Insurance. A seasoned insurance professional with nearly 2 decades of experience, she has deep expertise across liability, cyber, marine, property, and health insurance, and she currently leads the commercial lines and reinsurance at Liberty General Insurance. Shri Imran Khan, the country head of Alliance Trade India. Expertise in trade credit, insurance and risk management. He has been instrumental in helping Indian businesses navigate commercial risks, strengthen trade confidence, and expand in an increasingly interconnected global marketplace. And our next panelist, Shri Nazm Bilgrami, the head casualty and financial lines, Tata AIG General Insurance. Accomplished leader in specialty insurance, he heads the casualty and the financial lines business at Tata AIG. Deep expertise in liability and financial risk solutions, he has played a pivotal role in developing innovative insurance products that address the evolving needs of businesses and institutions. So keeping the policyholder at the core of all our decisions, our products, our services, our approach, we take this session on managing new age risk and emerging risk. And I hand over to our moderator, Shri Pavanjeet Singh Dhingra ji.
Okay, I hope everyone's managed to get a cup of tea or coffee, and we can now settle down. Look forward to a very interesting session with a delightful group here. So first of all, ladies and gentlemen, good morning, and it's a privilege to moderate this discussion as IBAI marks its 25th anniversary. For us, this is not just a milestone, it's also an opportunity to reflect upon how profoundly the nature of risk has changed. When I joined this industry in November 2004, GI was an 18,000 crore market. Today, we are 20 times that. And there's a complete change in the product mix that we have seen in the last 20 years. A generation ago, the primary concerns of businesses were tangible: fire, machinery breakdown, cargo losses, motor. Today, the largest LOB is health, which has been the growth driver of the industry for the last decade. However, some of the most significant threats today are often intangible, interconnected, systemic. A cyber breach can destroy trust in hours. A geopolitical event thousands of kilometers away can halt production lines in India. Climate events, supply chain disruptions, AI-driven risks, regulatory shifts, and financial contagion have been fundamentally altering the operating environment. Against this backdrop, insurance is not simply a mechanism for transferring risk, it becomes an instrument of economic resilience. For us as brokers, this is a profound opportunity, and I really wanted to make this interesting for all of you. And I think the purpose of one of the key purposes of this panel is how do we, all of us, participate in the doubling of the insurance industry from 3.5 lakh crores to 7 lakh crores in the next 10, 15, 20 years, however long it takes. And this is business. We are all here for business. So I think the panelists here, I think will really throw some light upon how we can grow our businesses, what are the new areas of risk, and how can we advise our clients accordingly. I've got a really good panel. I think they've been all been introduced, so let's get to it. The World Economic Forum's Global Risk Report consistently highlights cyber risk, geopolitical instability, climate change, and technology disruption as dominant risks. And yet, all of us who meet clients see that businesses continue to manage risk through actually a very traditional lens. Do you see corporate risk management practices evolving quickly enough? And also, is the insurance industry keeping pace with the changing nature of risk. So over to you first, sir.
No, thank you so much, Pawan. And it's a pleasure to be here. Congratulations, in fact, to IBAI and all the partners. Very interesting times, in fact. We were talking about the risks which kind of are emerging. I will be much more concerned about the risks which we think we know about, in the emerging risk category. And the risk which we are not aware about. I think that is something which can be of very profound intensity and implications for the clients, the brokers, the industry overall, let me quote OpenAI. Something happened 2 days back. Let me quote this. OpenAI said that its AI models were behind an unprecedented cyber incident that impacted a company called Hugging Face. The models escaped a sandbox testing environment, accessed the internet, and exploited a vulnerability to gain access to Hugging Face's systems. OpenAI said, now this incident is unique because it was driven end-to-end by an autonomous AI agent system. Now this is something that I think as practitioners of insurance, we have cyber insurance policies, but have the insurance companies factored these kind of risks into the pricing that they have given? So this is something that the clients, I think, are always really, really concerned about, the risks that they understand are good. I'll give you one example, which not from emerging risk point of view, but I was at Jaipur a couple of years back, heading another company's regional office there. And one of the SME customers who thought that he had all kind of covers, everything sorted, it was an engineering risk kind of occupancy, which, everyone wanted. And he had all the fire sprinkler systems and everything in place. He thought that everything is sorted. And then all of a sudden, 1.5 kilometers away, there were 6 Indian oil storage tanks. They blew up. And everything within the 3-kilometer radius just flattened, So there were a couple of casualties quite close to that place, where that incident happened. So these are the things which are unanticipated. COVID was something which no one possibly could have, thought about. So that happened. So these unknowns are something I think which really concern most of the clients, as well as the brokers and the insurance companies,
Great point, sir.
Yeah.
Jisha, what about your thoughts on this matter?
So absolutely, Pavanji and Rajivji, the exposures that we are seeing today are way more unprecedented. And of course, when it comes to clients, I think it's a collective role that all of us have in terms of helping clients understand these exposures better, and then of course back it up with the right products and the right solutions for it. At this point, just leaving it that.
Awesome. Najam, you've been seeing a lot of action. So what do you think of what's going on, and are clients and the industry able to evolve quickly enough with the changing risks?
See, when you look at the space right now, we are definitely dealing with the traditional exposures, but there are few very new exposures which I think practically we should start talking about, and exposures like social media addiction, bringing claims on professional indemnity policies, bringing claims on directors and officers liability policies, and very uniquely, we have seen some claims coming on the casualty front. And now practically, if I ask question that how you can expect a social media addiction can bring casualty related exposures, I'm not sure whether we will be able to even foresee those kind of exposures, but that's happening. Similarly, failure to warn. Now, I don't think so. We are talking about it that exposure like failure to warn can bring large multi-million-dollar security claims on companies, and that to Indian companies. So these are very unique exposures, need a lot of attention from our side, because we are moving from those traditional exposures. We do have modeling for those traditional exposures. We do have those funds created wherein the insurers, reinsurers are addressing those exposure. But when it comes to these kind of exposures and interconnectivity, cyber accumulation, we are not even thinking about these exposures. So there are a lot of needs to address these kind of exposures. So that's my take, sir, on this.
Imran, you're a very traditional money man. So do you see anything outside of the ordinary that you're having to deal with, the clients having to deal with, and your industry is having to take forward?
First of all, thanks IBAI for inviting me in this panel, and it's good to be here. So I specialize in trade credit insurance, which is a niche line of business. So if we see 4 or 5 years before, where we are right now, geopolitical tensions were not so often, and they were kind of unheard of, or they used to take place in some part of the world which was not affecting the global economy, as such. Now, if you see the situation of Russia, Ukraine, or the Middle East, where we are right now, and then the tariff situation from Trump, which keeps changing. As of now, it is stabilized because his concentration is on the Iran war, not on the tariffs. So, and as Pawan, you mentioned initially, the interconnectedness of risk. I keep telling the clients, it is not your own prudent practices which helps you secure your business and secure your receivables. A cyber threat to a company, their manufacturing plants can stop, or a geopolitical situation where you're not able to import raw materials, which can affect your receivables. So I think geopolitical situation is something, which is here to stay for long, and that is affecting, trade credit insurance in a big way.
Thank you. Rajiv ji, from your vantage point, what concerns keep Indian CEOs awake at night that perhaps weren't even on the agenda 5 years ago? And how do you see the insurance industry being a part of their thinking?
I think part of it, again, I would reiterate that risks which are kind of unknown, emerging and unknown, that's the most difficult category for us. And I think that's where the responsibility of the risk managers and the brokers and the insurance companies, comes in. In fact, brokers and insurance companies have to come together to figure out what could these risks be, which are kind of unknown. Beneath the surface could come up anytime. I'm sure despite all the efforts, we still cannot, predict everything. But then some level of consistency in our interpretation of what could go wrong, that has to be there. So once that is there, then obviously we have the emerging risks we are kind of, aware of. So cyber, I'm sure my panelists will talk about. AI, we discuss, the risk of bias, the risk of privacy, stuff like that. I think once, Imran, you talk about ultimately the credit risks, So something going wrong in supply chain doesn't impact me. My production is fine in India, but impacts my buyer in Australia. And that's how the credit risk kind of comes into the being, So these are the things. I'm concerned about my employees. I see employees burn out. Is there something which I can do to take care of that as well? I take care of their EB policy, it's taken care of in terms of their health insurance and stuff like that. But do I take care of their mental health? If something goes wrong, burnouts are very common nowadays. These are a couple of things I really feel concerned about. And expectations, obviously, from my insurance companies is that they should be able to give me tailor-made solutions now. These risks are getting extremely complex. We need tailor-made solutions for all these risks. That's one. Number two, I want my insurers to be able to bring in capital into the country. Now, with the new regulation coming in, I as QB can say that, QB has obviously become 100% here. And we have other companies also which are doing the same, multinationals. So capital has to come in, capacities have to come in. And then capacities come in, then that traditional approach towards the risk, you have to have very good people, you have to have a real good collaboration with the brokers, So all these things will kind of come together and kind of my concerns will be taken care of when I can figure out that, yes, these are the guys who are ultimately going to guide me in the correct way.
It's very interesting, Rajiv ji. I have a client, he pays about 100 crores of premium and he had about 250 crores of claims last year on the asset side. And I thought, wow, he should be very happy. And he was actually saying, I've got about 250 crores of deductions that otherwise sit on my balance sheet. How can you help me recover that, from insurance? So I'm just saying, I think it's the customer and the changing nature of risk that really keeps you scratching and finding new solutions every day. Najim, a question for you. Cyber risk, we all agree, is ubiquitous. It's everywhere. So why doesn't every company and every individual already have cyber insurance? I mean, that's something we may not have to sell anymore. And how much coverage is really enough? And how are you looking to the broking industry to make cyber insurance for all a reality?
So when I look at cyber as a risk, there are three main areas which I personally feel like these are the reasons why we are not growing the way we should grow on the cyberspace. One, definitely the perception of the risk. When you look at, and when I speak to the clients, very frequently I understand that they feel that cyber is an exposure for a very large company, multinational companies, companies who are having large amount of data, financial institution. Whereas what I practically see is when you look at these threat actors, hackers, they actually look at targeting those mid and small companies because they very clearly understand, see, large companies, listed companies do have deep pocket to invest on cybersecurity. Whereas when you look at these small organizations, they are managing their business with the fund they have, and they're very selective in terms of their investment on the security fronts. So they become easy target, which, as I said, when you look at and speak to them, their understanding is very different, that no, I am not the target. So that's one, I think, perception which we as an industry has to change, and we have so many examples to substantiate that how this risk is. The other thing which I practically see is we are not speaking about it more. I think we are still focusing on those traditional exposures as an industry. We should be having a lot of events, seminars, presentations wherein we'll be highlighting the clients, these exposures. There are like case studies. See, with liability, one basic problem, what happens, because we are dealing with liability product and cyber is one of that, we don't talk about all these exposure. When you look at marine exposure or a marine claim or a property claim, it gets spoken about within the industry so much. But I'm not sure how many of you know that there is a 750 crore claim, $80 million claim having like the insurers, currently we are handling that on the cyberspace. I'm not sure how many of you are aware, but these kind of liabilities are still exist. So I think that's the another reason why, like, because of the confidentiality and all, we don't speak about all these claims. So that should be spoken about in some way or the other, keeping the confidentiality in mind. And the other thing is, it's a very dynamic exposure. And what companies think that it is very costly and very complicated. Even on the insurer side and the broking side, like, people don't speak about it because they feel that it's very complicated. But all said and done, it is the biggest exposure. When you look at various reports, whether it is Allianz Barometer report, own Tata AG survey last year with DNB, or PricewaterhouseCoopers report, all of that is very clearly highlighting cyber has become the biggest exposure for any organization. So this has to be highlighted by us. And then subsequently, because when you look at cyber, the offering, even in India, has become like a solution. It's just not remain as indemnity, wherein we are providing a complete ecosystem to improve the risk, identify the risk for the organization. And when there is an incident, there is a whole lot of incident response which has been provided by the insurer. So I think that is something which needs to be highlighted as an industry.
So Najam, you actually anticipated my follow-up question, which is, how do you foresee cyber insurance evolving from a reimbursement into a proactive? Now, coming back to that point, that may be even more relevant for an individual. You know, a company still has resources, even if it's a small company. Why do you not, and I think this will be very interesting for my broker members, how do we, because that's a risk that exists for the individual as well. But we are not seeing much uptake in individual cyber insurance. It took a while for individual health to pick up, and now it's an avalanche. And you can see the success of the Sahis. But what do you see happening on the individual side? Do you see a situation where a decade from now, every individual will also be buying a cyber insurance?
I am. So the way just not because I am a cyber underwriter, so I want the market to grow. I practically see the way we keep health insurance, like health insurance is mandatory for everyone. I believe like cyber also, individual cyber policy also will become mandatory for everybody, because the way, look at data. So there's a IIM Ahmedabad report which suggests that on an average, every Indian is spending 194 minutes every day on social media. Now, when you're on social, and when it comes to teenagers, they're spending 3 to 6 hours per day. Now, when you look at, when you're spending time on that, you're sharing so many personal details, and you're exposed for so many crimes like digital arrest, so many frauds, all of that. this is a very good solutions, not only paying for your what you call fund transfer fraud or a digital fraud which is happening through credit card, online banking or payment wallets, but even things like extortion, personal pictures or personal notes getting shared on the public domain or a social media, all of that, the policy do address those exposures. So I think it has to be spoken about.
I always tell clients, have you ever picked up 1 crore of rupees and tried to walk away with it? It's very heavy. But stealing 1 crore of rupees electronically may be a lot easier. So Jisha, any thoughts on this? I'd love to hear your view.
Just to add to that, recently we introduced a cover within our corporate cyber coverage where we built a cover for the C-suite and the top officers of the company, because we do see that when a corporate is hacked, sometimes that also extends to personal damage or loss to the C-suite. And we built this cover and we've got very good reception of this particular coverage. So I think some innovation on part of the insurers could also help, like putting the product where it could be consumed faster. So maybe making it part of the corporate cyber proposition could have a better reach, better better access, I would say, at least to certain segment of the population. And then ultimately the retail eventually will pick up as the awareness improves. Because I think with the retail product also, we've tried time and again with various offerings at very, very minimal price points. But we feel that the awareness at the other end, in terms of how the insurance will pay when there is a loss, I think that's the area which we need to solve together.
I think maybe we have to sell also the whole ecosystem that comes along with the policy, because I think, as an advisor, I see that as the biggest value. So great. So Jisha, a follow-up question for you. Historically, underwriting has been, rewarding stability and predictability. It's all about numbers. But today we are underwriting businesses using algorithms, platforms, and digital ecosystems. Has underwriting changed to being more analytical, or is it still very judgment-based? How do you see that playing out?
If I look at the current underwriting trend in our country, I don't know. It is neither, I would say. The way we, I feel as a market, we have to evolve way, way more in terms of how we underwrite, how we look at the products. On the property side, etc., we've always been in regime, more or less been in regimes where rates have been dictated or shared by somebody. So at the moment it is open now, people are like trying to figure out what to quote, how to go about it. I think those are basic level challenges which we need to address, and that's part one, which is the area where we have the data, where there is enough predictability. Even in those segments, how do we consume that data for good actuarial analysis for commercial pricing? Is price adequacy a part of your underwriting strategy or not? I still have my doubts. Because if that's there, then we don't see these kind of trends in the market that we're seeing right now. So I think that's one. Second, when it comes to emerging risks, when we're talking about tech-driven exposures, when we're talking about cyber, of course, you don't have past history. And that's when we work on frameworks which help us predict. So we work on models, we work on certain assumptions as well. We try and seek data that is available in the market. These would be secondary data points, etc. And we create models which help us kind of predict the kind of loss, the exposure, and then build that into your pricing models, etc. Another aspect to that is, I would say, risk engineering. So I'm seeing that evolving big time, not just in property, but in all these exposures which we don't understand well. So like, when the industry came up with cyber, it accompanied that with risk engineering. So you understand the risk better, and then ultimately that adds to your overall underwriting process. So I think it's an evolution. It's not like this or that. Even the existing ones, we need to keep on refining and keep building on it, particularly from an Indian context. And the emerging risks, I think there's lots to learn from the global markets. They tend to at least keep few steps ahead of us. So I have seen better models. At least what we do at Liberty, we have created, particularly for tech and cyber, we have got models which not only rely on the data that the client submits, but we pick up data which is available in the market. We integrate AI within our pricing models and underwriting models, etc. So there's a lot of sophistication available for underwriting. So I think that's the ultimate shift that we will see.
Ultimately, does the bottom of your stomach come into play and you say, I really want this risk?
Yes, of course. So I think you can't take that away from an underwriter, because when you're close to the risk, when you know the clients, when you know the market, at some point it's your gut which also comes into picture. But I very firmly believe that decision making should be more backed in data and sanity than just gut.
No, we feel the pain for the soft market. I think we are all experiencing the softest market we have seen in a long time. And yeah, Najm, I think you want to add
I
something.
just want to add, because I have a very strong view on that. So you were very polite in asking this question. In fact, we get the direct question saying that underwriting will be replaced by AI models. I am completely against the view, because when we look at and when we talk about underwriting, see, I always say that these modelings, these data, these AI models will help underwriters to take better decisions. But something like a behavior of a board or the practice followed by an organization, this is not something will be predicted by a AI model. It is the underwriter who will look the trend of that country, various other like human factors, and basis which the underwriters will decide the pricing, the exposures, the terms and conditions. So that's my view when it comes to.
So as a broker, my perspective will be, I joke with my underwriting friends. I said, when a risk is worth writing, then the price doesn't matter. And when the risk is not worth writing, then the price doesn't matter. Yeah. So anyway, Imran, I think in mature economies, trade credit is very often viewed as an economic enabler rather than simply an insurance product. Right? People use it to grow their business. Of course, we've had some disruption in the market. There were regulatory challenges. But why do you feel the penetration of trade credit in India is so low? And how can we work together for the benefit of the whole industry to double this in the next couple of years?
So Pawan, before I answer this question, maybe I just wanted to add to what Najma and Jisha mentioned, because judgment and technology for an underwriter plays a very vital role, and it's a day-to-day decision which we end up making. So the kind of information which is available and readily available right now, I think it is much more important the intervention of human judgment to be able to underwrite a risk. So I don't think that AI is going to remove the underwriters. Maybe an underwriter well equipped with AI knowledge may remove an underwriter who does not have a AI knowledge. So I think judgment will continue to play a role. And secondly, since our intermediaries are present here, their influence also plays a lot of part in taking that decision, and they are the one who are connected to the policyholder. So their view of the risk and how they present the risk, helps us, make that decision. On the trade credit part, yes, it's a product which is well developed in Europe, and it's being extensively used. In India, the penetration level continues to remain low for variety of reasons. First is, I think, the knowledge which is limited to very few segment. I think the SMEs and the emerging corporates are yet not educated enough on the benefits of trade credit insurance. It is just not a risk mitigant that in case there's a receivable, the buyer is not paying, it helps you pay the claim. Definitely it does. But more than that, trade credit is a growth enabler. Once it is understood that I can really grow my business, sell with confidence, enter into new territories, that is where the product will pick up. Secondly, I think in Europe, the product is much more linked with the banking system, where the banks are able to offer much more liquidity off balance sheet transactions, which is still missing in India. Although there have been few regulation changes where banks, factoring companies can be policyholder or a loss pay for their receivable book. But still, in the developed countries, trade credit, the banks get a capital relief in case their receivables are secured through a rated insurer. That is still missing in India. The RBI has not allowed capital relief to be given to banks, even if their receivables are secured by a rated insurer. I think IBAI has presented to the RBI, and we hope that regulation comes through. That will be a big enabler for trade credit in India. Secondly, as Mr. Mahipal Reddy sir was here, GIFT City brings another area of growth for trade credit insurance. And yesterday there was a regulation by GIFT City regulator IFSCA that the factoring companies and banks present in GIFT City, probably the foreign banks present in GIFT City, they can get a capital relief treatment if their receivables are secured by a rated insurer.
So we are also looking to establish ourselves in GIFT City, and that would be a big enabler for trade credit, going forward.
Fantastic. I think, I would encourage all our broker friends to please, these are areas, whether it's cyber, whether it is trade credit, these are areas that can really help growing the market and having a different level of conversation with your customers. So, let's work together to grow the market together. So, I think coming back to Rajiv ji, the same question that they had, when you're looking at commercial risk, because we are talking largely commercial risk now, there is an evaluation of the quality of risk, but there's also an evaluation of the management quality. How would you place that evaluation of management quality? Because that judgment and the human judgment, and I'm fully in agreement with all of you, it's like email. It's people who, can you work today without knowing email? No, you can't. But the same way you will not be able to do it without AI. But will that replace the human? No, I'd absolutely doubt it. How important and how do you train people, the next generation of underwriters, the next generation of business leaders, really to assess management quality as a key component of understanding risk?
I think with 3 underwriters on the panel, I better be careful in what I say. AI will obviously never be able to replace the human element that comes into underwriting. But I think going forward, you'll find a lot of super specialty requirements, amongst underwriters. That would be a requirement not only from the insurance company's perspective, but also for the brokers. It's not only about specialization, it's going to be about super specialization, So, and of course, you see risk management, I think it's a culture. If a company has a culture, and culture, I think, is generally defined from upstairs. And then it comes down and then it pervades all the aspects of, that organization. So in that sense, I think it's very, very crucial to figure out as to what the management quality is. That I think, I'm sure my parents will agree that is one of the major, aspects that insurance companies and underwriters would like to look at. Yeah. So that's a brief answer to your question.
If anyone wants a follow-up comment on that, or we can, move ahead.
So
yeah.
I feel, in fact, I would put that right at the top, because when we look at a partnership, a proposal, we rarely look at it just as a transaction. It's a long-term engagement and partnership with the client. And for that, being with the right management, with the right mindset is extremely important. So very, right up there. If you ask me,
how
can
do you train
score
the next generation to look for that? That's because that's not easy.
Yeah.
It's artisanal.
Yeah. So it's difficult to score it. But yeah, maybe certain pseudo parameters vis-a-vis the company, in terms of what kind of, I would say commentaries you see on their balance sheet, the kind of statements they make in public, the kind of investments that they make, what are their future goals? Are they aligned to larger, I would say good for the sector, for the industry, for the company? Then yes, I think those pseudo parameters do add up to the score of the organization, which talks about the element of the management as well.
Imran, I think another area where financial relief has helped is been surety bonds. I think that really opened up the market, and I think all of us believe that surety bonds could be the next big thing. I personally see it could become larger than all liability lines of business put together. How do you see the market playing out, and how do you think that the broking community can actively participate in this growth and help build and grow the market?
So personally, I have a love and hate relationship with surety bonds, because since the launch of the product, the focus of a lot of brokers has shifted from trade credit to surety. So I think the focus needs to bring back, on trade credit, and definitely, I absolutely agree that, surety is growing in a big way, and it's an enabler for the development of the country as well. I believe, going in the next 4 or 5 years, surety has already taken over trade credit, which is running more than 25 years in India. Given the kind of impetus by the government on infrastructure and the complex infrastructure which is coming up in India, and surety has definitely helped, support the contractors, because with respect to BGs, you need to have, adequate, maybe collateral, or, you need to have a sufficient banking lines. Surety has definitely given that liquidity to those, contractors that, they can continue to win more projects. And it's not just the bid bonds or the performance. It is more, evolving day by day to, rather than just the performance, to advance payment bond, retention bond, and going forward to custom bonds. I think still, there is a lot of scope in terms of surety. For brokers, I would say it is not merely placing the bond, which is of importance. It is about, educating the clients, the value the, surety bonds bring in giving them liquidity. And also they need to learn more in terms of the contractual obligations, the indemnity bond wording, that is going to help them in long way. So for sure, I think broker plays, a decent role in terms of growing the surety product. And this is continuing to, going to grow very fast.
Sure. Okay, so let's have a little bit of a fun round. I'm going to ask you, each of you, to challenge any long-held assumption within our industry. So which one belief about insurance that you believe will no longer be true by 2035?
I think sector will continue to grow, 3 lakh crores to 7 lakh crores like you projected. People feel that the companies who are big will continue to grow big. I think that assumption needs to be challenged and will be challenged. You will have specialized companies, and many of them. So India has place for 100, 150, 200 odd companies. And the need of the hour would be super specialization, like I mentioned. I keep on repeating this. But then you will have super specialized small companies, and they will cater to the needs of the emerging risks that are coming into the market.
Fantastic.
Yeah, I would second that. So definitely like specialized insurers, MGAs, a lot of specialized, not just products, but also segments. We can definitely see that there will be a shift from considering a good insurer benchmark today is like the scale. How much premium does the insurer does? But I think that will change. It will be towards what does the insurance bring to the table in terms of value, in terms of the product, in terms of how they understand the product, etc. So specialized insurers, NGAs will pick up. Second aspect that I feel will change is underwriting, because today we rely a lot on reinsurers to underwrite on our behalf, either through capacity or through rating support, etc. I think the retentions for insurers will go up significantly in times to come, and that will bring in far more disciplined and I would say more integrated kind of I would say the right kind of underwriting behavior from insurers.
Thank you. Majum.
I think the perception we have that the policy will be due for renewal only once in a year. I think that that's going to get changed by next 7 to 10 years, because the way risk, and especially the new age risks, is evolving, whether it is regulatory exposure, whether it is all these AI related exposures, I named failure to warn and such type of exposures, it will evolve so fast that insurers, brokers will have to sit with their clients practically on a monthly basis to improve the current policy. So that's my assumption about it.
All right.
I think for me, most importantly, what is going to change is not just paying the claims and how fast you are paying the claims. The ability to avoid getting into claims is what is going to change in next 10 years.
Awesome. I think all of you are pointing towards a more important role for brokers going forward. Thank you. And quick lightning round with the last 1 minute. Insurance industry will be fundamentally different in 10 years because one area where brokers should invest in the next 3 years, and one risk that Indian businesses are consistently underestimating.
Brokers should invest a lot of time in sitting down with the insurance companies, trying to find solutions to the problems that can come up in future for your customers. So that is very, very crucial. And you'll have to repeat that.
And the one risk that Indian businesses are consistently underestimating today.
I think they're underestimating the risk of climate and governance. This can erode their net worths very fast. So they have to be very, very cautious about this.
Disha?
So I think brokers should partner on products. I think MGA opens doors for lot of that kind of work. If with good propositions, good gap areas that we observe within client requirements, brokers should look at MGAs model of operation within India, and that will bring solutions.
And one risk that Indian businesses are consistently underestimating?
Two, I would say. One is geopolitical risks. The impact is far-fetched. It's not just the war and PV policies that they buy, that clients buy. And second is the tech-driven property damage and business interruption losses. Only a part is covered under cyber, but the rest, everything is still left for coverage.
Awesome. Najim, one area where brokers should invest their time in 3 years, and one risk that Indian businesses are consistently underestimating.
I think the brokers should look at, like, instead of how many policies which you have placed, start looking at like how many risk advisory which you're providing to your clients. I think that will be the future for the broking industry. That's my opinion.
One risk that the Indian businesses are consistently underestimating.
I think interconnectivity is the biggest exposure, which I feel, because an interconnectivity exposure will just not bring an organization down, not on the financial front, but also on the reputational front. And it will just not impact one organization. It will impact probably an industry. So,
thanks. Imran, where should brokers invest their time in the next 3 years, and one risk that Indian businesses are consistently underestimating?
I think with the evolving of AI and technology, brokers should be more data driven. Data analytics and use of AI is what is going to help them. And one risk which is evolving, as I think Najm mentioned, interconnectedness of risk. Geopolitical to supply chain disruption to cyber could lead to altogether different risk. So this is one thing which I think is an evolving risk.
Okay, so I think first of all, ladies and gentlemen, can you please put your hands together for this amazing panel? I think they've been really engaging, and and I think what's clear is that the role for brokers is far more robust, and if we keep up and we are close to our clients, we need not fear AI. Thank you very much.
Thank you.
Will from the council, are there any questions for the from the audience side? If there are, we'll just flash them on the. Okay, there is. If we can, you can take this question. Any of you? Is it the claiming process is smoother in cyber policies? If any of the transactions done on our behalf by any anti-social elements, what would be the consequences? May I request any of you if you can answer?
So I didn't get the question, the second part of the question, right? So if any of the transactions done on our behalf by any anti-social elements, what would be the... So I didn't get that part. What would be trying to say?
So how smooth is the claiming process?
So... yeah, so I feel the claim process on cyber is the smoothest if I compare it with any other insurance product today. Because what you need to do is just intimate, and immediately, because as part of the cyber product, you have something called cyber response. There's a team, there's a panel which normally the insurers have partnered with. If you don't know any, the insurer will put up the response council up to work. So starting from helping the systems to be decrypted to putting up the right kind of forensics, etc., is part of the program. So the claim process as well as the elements around it, like how to go about it, whether to reach out to a lawyer, whether to reach out to a forensic expert, whatever it is all supported by the insurance companies. So it's an extremely smooth process, I would say, in my opinion.
I just want to add, in fact, I want to share a practical case which I spoke about, that 700 crore plus cyber claim. I practically saw that every section of the policy in that particular claim got triggered. And that's the testimony of the policy which we have in the Indian market. As I said, starting from regulatory investigation to a lawyer's fee to a forensics consultant to class action under the policy, third party bringing claim for their own business interruption, insured's business interruption, all of that. Only one section was, as exclusion was multimedia, liability of the policy was not triggered. Otherwise, all, including monitoring, all of that got triggered in this particular claim. So that's the testimony of the policy, and we are paying. When I'm saying 700 crore, it's not that they have reported a claim. I'm saying this is the payable liability which we are in process of paying them. So I think that's the testimony of the policy.
I think that passion from Najm just flows out, he being the cyber end, right?
Yeah, thank you. May I request Sameer Samdhani, the Director IBAI, to please join us in presenting the mementos, expressing our gratitude, appreciation to our moderator and the panelists. Thanking with us these emerging risk and solutions, innovative solutions towards combating them. And we once again urge the panelists to kindly scan the QR code. The card is there on your tables, and any questions you wishing to address to our panelists, kindly use the app. Also outside, if any of you have still not registered yourself, you're requested to kindly register yourself outside. The personalized photograph, you can also have the audience and the participants here. There's a photograph booth outside. As we close this session with a group photograph, maybe request another round of applause thanking our speakers. Thank you very much. Ladies and gentlemen, in the interest of time, we are not going to be taking a break, but then running tea outside. Any time of this session, you can, in the course of the session, pick up your teacups and be back with us. Moving to the next session, that's the agricultural and rural insurance, a strategic resilience for Bharat, and especially as we're talking about realizing the vision and the target which Honorable Prime Minister Modi has given to us, insurance for all by 2047. We need to tap on this still much untapped segment of rural insurance. So moving from urban to rural for a secure and Viksit India, tapping on this untapped segment, a segment which probably needs the insurance the most, the farmers and rural India. The risk we have been talking about, especially for the farmers, we know the climate change, nature's fury, also the trade regulations, again, it goes for the geopolitical, supply chain disruptions, all impacting our farmers and rural India. We are going to be discussing some of these innovative, customer-centric and more affordable products for rural India, especially for our farmers. I invite our moderator, Shri Koli Rao, to please take center stage. The panelist, Shri Sudapta Mohanty, the General Manager and Chief Marketing Officer, Agriculture, Insurance Company of India Limited, playing a pivotal role in advancing India's agricultural risk management ecosystem. AIC, the country's premier crop insurance company, safeguarding millions of farmers through their innovative solutions, supporting resilience, food security, and sustainable agricultural growth. May I request our panelists to be please also joining us. Shri Sumant DS, Chief Growth Officer at Shema General Insurance, who's been a business strategist, expertise spanning finance, insurance, digital distribution, leading growth initiatives in the organization, playing a very pivotal role expanding the company's government and agricultural insurance business, including the implementation of the PMFBY program across multiple states. And Shri Saurabh Sinha, Head Crop and Government Business, IFCO Tokyo General Insurance. Someone, again, extensive experience. He's been instrumental in driving agricultural insurance solutions, supporting the effective implementation of government-backed crop insurance schemes across India. So with our panelist here, once again a request to the audience. Any questions to the panelists, please use the app and we'll be taking at the end. We'll keep time also for the Q&A to be addressed. And handing over to our moderator, Shri Koli Rao.
Happy afternoon. And it's my pleasure to invite all of you to this Silver Jubilee session of IBAI and to the particular session that is Agriculture and Rural Insurance, a Strategic Resilience for Bharat. As we often talk, India is among the largest growing major economies. And the heart of the story of the Bharat is the farming sector, the agripreneurs, the rural enterprises, the economy. So therefore, we probably cannot bring resilience to the economy without actually taking care of this sector that is the kind of backbone, because still more than 50% of the people's livelihood is supported by agriculture. So at this juncture, I'm not believing that agriculture and rural insurance continue to be just a kind of a niche line, because it's grown from there into kind of a larger core sector, beyond the rural obligations and beyond the other considerations. We're looking for top lines through agriculture insurance, maybe a EOM kind of a incentive as well. But the real crux of the matter we want to discuss during the panel discussion is twofold. One is, meaning the industry, are we designing the insurance products for true resilience, or are we simply reacting to the crisis with an existing products or the government schemes? So that's a big question probably we're going to debate. We have three learned panelists with us from three different ecosystems. We have from Agriculture Insurance Company of India, Sudipta Mohanty is a General Manager and Chief Marketing Officer, which is at the core of all the government-run agriculture insurance products. Almost 100% of the portfolio of AIC comes from agriculture. That's, you can say, monoliner. Then we have IFCO Tokyo. We have Saura with us. IFCO Tokyo is a kind of a multi-liner, data-driven, and a very diversified portfolio, but they still think rural and agri is an important component of their entire business operations. Then we have Kshema. We have Sumant, Chief Growth Officer, which is a newer player, rural-focused, with tech-driven kind of inspiration for them to come into this line of business. And the two topics we're going to probably, in the next 25 minutes, we're going to talk about is, one, how are we going to bridge the protection gap for farmers, small and marginal farmers, and the rural communities, and what role the brokers will actually play in that particular space. Secondly, can we not go beyond the government-supported programs to a more simple, data-driven products which something farmers identify themselves with and find value in the insurance products? So these are the two topics we're going to debate. A few suggestions, because we have very limited time. I think said 30 minutes, 5 minutes done, so we have 25 minutes. So we'll do a couple of rounds probably, and try to be crisp, try to be candid, so that we'll try to cover as much area as possible. So let me start with Sudipta from you. So for example, rural agriculture insurance, a strategy for resilience for Bharat, how does it resonate with agriculture insurance companies' mandate? Well, that's the first question. And the second question, of course, are we are running government schemes for the last, I would say, 3 or 4 decades, despite, huge subsidies, almost compulsory nature, we are not able to go beyond 30-35%. So one is on how does it resonate with your mandate? Secondly, are we doing enough to really make sure that the safety net as a resilience available to all the farmers? Thank you.
Thank you so much, sir. Good afternoon to all these wonderful participants. As you said, the time is also constant 25 minutes. So I would like to say that I would like to keep my answers very concise. Basically for 2 reasons. Let me make a bit humorous, because actually when the test cricket era was there, people would watch that. Now when the 50 overs match came, people just left the test match and they started watching 50. Now the 2020 is there. So I believe the smaller is the size, the better is the attention. So the brief the answer, I think it would attract the attention of the people. So thank you so much. Coming to the first, actually the mandate of AIC. mandate of AIC, I would start by the famous quote of the father of the nation that India lives in her village. So you have given the statistics, 50% of the population depending for the livelihood, for agriculture, 65% residing in actually in rural areas. So that and agriculture contributing to 18% of the GDP. So AIC, as you said, it's a monoline company. So actually the slogan of our company is Krishak Yatna Rakshanam. Krishak, the farmer, Yatna means the efforts are endeavor, Rakshanam means the protection. So we protect the efforts of the farmer. So we are at the background. As you know, in the game of boxing, actually when the player falls down, the defeat is not declared. It's when he refuses to rise up. So basically, actually, we don't let the farmers to lie down or fall down. Every time he falls down, we make him to rise. So that is our basic motto. And being a monoline company and in the front runner in this agriculture sector, so that has been always our endeavor. So whenever there is this financial impact affected with this any crop loss due to adverse weather, and as you know, agriculture has always been a gamble with the nature, with nature holding most of the cards. So whenever there is a loss, we are there to continue. We strengthen the support. So the farmer is always there to think that somebody behind the back who will support him at the time of his distress and the time of his loss. So then he can again rise and take up the activities. And basically when he knows that there is some support is there, so he can adapt to the improved input, have better technology, and also high value crops. So in that way, he is contributing to the significantly to the development of the nation and the food security also. The farmer is feeding the 1.4 billion people. So I know for most of the people just agree, and the rural mostly for the our broking fraternity, it comes up maybe at the last of the list of priority sector because of the low size ticket. But as the number one leading insurance, agri insurance company or agri insurance provider of the current nation, I think it is the largest in terms of enrollment in the world. So we are proud of that, and we will always stand behind the farmer and to take it forward. And the maximum enrollment, actually, it has been always our endeavor. So we will go forward with that. Thank you.
Right, Sudipta. So, Sumant, from a private sector lens, the agri and rural sector is not exactly appealing kind of line of business. So what convinced you when you started your operations 4 or 5 years ago, your focus was in rural and agriculture, although you do take care of other lines, but your focus happened to be on the very name suggests Kshema also kindly brings that kind of a memory. So what convinced your management to really, come with this kind of focus for the rural and agriculture sector?
Right. First of all, I'd like to congratulate IBAI on the 25th anniversary, and thank you for having me here. So, like you pointed out, the sector that we're talking about, the farmers, is the most vulnerable towards probably the largest risk that is there today, climate risk. And we saw that though government schemes are there, which are supporting the farmers with resilience, there is a lot of gap in how individual farmers are addressed to their needs with climate risks. And also the what we call hyper local products that are available, because the risks are very varied as we travel across geographies in the country. We're a very large spread geography with almost about 130 odd microclimatic zones. So each of these microclimatic zones we saw have very hyper local risks, which the farmers don't have a choice towards picking based on the risks that they have due to weather conditions, due to soil conditions, due to various other factors. So we saw that there is a huge gap that needs to be addressed with the largest segment of the market, with most of the population that is rural, that is into agriculture. We saw that there is a huge gap that is there, which can be filled only with technology being the outlier there. So Shema started off as a technology company that is selling insurance in the farm sector. And then we realized that with technology, we could now bridge that gap and bring these highly vulnerable class to resilience and make it available, make insurance available for them at a very localized, customized product level. That's how we started off.
Fantastic. I think we need probably some more companies who focus on rural and agri lines. Coming to Saurabh, agriculture doesn't mean just the crop alone. Agriculture includes livestock and fisheries, and of course, the agri equipment. So everything which is probably what we see in the the rural areas and agriculture sector. So we've been talking about crop, like, we have reached probably a 30-35% penetration level. Livestock, we are still at about 2%, even lower. And fisheries, of course, not much. So other than crop, actually, we haven't seen much in the rural sector, in the agriculture sector. So you, with a cooperative sector kind of bent, how would you see that, like, we move away from crop to focus? I'm not saying that you ignore crop, but as much as we focus on crop, we also need to focus on other lines of agriculture. So how do your company look at this kind of opportunities?
Thank you, sir. Good afternoon, everybody. And I extend my heartiest congratulations to all the members of IBAI. Sir, just to address to your point, we being IFCO, Indian Farmer Fertilizer Cooperative, so inherently, as a company, we have commitment towards farmer, we have commitments towards the rural community. And IFCO per se, a promoter has been serving the nation. It's an important phase to the agriculture for more than six decades, 60 years. Now, when we talk about IFCO Tokyo, we, in the initial years itself, we had products which cater to farmer need by popular name of Barish Bima, Mausam Bima. So we have been there. We know what exactly the farmer has been needing to do its cultivation, to do its agriculture business. Now, when we look at today's scenario, the crop insurance mostly is a government administered job in a way where all the insurance companies are, the qualified insurance companies are lending their hands to. But when we look at the entire spectrum, we are just covering crop insurance, the cultivation cost. That is what we normally indemnify. And that too on a very average yield basis. So the poor farmer, when we look at the farmer segment, we have marginalized farmers. That is at the bottom of the pyramid. And with very small land holdings, the rich farmer, they don't need insurance. It's the marginalized farmers. So we are just trying to cover crop, but not his livestock, not his house, not his health, not his personal accident, not his transportation to the mandis where he is going to sell his crop, not his loss of profit. So crop per se is just covering a very small part of the risk the poor farmer is exposed to. So as IFCO Tokyo, we have been having other products which is not integrated because it's a government-driven, GOI-driven product. So we have products like Kisan Suvidha, wherein the farm equipment, which is typically the tractor or the harvester, it has two more covers to it, the householder insurance or the PA part. Now, in this current ecosystem, integrating these products, they come from different backgrounds. So it has its own challenges. But if we really have the intent to serve the farmers, so we have to move beyond crop, look at these products. And with the current changing agroclimatic conditions, we need to support the farmer at the center with this kind of support system, wherein if the crop fails, the crop insurance comes into picture, then there are other tools and other support system of offering him a personal accident or a health cover. This should be a part of the whole program. Otherwise, I think with so much of participation, with so much of efforts by all the stakeholders and collecting a premium, as per the statistics, we have paid more claims. So roughly 1.83 crores of 1.83 lakhs crores of claim versus 1.73 lakh crores of premium. So industry has been paying more claims, but we need to focus where exactly are we lacking. And these are the areas, in my opinion, that needs attention from the insurers, because I'm talking on behalf of the insurers, and in collaboration with the various stakeholders, namely the government of India as well as the state government. I think we can look at a more resilient picture. And with changing agroclimatic conditions, the new crops, the new method of farming, I think there also we can play a more advisory role, assisting the farmer so that he has this immune system better equipped to save himself from the weather vagaries as well. So in a nutshell, this is what perspective we carry in the interest and welfare of the farmer.
Right, thanks, Suru. Sumant, for you, we have heard from the market that Kshema, well, they're implementing government products, but they also actually specializing in retail products, which are particularly driven by technology, kind of innovations in product design as well as service. So, would you like to talk about exactly how kind of working on such products, scaling up those products can actually improve the overall penetration levels and improve the kind of resilience we are looking at?
Right. So like I mentioned in the beginning, so the only way I think we can achieve the widespread growth for crop insurance, like Mr. Sinha was also saying, for the small and marginal farmers, the distribution one has to start with technology, where it becomes easy for the farmer to identify the product. The product simplification has to happen. So we've managed to break down products, like I said earlier, with hyperlocal risks. So the farmer understands the risks that are there, which are particular to the area or the geography and the risks that they face, right? And also simplifying the product, not just the product, but also the process of onboarding it, and then how they realize claims, understanding the product, understanding how claims are triggered and how claims are triggered and how they get paid and what quantum they get paid, not leading to mistrust in the policy as well. So it cannot just be, I would say, a mix of spatial data that gives a product its sense, but also the journey in which the entire ecosystem moves, right? So bite-sized products for farmers with risks that are hyperlocal has led to a lot of success within Shema with its retail products. And like I said, technology has been driving the distribution model, but also I think broking firms will play a large role in terms of getting us the reach or the penetration that is required. It cannot just be technology. It also has to have a lot of broker interaction.
So can you give one example? I think probably we are talking about crop insurance, probably that's where. So did you launch any product outside crop, and what is the turnaround time for claims, if you've done one?
So for us, I think because we don't rely on physical surveys also for claims, the claims are also all satellite based on AI-driven technologies and our own models. So the turnaround times that we are estimating right now, in fact, the last cyclone that hit AP, the claims turnaround time for us was 48 hours in some cases. Though right now, I don't think 100% of our claims are at 48 hours, but the aspiration is to get there, because these are easy to identify, I think, and technology makes it easy for also to identify the extent of the loss, not just the overall, but at a farm level, we can identify the estimates of the loss. So 48 hours is what we have achieved in some cases. That is where we want to be for the rest of the cases. And in terms of non-crop products, we've not, I think we've not launched anything yet, but we are working extensively on livestock. We're trying to figure out models in which we can make it also tech-driven. So most of the technology we have done is in terms of investing in claims process, in terms of making the product more easily available to the farmers in terms of distribution.
Right, thanks. The true value of crop insurance lies in fair and timely settlement of losses. So if you look at, I think one of the most serious grievances of the farming community has been that delay in settlement of losses. But of late, the government has introduced a lot of new technologies, digitization of land records, probably scientific way to assess the losses quickly. So to what extent actually is helping the resilience process, Sudipta?
I think there has been a significant improvement in the data ecosystem. Like the most of this, whatever the traditional gaps were there, those are being addressed also. And now that, as you just mentioned regarding that digitization of land record, that is also happening to a larger extent. And the NCIP, the National Crop Insurance Portal, actually, that is serving to a larger extent to have the timely availability of data. So there is more reliability on the data, and also the data quality is also now very available. And with this technology, winds like weather information network and data system and STEC technology, actually, those are also helping to a great extent to strengthen the data ecosystem. So challenges will always be remain there because it's such a huge scheme. So as I mentioned earlier also, it is in terms of enrollment, it is the world's largest scheme. So some lapses will be there, some pain points will be there. But I think there is serious efforts from all the stakeholders to address those challenges. And I think I'm very quite hopeful and optimistic that in future we will be having more penetration. Actually, crop insurance will in a great way help the country's economy towards strengthening the farming community and country's economy. I'm very optimistic and hopeful on that.
So, Saurav, if you look at across the lines, probably agriculture and rural is probably a line of business where probably the involvement of the brokers has been probably among the lowest. So what can bring the broking community into these particular sectors? What rewards, what amenities, what probably change in regulation? So that can probably enhance the insurance penetration probably and increase resilience.
Currently, as you see, the design of the program is direct connect between the Government of India, insurance company, and the product which is for the farmer. So a very valid question that what role broker can play. Definitely, I mean, the session which we are here into is what the broking community has done for insurance development and growth, ultimately with the customer at the center. So I believe, I mean, this idea can develop, and I think with regulation and with ease of administration, brokers have a large role to play. We know currently brokers do not have a direct role to play because awareness of this program is there. But if we have to reach the next orbit, the next level, where currently under 40% is the penetration, that is what we have as per the statistics. And these are all marginalized farmers. So the broker community can reach out. They can spread awareness in a more effective and in a more methodical way, encourage the farming community to come and enroll themselves and reap the benefits of insurance. So after that, when the journey starts, there is a huge scope of servicing the policy well, servicing the farmers well, in terms of understanding their pain points, being sympathetic to their problem on the ground, and again joining hands directly with the insurance company in bringing up the claims, understanding the claims well, because they themselves are professionals. So settlement of claims is one area which needs a lot of improvement. Even from insurance side, I must say that yes, it has huge scope of improvement. Though the claims have been settled well, but scope definitely lies. So here again, our broking partners have a great role to assist that poor farmer getting claims adequately, well, fairly, and in a transparent way and in a timely manner. That is what a farmer needs. I think if he gets that, we would have done a great job to the farmers of the country. So all in all, there's a great scope for our broking partners to play a role. So hopefully with coming times and with more of parametric also coming into the fray, our broking fraternity will see that they will contribute value to the entire, I'll say, agriculture ecosystem, insurance being one among them.
Now, let me ask a few questions, same question to all three of you. So if you look at innovations like product, process, partnerships, technology, let me start with Sudipta. Which one particular innovation is really going to be the game changer?
I think obviously I will choose technology, because as you know, actually we are living through an era of profound technological disruption. So technology means actually AI is the future. So technology, I think the past 3-year product, process and all those things will be taken care by this technology. Because through AI, because we in agriculture, rural sector specifically, we have a lot of unstructured data. So now we have that agentic AI, document AI, generative AI, and predictive AI. I think document AI has a greater role to play for actually to make the data more structured. And so once the data is more structured, because basically what insurance is, it is basically when the pricing should be perfect, because only the quality of data. So AI will take care of those things. And also the what you referred earlier also regarding that grievance part actually with the AI chatbot and the voice assistance in various regional languages, the claim tracking system, and also the proper any grievance resolution that can happen through that. Also another is the crop advisory. AI can give also the localized weather data and also the pest and disease alert. And also the irrigation, the advice with regard to irrigation and also showing data, everything. So the future is going to be absolutely unthinkable. If not today, AI, very limited scale, we are using some of the companies might be using that. I'm not aware of that. But I think AI is the future, and unless we address the technology, once we address the technology, all the three you mentioned earlier, that product, processes and everything, that will be taken care. So AI will address most of the issues or challenges that are now cropping up, like your faster crop loss assessment and a proper appropriate risk assessment. So everything will be taken care by through technology.
Saurabh, what's your take on that?
Sir, well covered. Technologies, I mean, I also have that point, but I'll add one more point to it. I think product also needs a revamp, a restructuring of the product, where we have a 360-degree protection for the farmer. Currently, as we have been talking, just the cultivation part, the crop part, but other parts which goes into cultivation and post-cultivation, post-harvest, which makes the livelihood of the farmer. So technology, yes, thumbs up. And coupled with, again, a white product, which gives him a 360-degree Suraksha Kavach or a circular protection, which will ease out the whole process itself. I think that will be the win for all of us.
Right, that's great. Yeah, Sumant?
Yeah, I think there's no doubt that technology plays the most vital role. See, in spite of that, I would like to just take a quick minute and say that, so at Shema, we have a platform that we've digitized almost 4.5 lakh villages with the digital maps covering all the farm boundaries. So a farmer can enter their survey number, it'll show up their farm area, the cognitive AI engine then picks up the risks and gives the dynamic price. But then at that same point, technology by itself cannot be a one-trick pony, right? So we need adequate pricing that comes in, which comes in from a lot of data that needs to be governed, data that needs to be gathered, right? That there's distribution models that come in. So I think there's a lot of emphasis right now on the technology side, which is great. And I think AI models will help us get there faster. But I think there's also a lot to be done on the other sides, which is claims dispersion and distribution of the product. And like my learned colleagues are also saying, also in terms of understanding and revamping the product to make it more adaptive to our current climate needs is, I think, also what's necessary.
Right. So, thanks. Saurabh, just picking your earlier kind of points. So all the technology and the products we're talking about should lead to also product innovation. Because right now we have kind of a plain vanilla products mostly, and we sell that product. So we are not probably exploring, what exactly those simple products can do for the farmers. So how this angle can be visualized as we look at technology?
Definitely, sir. When we talk technology, so it should ease out life. It should make our life easy. So in relevance to farmers, the generic approach of covering the crops in a very wider manner can be customized. We have seen previous speakers speaking about hypersensitive product. Why not? Why not we have a specialized product for just orange cover? Why not only for paddy? Why not for soybean? Instead of one umbrella cover, so we can have customized, specialized product for that set of farmers who are growing a pomegranate or who are growing kharif crops. So technology will give us the access to a better data analytics and designing the product appropriately along with the pricing so that it's affordable for the farmer, and also the adequacy of premium for the insurers, and also to make the reinsurers happy that yes, they have enough of premium to service this policy in the event of claims. The product being mass in nature. So that's my idea.
If I could just supplement, actually, like in rural, actually there is no one size fits all. So that's why specific products are required, and also it is location-wise, segment-wise. That is the need of the hour.
Exactly. So let's come to the last question, which again will be all three will have to. So let's say you want to give a message to a kind of a small and marginal farmers, a rural folk, who's very skeptical about the value of insurance. So what message would you like to give?
I would start with that.
You can start.
Okay, it's a very difficult question how to put across the message, what is the value proposition for insurance. So I would just like to say actually something like the famous cricketer Virat Kohli, he was going through a very bad phase, couple of ducks. So the journalist started questioning his capability. So when he was asked actually what would like to comment, he said that, no, you see, I won't say anything, let my bat do the talking. Okay, so that is the issue. Actually, if I want, actually, I would show the numbers instead of saying anything. I would show how many claims I have settled, like in last 3 years, actually, maybe 22,000 crores, actually, AIC has paid, covering 4.5 beneficiary enrollments. So I will say, ये सब हमारी बातों पे मत जाइए, हमारे आंकड़ों को देखिए. Don't go by my words, just look at my numbers.
Right, very interesting anecdote to back it up. Sumant?
Right. So I think the message is, one is how I think the responsibility rather than messages on our end also to make sure that there is enough trust in the community that we are with them when there is a need. And also I think the long-term messaging is that how do we make sure that taking adequate insurance at the farmer level is a part and parcel of their farming practice, not just as a part of a scheme that they need to be enrolled in. So I think it needs to become imbibed as an activity of farming rather than just participating in a scheme. That's the message I would like to.
Yeah, Saurabh?
Sir, my idea would be whenever we do forums for farmer, whenever we design anything for farmer, everybody is present except for the farmer. So
what should be done?
So we must involve even the farmers, the farming community leaders to be part of the program where we sit and talk about what we should do about them, what product we should come out with, what are the other benefits we think of them. So participation of the farmer should be there when we talk and think about crop insurance or anything related to farmer. And that I think will go a long way in winning the trust and confidence of the farmer, because reaching out to the farmer through media, through digitalized platform is fine. But if we engage them, if we make a part of the decision making, we definitely, I mean, by design itself, we will earn the respect of the farmer, the trust of the farmer. I think that is what is critically missing. And then he will have confidence in this whole program. And I think that will be a win-win situation for all of us.
Thank you, panelists. I had to give Ms. a few questions, given that we have a very limited time. I think this is the first time IBAI actually included, I agree, a panel discussion in the being a Silver Jubilee. Thank you so much for doing so. I'm sure in the future seminars and conferences, Agri will continue to play an important role, and where our experts can continue to share how we can increase the penetration and the rural resilience. Thank you very much.
As we thank our panelists, may I request Mr. Sivi Verghese to kindly present the mementos. Ladies and gentlemen, post this, we'll break for lunch. If we can have a lunch break of half an hour to 40 minutes. We are running one session late, so we need to catch on time. If we can start our session at 2:10 at the most. Yeah, 2:10 should be fine. Try making it at 2 o'clock. The deadline stands at 2:10. So the next session is the health insurance. After the agriculture insurance, we're going to be looking into another segment, the fastest growing segment of the insurance, the health. But please join us for lunch. Have a healthy, sumptuous lunch. And then we focus on our health insurance after a healthy food outside. 2 o'clock, ladies and gentlemen, starting with the next session. Thank you. collaborating and sponsors. Diamond sponsors Bajaj General Insurance Company Limited, IndusInd General Insurance Company Limited, Shima General Insurance Limited, the Oriental Insurance Company Limited, Axis Max Life Insurance Limited, ICICI Prudential Life Insurance Company Limited, and Care Health Insurance Limited. And we also thank all our silver sponsors. Till now, ladies and gentlemen, just a quick recap till the time people join us. We had the inaugural session in which the leadership of IBAI addressed us, taking us through this 25 years of journey and looking into charting out, in fact, a growth plan for the next 25 years, a call to action towards building a more modern, efficient, and a tech-savvy, a resilient, a secure, and a globally competitive and a future-ready insurance ecosystem, working and collaborating with all the stakeholders. And the second session that led us into the second session, in fact, in the first session, we also had our past presidents who addressed us. They shared with us their various anecdotes, stories which were of more of experience, stories of the change which they have been able to bring about, and the challenges of those times and how they combated those challenges with more innovative solutions. We have been talking about that with every new era, or there are new challenges. The challenges of yesterday are no more as that of today, or the same goes for tomorrow. So we need to adapt and evolve ourselves, and we had a session towards it, looking into the new age risk and the emerging challenges. We've had a session on the agriculture insurance, and we also had with the regulators, our regulator from IFSC, also from WFII, the vice chairman and the director joining, and they inviting the global perspective, the Indian perspective, and where we can learn from each other. And with this, we are going to be now moving into the next session, which is the health insurance sector. That's going to be followed by the session on ADR, SMEs. We then are going to be looking into these emerging opportunities as an emerging opportunity or threat in ShoreTech and AI. And then the last session of the day will be reinsurance. Tomorrow morning, as we start, that's going to be once again the inaugural session where we have the policymakers and the regulators joining us. We're going to be in conversation more with them, understanding the changing landscape and how the industry can collaborate and in a cohesive manner work with the government and the regulators towards the further growth of the insurance sector, more towards protecting and safeguarding and championing the interest and the cause of our policyholders. Today evening, there's dinner after we close here, the knowledge sessions. After a break, we are going to be reassembling for the dinner. And during the dinner evening, we also have the recognition to the IBAI members who have been in this journey of IBAI, contributed to it, as was mentioned by one of our past presidents ki hum to chale akele hi the, log milte gaye. So the people who have been in the thick and thin of this journey contributed and being part of the various milestones which were shared in the journey by our secretary, they are going to be recognized and appreciated in the evening today. Once again, just requesting everyone, any questions you have to the panelists during the session, there is a board, stand board on your tables with the QR code. Just scan it. Questions, you may send it through that app, and we'll ensure that that gets flashed on the screen, and that's for the larger consumption of all the answers coming from our panelist and moderator. Tomorrow we are in the inaugural session. We're also going to be releasing a couple of publications, especially which have been curated for the 25th anniversary. That's going to be in the inaugural session tomorrow. So, welcome back to the people. I think we'll start and let people join. The lunch is going to be on for some more time, another 5 to 10 minutes, and then we're going to be closing for that. But meanwhile, people who are there, just once again a request to kindly take your seats so that I can invite the panelists to be taking center stage now. So this is a session on health insurance, and I don't know how it got so well timed. Just after having our food, we are talking about health insurance. The session was supposed to be pre-lunch and it got shifted to post-lunch. That's, I think it went as per the desire of the organizers or the hotel staff. So health insurance, as we all know, is one of the fastest growing segment of insurance. But then the question on its affordability. The growth of this segment depends hugely if we are able to balance the growth of the health insurance sector with affordability and accessibility. And we all understand people who have availed health insurance, you all of course being part of this industry, कि कोई भी बीमारी को tackle करने में actual में कमर टूट जाती है. So much of money goes, and if you don't have the insurance cover, it actually kills you. So this is where we are going to be talking about health insurance, the fastest growing segment, but then balancing its growth with accessibility and affordability, exploring how the industry and particularly the insurance brokers can navigate rising healthcare costs, evolving distribution models, and changing customer expectations. We're going to be talking all this while keeping the policy holder at the heart of every solution. And that was also reflected by Mr. Sanjay Kedia, our past president, keeping the policy holder at the heart of every solution. We need to define and build these innovative models. I invite our moderator of the session, Shri Sajja Praveen Chaudhary, the CEO, Policy Bazaar Insurance Brokers. He's been a veteran of the PB FinTech Group since 2011. Now he leads Policy Bazaar Insurance Brokers as its CEO. Extensive experience across business, technology, digital insurance. He's been instrumental in scaling both the retail and corporate insurance solutions and driving innovations in India's insurtech ecosystem. Our panelist, Shri Rajiv Kumar Agarwal, the General Manager, Oriental Insurance Company Limited, a Government of India enterprise, a legacy spanning nearly 8 decades. He's been a trusted partner in protecting lives, businesses, national assets through innovative insurance solutions. I invite our next panelist, Shri Nainu Desai, the Business Head, Corporate, SBI General Insurance, driving SBI's general corporate business strategy, strengthening partnerships, delivering innovative risk solutions for businesses across India. Welcome to him. Our next panelist, Shri Jitendra Vanjani, the Director, Chief Strategic Officer and CEO of Niva Bupa Health Insurance. A seasoned leader in health insurance industry, has been instrumental in driving Niva's strategic growth, digital transformation, customer-centric innovation, helping make quality healthcare protection more accessible to millions. And we have Mrs. Sanmeet Sachdeva, the General Manager, National Insurance Company Limited. More than 3 decades of rich experience in general insurance sector, she represents one of India's oldest and most trusted public sector insurers with a legacy of over 120 years in safeguarding individuals, businesses, and national assets. So we have some of the most experienced minds here on the stage taking this post-lunch session, and I hand over to our moderator.
Thank you. I think it's always a tough job. We were anyways thinking that this was a tough job for us, that we're running a session late and we're going to stop everyone from having lunch, ours being a pre-lunch session, but then it just got a bit tougher that we're having a post-lunch session. It's going to be a tough one to keep everyone entertained. Having said that, how many brokers in the house? I understand that there are insurers also. Wonderful. There's one good news for you. And if you have any colleagues outside, you can call up. We have a lot of gentlemen and ma'am here who take care of GMC quotes. So the thought is, we'll take a selfie at the end of the session in reverse, and whoever is here will get quotes in the next 1 week and rest can ignore. Yeah. So you can call your colleagues inside if they want quotes on an immediate basis. Yeah. Thank you. So I think, we're discussing about health insurance, and health insurance in India is currently at a very interesting inflection point. Especially given that in the past few years, or especially the last 3-4 years, post-COVID, the entire industry led with post-COVID claims, and obviously increased awareness on the customer front around health insurance post-COVID effect, and then obviously the recent GST waiver from the government and a rapid growth in the premiums. And at the same time, a lot of e-commerce companies changing consumer behavior across the country, right? Where Amazon, Swiggy, Make My Trip continue to kind of pamper customers to the end, which makes them believe that, the same thing that they have to get from insurance as well. So with all of these things, we're at a very, very interesting point. And at the same time, also there's a lot of talk in the media and also in social media, especially about, probably claims ratio, and probably at times about the payouts on claims and affordability as well. So today's discussion, as I said, health insurance and healthy insurance. When you look at this healthy part, I think it looks very different when you look at from a lens of, say, an insurer versus a customer versus a distributor versus a regulator. So what we'll try to kind of do in this, probably, we have about 30 minutes, or we'll try to kind of rather touch upon some of the key areas that are in recent discussions over media and whatever people are discussing with. And we'll try to do as much justice as possible within this 30 minutes to kind of entertain you and, ensure that the post-lunch session is taken care of. So I'll start with Rajiv, sir. So, I think clearly, as we just speaking about, right, the modern customer expectations are ever evolving, and especially with the e-commerce companies and the other kind of behavior, customer behavior that's changing, right? Which is whether it's quick service, comprehensive coverage, and anything and everything that you speak about. And at the same time, the way the healthcare inflation has been, especially post-COVID, and obviously with inflation, you expect the premiums to rise. But at the same time, customers or the clients expect that they would want at a better premium or a lower premium, but the benefits to remain comprehensive and a quick service. Whether it's GMC or retail, at the end of the day, you have to price it basis the claims outgo only. So how you as an insurer kind of, are trying to kind of balance this, or how do you see this balance between, say, a affordable premium versus a quick service, at the same time also being able to give a comprehensive coverage to the client?
Thank you, Praveen. So whether we have to see whether our whether our products are affordable or not. So that has to be tested. And what I believe, as far as insurance point of view is concerned, they are actually affordable. A 50 lakh super top-up cover you can buy for a family dinner at a decent restaurant. So that is the cost of a 50 lakh cover. Neither this life insurance is offering, nobody is offering that kind of coverage.
And the coverage is very important. And though it seems a very intangible product, whether you will require it or not, but suppose some liver transplant or something like detrimental kind of illness is there. So 50 lakhs vanishes at a go, at a jiffy. So that is very important. You are paying only hardly 4 or 5,000. So as far as I believe, products are affordable. And what we can do as an insurer, just to maintain our profitability as well as sustainability, as far as this retail product is concerned, so we are focusing on this operational efficiency. We are this earlier what had used to happen, every 3 years we used to increase the premium. I don't think that will work. As far the market is, people are globally aligned and people know what kind of pricing and what kind of services are required. Services everybody asks for a global standard. And what we can do as an insurer, so let us work on our operational efficiency, work on the control of frauds. Frauds we can control. So a lot of savings can be there and that would be the margin for us. And apart from fraud, this abuse is there. Soft frauds are there. So wastage is there. I will give an example. For if somebody goes for a hospital, they order n number of tests. Most of the tests are actually not required. So that becomes a waste kind of thing. Ultimately, it gets middle to the cost. So that we can do, and 100% cashless, we can focus on that. And as of now, this earlier this tier 2, tier 3 cities were left out. Now GI Council has been empaneling all those hospitals. So the way ahead, I feel the cost would be lesser. We need not increase any premium. In case we require to increase any premium, we must offer the enhanced experience as well as enhanced products.
Good. I think coming to the hospitals part, sir, I think that brings us to an important question. I think I'll ask the next one to Sanmeet ma'am. You know, there's also one of the concerns which is widely expressed around unregulated or, you know, unquestioned wide variation in the cost between different hospitals for the same kind of treatment. You know, and IRDA has also kind of initiated discussions around this in terms of what can be done around transparency of pricing of hospitals and all of that. Yeah, how do you see this shaping up, you know, for the, you know, in our entire journey to kind of go either towards affordable premium or in making this entire thing, you know, sustainable in long term kind of thing? Do we see, as Sir was saying, you know, some part of it is also about ordering tests which are not required. Do you think that a model like Singapore, where today the regulator says you cannot get any health insurance product without a copay, does that make even the customer responsible? Do you think that's a model that we should go into, or is there something else that you see forthcoming in the next year or so?
Okay. Hello. So very rightly said that as the scope of the health insurance is widening in our country, but at the same time, all the insurers, I think it is universal, not only with the PSUs, but with the private insurers also, that we are all struggling with the problem of medical inflation. So every year now the medical inflation is almost thrice the size of the normal inflation in the country. So which is an alarming state, and there is no uniformity between the prices, package prices of like one hospital and the procedure, which is like one hospital, A hospital is charging an X amount, B hospital is charging some different amount. So there is no uniformity between the hospitals. And as a result, what is happening, that there is an uncertainty amongst the insuring public also, and the burden is like translating in the form of medical inflation, because and at the same time it is somehow I feel that the insuring public is also losing its confidence amongst the health insurance per se, because many a times we are facing the problems that the deductions are happening on account of reasonable and customary. So what I feel is that as an insurer, because it becomes very difficult for us to justify that what is exactly reasonable and customary, and how we can justify that what is happening in one hospital is justified, and the other hospital which is charging some exorbitant amount, it is not justified. Because it is, as you see, health insurance is related to the sentiments of the people. It is not like property insurance. It is related to the personal health and sentiments. So that is why it becomes now very, very essential that although IRDA, they are pushing for this performance metrics for hospital in terms of like the time taken for the pre-auth and time taken after the discharge, and the surveys also, like satisfaction surveys, and they're also pushing up the regulations that by how much time the insurers will pay the reimbursement, like will settle the hospital bills in case of cashless. But at the same time, it is also required that there has to be a uniformity. So it has to be a tri-party agreement between the hospitals, insurers, and the regulator should also have a supervisory role, so that there is a transparency between different procedures. And there has to be a set protocol for different treatments and how the hospitals are charging it. So unless it is done, this problem is not going to solve. It will go on mounting and mounting, because nowadays with the advanced technologies and robotics, these things are all becoming more and more often, because now the hospitals are suggesting robotic surgeries. So I think it is high time that if we want that insurance should expand, like we are talking about insurance for all by 2047. So in such scenario, unless and until we impose some trust in the insuring public that, see, you are going to get this much amount, whatever hospital you go to. And similarly, then after the procedural cost is fixed, then we can go towards a data-driven pricing. Otherwise, the prices are going to rise. So this is one aspect. And as far as the co-payment is concerned, so I understand the Singapore model that the regulator says that there has to be a compulsory co-payment in all the claims. But unfortunately, for universal co-payment will not be a good option for India, because considering its diverse landscape and the diverse, in terms of insuring public, and we have to see that a major chunk of our population, they are not even able to afford the insurance premiums. So if they have to bear a cost of their own claim, so the participation will grow less. So there has to, if the co-payment model has to be introduced, then it can be done in such a way that it can be given an optional thing for people who can afford it, and it can be built in by the insurance companies in their products itself. So that there is no, we are talking about covering the tribal population, remote population, BPL families. So how can they afford to bear though? I understand that it will have its own benefits, like there will be control on the claims cost and some moral hazard element can be taken care of. But in India, I think Singapore model won't work. So it has to be.
But ma'am, if I were to ask the same question, let's assume I understand from a BPL segment and a slightly lower income segment. But what I know it is going to be a bit how do you call it, sarcastic also. But then, what if this is to be implemented on, say, a GMC? That is a mandatory thing that has to come across. Do you think that can help improve the overall dynamics, or what do you think?
Over the time, I think it will improve, but right now, I don't see it in the today's landscape. I don't see I don't think it's a good idea. So in the times to come, we can think about it. Once I think the enough awareness is already created, and particularly if we see that we are thinking about penetrating in our tier 2 and tier 3 markets. So there, though, insurance is now still they are considering insurance as a luxury. So, but then we have to give them a trust of that it's a type of financial protection. So in that case, I think right now it won't be. I don't
understand.
Hello. For GMC, I think it's a good start. It's a good suggestion that regulator can intervene, and let us start with a 5% co-pay for GMCs. As of now, we are saying corporates is rather retail is subsidizing corporates. So that would be a good start, and it would like a pilot basis. We can always start for bigger corporates. Suppose 1,000 lives or more than 1,000 lives. So 5% co-pay as a compulsory kind of thing. I believe it's a workable kind of.
GMC it is okay, but I'm talking about the retail. Sorry, I didn't understand the question.
I think I'll pick on the trust part, ma'am, that you said about, and I know I'll come to JV. Trust is absolutely the cornerstone, right, JV, of insurance ecosystem, and especially when it comes to claims and all. And while industry has been paying thousands of crores of claims every year, that's what even the data also clearly shows. But there's always a bitter feeling that the customer is left out with at the end of hospitalization or at the end of getting a claim. What do you think this is about? Is it at times a missing link between, say, the hospital and the TPA or the insurer, or not so very well understood coverage element that comes into picture, or is it something else? And there's also the element of fraud that sir and ma'am touched upon, right? There's absolute fraud as well. At the same time, insurance has a fiduciary responsibility to ensure that only genuine claims are paid, so that the money stays there for futuristic claims and all. So how do you see this entire thing evolving? And can anything around this area of fraud management and all of that move the entire needle on this affordability and sustainability part? And what do you think, in your opinion, can brokers play an active role in this entire part of sustainability?
Thank you. Thank you, IBA, also for having me here. So, Sajja, the question on, or the observation on trust is a very valid observation. And why I say that is trust, even in our usual normal understanding of the word trust, a minor scar can actually just break the trust. So even if you have done it correct and right 5,000 times, you miss it once and the trust is out. So how do we get to being seen as trustworthy and offering more trust? I personally believe there are only two elements to it. And my co-panelists, Mr. Agarwal and Sunmeet ma'am, also mentioned this. So this is a product, friends, and I'm sure you would join me in agreeing that this product is from cradle to grave, right? So it's a product which is like purely lifelong, and one incident or one memory of an incident needs to be explained and stored in multiple forms and manners by various people. So the two elements I personally believe can really help build this trust. One is transparency. Ma'am also discussed about that somebody goes to a particular hospital and the bill is different versus somebody going to a different hospital, and the application of robotics or the application of other terms are different. So transparency can really solve. Today there is, in India, there is information asymmetry. The customer or the patient has an X set of knowledge. The treating doctor carries a different set of knowledge. The provider has a different set. The broker partners and the insurance companies have a different set of knowledge about the same particular event. Now, in this scenario of so much information asymmetry, unless transparency is brought about, and transparency cannot just be brought about making policy wording simpler or by sharing if this amount was deducted, why was this deducted, or if this claim is not payable, why is it not payable. Now, this is post the event. The transparency has to come much in advance. So as ma'am mentioned, one should be very clear of in advance that if I was to take treatment in a particular hospital in a particular city, for this kind of treatment, what is going to be my exact cost? What is it that I will be paying out of pocket? And therefore, and I'm sure many of companies along with us have put it on their website. So there are estimators now available on websites of insurance companies, wherein one can put, for example, I can put cataract, left eye, in simple English I'm using, cataract, left eye, Agarwal Hospital, Noida. And I will exactly get that this is a daycare procedure, there is no hospitalization required, your average expense expected is, let's say, 40,000, and expected out of pocket is, let's say, 500 rupees. So once we start building out transparency levels to this, then is when the trust really comes in. And the second element to building trust is empathy. As ma'am also mentioned, one needs to be there, feel there. An Indian ecosystem of delivery of healthcare, as most of you friends are also aware, is a very complex ecosystem. Nobody goes to a hospital pre-knowing that I need to go to floor 3, room number 413 for X-ray, and then I need to come down, go to the billing counter, and there will be a bill ready, and then I need to visit the doctor, etc. Nobody is prepared for all this, navigation in advance. So how do brokers and insurers, so that, to answer your question, how do we partner in this? How can we partner in this is by being the assistant to that family at that point of care. Some companies have again started this People call it Sathi. I know PB has started it. They call it Care Plus Managers. I hear the word Sahayak also being used by some insurance companies. So these are people who are on ground in the hospitals, helping the customers navigate the ecosystem. So building things like Sahayak, Sathi, etc. for showing or sharing the empathy and building transparency. If we are able to do these two, I personally believe a lot of challenge on trust will be solved.
Thank you. I think that's a good perspective. So coming to Nainur, I think, traditionally, as we see, right, the regular health insurance claims, as we see, they get paid over a period of time. But somewhere, some people say that the future is kind of shifting towards, say, preventing claims through, say, a wellness or a prevention route kind of a thing. And especially in the GMC side, you've seen some of this starting to being offered. But do you think, can wellness genuinely kind of reduce claim costs and, kind of reduce chances of future premium being increased for a client? Or is it still in the stage of, as an engagement tool kind of a thing?
First of all, thank you, IBA, and thank you, Sanjay, for having me on the panel. To start with, yes, it will reduce claim cost. It will benefit the customer. But the question we should be asking is, what does the customer want? All of us present here are for that primary reason. The customer wants better productivity, lower absenteeism, and a healthy workforce. And that should be our motto in designing any wellness programs or suggesting any wellness benefits to the client. So starting with that preamble, wellness, according to me, is a journey. And a journey will have 3 parts. You have to decide to go somewhere, so you have to start somewhere. You'll have milestones, and you'll have a destination. As an ecosystem, that is us, along with your help, we have started well on that journey. When I say that, we have used technology, we have variables, we are able to measure, we are able to diagnose what are the probable lifestyle diseases a certain workforce would have. But the challenge, in my opinion, is the second part. Are we reaching certain milestones? Are we having enough interventions? Are we convincing clients that these interventions are required? Are we suggesting to them that incentivization or de-incentivization of the employees based on their own culture will help them to ensure that they keep on doing this wellness well? And then we will reach to a very healthy workforce. So in my opinion, as an ecosystem, as an insurer, we have done the first step right in designing a lot of wellness programs. We have done well in terms of using technology to create a lot of variables. But the intervention, the execution of it will actually lead to a healthier workforce, and which eventually will be an output of reduced claims. So if we execute well, we are able to show the tangible benefit to clients that if we do it consistently over a period of time, this will surely lead to reduction in claim cost.
Got it. So we'll just go in reverse order to JV on on the retail health product front as well, where you have a lot of business that you do. There's also a trend on increasingly that's being seen on rewarding preventive healthcare, or kind of rewarding a customer for anything which is related to kind of healthy lifestyles, instead of just kind of waiting for the claims and paying up the claims kind of thing. Do you think as an industry on the health insurance side specifically, are we ready for this? Should we start, or should the industry look at it as the next focus item that's going to drive in the next 5 years or so, or as we see probably next 5 years, or and is it a strong enough lever to kind of take care of the costs, or is it that we're still speaking about something which is very futuristic at this point of time?
Well,
I don't mean to say obviously some of the products have some small bit of here and there. I mean to say, has it become is it the time that has become core or not yet?
Well, Saja, you brought a very, very relevant topic, and why I'm saying that is, so far insurance, health insurance specifically, has been seen more as a financing piece to the excess part of healthcare. But this is where, as you rightly mentioned, we get to the entire spectrum of healthcare. Most of us would have already observed that OPD is already becoming corporatized, right? For me to book a doctor appointment, I don't go to the doctor or call him. I have an app and I do that, right? Similarly, for post-treatment, I have physiotherapy at home. We have every healthcare for either be it for elderly or for prenatal, postnatal, take multiple examples, and it's available. So why should insurance be limited only to the indemnity part of it? Therefore, if insurance starts becoming part of the entire healthcare, and that's actually in evolved countries, for example, if you look at UK model, Australia model, Spain model, the way insurance works is it's an integrated arm with the pharmacy, with doctors, the primary, the surgeons, the hospital, and once again back to physiotherapy and hospital, pharmacy again. So the entire ecosystem is integrated, and that's where insurance companies take part. So in India, I don't think that model is very far away. There are companies who are investing in building this kind of infrastructure. And therefore, for us, brokers, of course, as a community, we get a lot of opportunity in this. Why should we only be participating in the indemnity piece? We should be participating in the entire piece. For us, there should be a incentive to help the customer get to the right doctor. There should be an incentive to help the customer get post-treatment, care as well. So the entire ecosystem is evolving. We have already seen portions of it, and I'm sure insurance also will see being participated in the entire stream. And it's not going to take a lot of time. It will be very, very soon.
Understood. Coming back to you, Nainur, on the corporate GMC front, right? Especially, a lot of brokers focus on that area. So, especially, there's this entire new wage code that has come, new labor code and the wage code that came into effect last November. But I think there are a lot of companies have been waiting for a clarification from the government. And recently, I think about last month or this month, they've come out with this clarification saying that now that it's finally effective. So as a result, we see that a lot of lives in the BPO, KPO segment, or those manufacturing companies which have a lot of people under the, say, 25,000, 26,000 per month salary limit, all of them moving away into ESIC, right? Today, it is a mix of 50% are in ESIC and 50% are still in GMC. But these people also might move into ESIC. That means a reduction of lives, reduction of premium on the GMC front. And obviously, given the way that fire has caught fire in the industry, GMC is the only one where some bit of business is still happening. So is there an opportunity that you see in this space for brokers to kind of, when this is happening, is there something else that they can kind of try and, because we're at the juncture, right? See, once this entire shift happens, then what do you go and try to entirely start a fresh pitch with a client, start selling to a client? It's going to be a very difficult thing. We are at this exact juncture where in July, August, some of these companies are going to take this call and move it. So whatever that they have to do probably has to be done. Is there something that can be done while people are being moved into ESIC, but at the same time, we can kind of look at other product offerings to clients from broker side?
So very good. Very good and a very relevant question, Sajja. So again, I'll expand that question that you asked into two parts. What do we do now? And what is it that we should be doing going forward? This is again an output of the decision taken by government to move certain wage code and thereby a lot of employees moving to ESIC. So what can we do for our existing clients right now? First and foremost is again moving away, and maybe that is what is required as a need of our anyway space for all GMC portfolios, moving away the discussion from price to benefit. Now, the remaining population that is there, which is currently covered under the existing GMC pop, are they having the right benefits? Are the benefits benchmarked within their industry as well as globally? Are they also having adequacy of sum insured? Because that will all eventually lead to growth in premiums. And that is what you need to start talking to in terms of consulting the clients better. I'm sure a bit of this is happening right now, but much more rigor is expected out there. That will surely lead to growth of premiums in existing clients. That will surely lead to better coverage and ensuring right benefits. Second is providing a kind of, again, a more of a consultative advisory to the clients, comparison of services under ESIC to what a full-fledged group medical claim policy can provide. And there is a difference. At the end of the day, this is a policy which is service-oriented, where you are going to make somebody save their lives by providing timely help in form of financial. That is where you need to harp upon. And beyond that, if you ask me, GMC, I think there are many opportunities here. India is growing. We have close to almost probably 60% of manufacturing happening through SMEs. Fire is under fire. They too take fire policy. But they do take GMC policy? Probably not. That is where, as SBI, we are one of the largest insurers of SMEs in India, and that is where the opportunity for cross-sell happens. And that is where brokers have an opportunity. So one is you acquire business that is there by being competitive on price, service, etc. One is you grow the market. That is why I think the next line of opportunity lies. Another segment, which is something which is very close to my heart, is GCCs. India will see advent of a lot of GCCs coming in. That is another sector where specialized products, advisory from brokers, products created by the insurers to cater to those needs, differentiated service propositions will make a difference. So yes, in existing clients, give them the difference between benefits of ESIC to a regular policy, check the adequacy of coverage, enhance the coverages, and we can grow business. And in new sectors, SME as well as GC is what I think should be looking for.
Thank you. I think slightly moving from the regular one, I think I'll come to again Rajiv sir. While the industry is growing on one side, on the other side, there's a retail insurance penetration which remains low in tier 2, tier 3, and towns beyond, right, and rural country. So what do you think are some of the biggest barriers in adoption there? And do you see any specific opportunity for brokers in that area as well? Like I'm sure today there are quite a few affinity programs also that run. But do you see increasingly affinity being able to take care of it and any opportunities in that segment which can help kind of improve penetration in those areas as well?
Tier 2, hello. Tier 2, tier 3, the challenge being the insurance awareness is very low. And moreover, our distribution channels are not that robust because the costing is very high. And this is an opportunity, I believe. If you see all tier 2, tier 3 cities are participating, whether it is mutual fund shares, they're participating in the capital appreciation. And that was done very long back. The only challenge is that the mutual fund, you have an option, you get back something. Insurance is like a intangible product, but that can also be built upon. We can offer some wellness programs. Okay, the claim-free year is there. So that kind of awareness can be created. That is where brokers come into. Of course, revenue would be lesser as compared to the metro cities. But this is an opportunity. Already the saturation point has reached. Whether it is a physical kind of thing, even for e-commerce sites, or this platform also, considering that Bima Sugam has also come. So a lot of competition is there and it's a contemporary product. So these brokers have to play a very important role and it is in their interest also. So initially the revenues would be lesser. And through affinity, we have seen that affinity programs are generally profitable. Whatever accounts we have underwritten, they are profitable. But the opportunity has not been explored. And especially if we see the tier 2, tier 3 cities, mom and pop stores are there. And this e-commerce are taking so much of discount. So we can always convince our FMCG clients to offer them these affinity products so that they can attach to them. And this is an opportunity for everybody, whether it's an insurance company and moreover for brokers.
Thank you, sir. Ma'am, to you, on the same part, right, which is basically tier 2, tier 3, one is, probably we can use affinity to kind of get there and kind of do much. But then there's also at times there's discussions which keep coming in a few other countries kind of thing where entire population gets covered under a state-sponsored scheme kind of thing. In India, again, when we speak about you also said very well that, we have a lot of population who's really not at the same time, you also have a population which is a bit educated also, but still does not end up buying despite it coming at the cost of a mobile phone kind of a thing, right? So what do you see? Do you see that, eventually for us to kind of achieve 100% coverage is that we have to get towards somewhere the government taking up entire thing? At the same time, that has an impact on indirect taxes because it's going to go from our taxes only, right? So where do you see this entire thing coming up?
Okay. So, very rightly said that, if we have to achieve for insurance for all by 2047, so some concrete measures have to be taken, and one of those measures can be 100% state, government-backed insurance programs. But in my opinion, in India, we are looking for insurance for all, but not insurance backed by because keeping in view our fiscal condition, it will not be a good option to rely entirely on the government-backed schemes, and there has to be a hybrid model. So what I feel is that government can continue to support the underprivileged class and the below poverty line population who cannot afford the insurance coverage as per se, and at the same time, because if you see that the government sponsored programs are mainly, they are like customized, like not exactly, they are a typical type of coverage is provided, and there is no like scope of innovation there. And what today's population, the educated population and those who can afford it, they want everything under the roof, like under the sky. They want to be covered, they want to, as mentioned by my one of the panelists, that everything now we are moving towards that model. Like I still remember that in my insurance, during the time I was handling health insurance. Right now I'm not looking after health insurance per se, but there was a time when I was actively looking after the corporates and their particular GMC requirements. So they wanted the wellness to be a part of insurance program. And that wellness, like it included the gym memberships also, and yoga memberships, and treadmill, cost of treadmill and all fitness equipment as such. So what I feel is that there has to be a hybrid model wherein the government should create a program like covering the, this Ayushman Bharat scheme. And at the same time, the companies should, they should continue to evolve, and those who can afford it, they can continue with the self-sustainable, like on the self-sponsored model itself. And the employers can also play a very big role. So, in fact, the corporates, they have a major responsibility. Insurers are trying their level best to generate awareness. And what I think is that with the advent of this Bima Sugam, the health product, which is very soon, it's going to be launched, it will give a definite breakthrough in the accessibility of insurance. And the taxpayer money, I think we should let it confine to only the people who can't afford it, not universally.
So before we take the question, one small last one. If you were to kind of meet 5 years from now, what is the largest thing that you say in quick 1 or 2 words? What would have changed in health insurance?
So if I think, visualize 5 years from now, I would see a model which is more like customer-centric. We are moving towards an extreme customer-centric metrics, and with a lot of digital sales happening, like even at the click of the button from your own phone, if general public can buy, like they are doing like UPI, this UPI revolution, I see a health revolution, health insurance revolution taking place. And at the same time, at the back of the mind, like people should not 5 years from now, I feel that people should not take health insurance only that in the times of crisis they will have to take, but as a essential part of their financial this planning. Health insurance should be at the prime, and then moving towards a 100% cashless model with the least like emphasis on this reimbursement claims. So this is my vision after 5 years, and with the universal, this is our motto, that insurance for all. I think the IBA's tagline is something like that. Sabki Suraksha, I've heard, I just exactly don't remember, but it's a very catchy phrase. So this is my vision. Thank you.
How about you? A quick one, one large thing that you think would have changed in 5 years on health insurance from now?
So 5 years from now, I see health will be bought, not sold. And why I feel that is, possibly repeating one of the previous points, it will be offered integrated across value streams, across pre, post, and indemnity OPD, pharmacy, doctor, everything will be one single piece offered by possibly one single player, and there will be a queue to buy. It won't need to be sold.
Nenu, on the GMC side, what do you think 5 years from now would change if you were to look down the line?
I would say on GMC as well as more from a consumer behavior, 5 years down the line, what will change and what is happening in all other industries today is power of choice. Customer would want choices and they would want power. When say, I want this, out of this 10 covers, this 5 suit to me. With the person next employee to me, these 3 covers suit to me. It's there now, but not so prevalent. So that power of choice they would want. Second is instant gratification of service. Today we live in a world of Gen Zs or whatever we call that. It's instant gratification. I want policy now. Claim should be settled in 5 minutes. I want gym membership today. That is what is something that I look for: power of choice and instant gratification of service.
Probably we go to the US model where, hospitalization happens and the bill comes to your home 6 months later.
Possible.
Insurer settle this much, you pay now this much.
Eventually, we'll have to aim for that. If we are going to be a developed country, we'll have to start looking at what developed country means like.
Rajiv sir, you, 5 years from now?
Whole journey would be digital, I will believe. Whole journey should be digital. As of now, we are this journey is refined, is restricted to only the buying of policy, getting the policy. The whole claims will be settled through this mobile app only, and that should be the aim. Everything should be through mobile only. No physical document. As of now, we are already offering on multiple corporates scanned copy of documents. We are settling this reimbursement claims. Why not for the retail? So that would be my vision.
I think we have a couple of questions we'll just quickly take. Is there any thought being given to multi-year health products to reduce the annual renewal pressure? If I'm not wrong, the gentleman whosoever has asked, is this around, because on retail there is multi-year. I'm assuming this is being asked on group. JV, you want to take this question given that you had some conversations in this in the past? On GMC side, multi-year?
So GMC side also multi-year contracts are being written. And these are also being written with agreed, or let me say pre-agreed clauses on where the policies will end. For example, if the policy ends between X to Y, the rate continues. If it's lower than X, you get a discount. If it's higher than X, we share. So those contracts are actually already live in the industry, and so this is the reality already.
Thank you. I think the double bill means, I've well eaten up into the next one.
Yeah, I know. I'll add to the multi-year part. On the GMC side,
the bill thrice now. You have to make it.
Yeah, on the GMC side, I would see cooperation for all of the players present over here along with us. If you don't lure the customer on giving better price every year, I'm sure this will work, because it's in the interest of everyone that we continue to have more and more multi-year health contracts on GMC side.
Thank you. Thanks a lot.
Thank you.
It's my pleasure hosting such a lovely panel with a mixed experience. Thanks a lot. Thank you, gentlemen.
We should thank the audience for
thanks to the entire audience that that especially for a post-lunch session, we didn't expect so many people to be here in the room. Thank you once again.
So thank you to our panelists. May I request Ms. Manisha Dosa to please be joining us here on the stage and presenting the mementos. So thank you to all our very experienced panelists. Thanking them for sharing with us their more innovative ideas and solutions towards addressing health insurance, adding more scale to it in the larger interest of the policyholders. And thank you to our moderator. Thank you. We'll have a group photograph. Thank you again to the panelists. Also, thank you to Ms. Monisha. Thank you, ma'am. So we move to the next session, the contours of an effective ADR for commercial insurance claims, looking into these alternative dispute resolution mechanisms, mediation, arbitration, and other alternative mechanisms that can actually complement the legal process, reduce litigation, enhance customer trust. For I think all of us understand that a justice delay can actually diminish the very purpose of insurance. So we have a fireside chat with our expert panelist on ADR. And I invite our moderator, Shri Mohan S., to be kindly taking center stage. Our panelist, Shri Bipul Khanduri, the Senior Consultant, Khaitan Legal Associates, a veteran of the industry who advises clients on insurance law, regulation, and strategic risk management. And as a senior consultant at Khaitan Legal Associate, he brings a unique blend of the industry expertise and then the legal insight to the evolving insurance landscape. Our next panelist, Shri Vivek Johar from Protocol, a communication expert, a respected leader who's been associated with executive learning and professional development. Work focuses on enhancing leadership, effectiveness, executive presence, and organization capability. Shri Hari Radhakrishnan, a seasoned insurance professional who's contributed significantly to strengthening insurance distribution, business strategy, and customer-focused solutions. And inviting now Shri S. Satish Kumar, the Chief Distribution Officer at Royal Sundaram General Insurance. He leads the company's distribution strategy across multiple channels with extensive experience in sales, partnerships, and business development. He's been instrumental in expanding the market reach while delivering the customer-centric insurance solutions. 30 minutes to this session. 5 minutes before that, we are going to be just ringing a bell just to indicate that the questions from the audience are going to be flashed on the screen.
Yeah, your panel on alternate disputes cannot be creating a dispute. We'll stick to the time. So
starting with the dispute.
Yeah, so it's a very power-packed panel, and on this issue of ADR, the simple background to this was that all of you know that commercial insurance claims actually with a lot of disputes. In fact, the vast majority of litigation in India in the consumer forums or in other available arbitrations are on the insurance segment. And we wanted to see, you all know justice delayed is justice denied. Therefore, we have a very powerful panel. She gave an introduction, but Bipul Khanduri has been heading, he had a long stint in Oriental Insurance. He headed the liability practice in HDFC Ergo in Aon, and as well as in Unison, and then now with Khaitan Legal. We have Mr. Vivek Johar, who's a very leading surveyor, and he specializes in property in the oil and energy segment, as also in petrochemical, and he's done large surveys, not just in India, but across Nepal, Sri Lanka, entire SAARC countries, handled claims as large as 1,500 crores, etc. And then Hari Radhakrishnan doesn't require an introduction. He will shoot me if I give him an introduction, because the kit that you're going to take it's going to contain a book written by him, and is too well known to be introduced actually. Mr. Satish Kumar actually shares one thing with IBAI. It is also his birthday today, so let's wish him a happy birthday. Yes, that's right. He's the Chief Distribution Officer of RSA, and is quite a very, I would say, a very passionate insurance professional whom I have known over the decades. Coming to the issue of ADR, I would like to start with my friend Bipul. Bipul, if you see, there is a lot of talk about need for an effective ADR in commercial insurance claims. How do you see this, especially in the light of what ails the current arbitration process, or almost the ombudsman which doesn't exist for commercial claims? So your thoughts on that?
Thanks, Mohan, for asking that question, and good afternoon, everyone. Typically, I mean, the insurance contracts are the contingent contracts, and the dispute that arises in them is slightly different from what other typical normal contracts would otherwise be having. The cause of dispute is mainly that insured feels the insurer has either rejected the claim is denied, or there is lack of response from on the part of the insurer. Or at times it is also that the insurer has simply not settled the claim what was being expected, and it results into a dispute. And this dispute is not new. It has been going on for a long time. The thing is that there was a process to settle this claim, but apparently that was found, settle this dispute, and apparently it was found not very satisfactory. So the system or the government or the judicial process, it came up with alternative arrangements So if we typically look at commercial contracts, there are 4 options to take the dispute for settlement. One of them is contractual, which is arbitration, and other 3 are judicial or quasi-judicial. So they are typically commercial court or civil courts. Then there is a process of mediation and consumer forum. Now, and I'll just try to keep it short considering the time limitation we have. If you look at it, what you ask the question, what ails the system? If you look at it, they are part of more or less the same system of judicial process that is there in India. Typically, India follows what is known as a adversarial legal process. If you look at it, what happens is that basically it's the lawyers who drive the case, and a judge sits as a neutral person who basically listens and then decides on the merit of argument. Now, if you look at all these 4 options that are there, arbitration, even though it is contractual, but the fact is that typically when arbitration is invoked, first of all, there is a limitation to that because under the legacy arbitration contract that we have, clause that we have, arbitration can be invoked only for quantum, not for admissibility. Now, of course, IRDA has come up with a circular which permits for the admissibility also to be included in arbitration. But again, there is a twist in that circular. It says that it has to be a separate agreement and not a part of it does not mandate it being a part of the policy. Typically, I mean, if somebody wants to invoke admissibility as a arbitrable clause, obviously the insurers would not agree for it at the time of the claim. But the fact is that when it comes to appointing an arbitrator, typically, if the insurer were to appoint an arbitrator who is from the insurance, the other party would not be very happy with that because they would think that he would tend to, not be very partial towards them. Similarly, if the industry appoints or nominates an arbitrator who's going to be from the industry, possibly the insurers would not agree. So what they do is they settle on the easiest way that they appoint somebody from a legal or retired judge. Now, when the judge comes in, he brings all the process of what is the civil case like. So essentially, the process that arbitration follows is no different from it's like a private civil case. With the lawyers being involved, with all the the hearings, the oral submissions, the cross-examination, and while the lawyers might be interested in presenting the best side of their case and their client, the thing is that it tends to prolong because you are literally starting from scratch with your insistence on oral submissions. It becomes, then you look at other, they are no different, whether it's so what is the dissatisfaction among all these 4? Essentially, it is that cases tend to be very prolonged. And obviously, the longer the case, the cost goes up. And the customer is pretty unhappy. He does not get his judgment in time. And moreover, it costs him more. So that is what, I won't call it ailing a system, but what I want to land over here in this panel and the audience is, whether it's the mechanism which is at fault or whether it is a component of that mechanism that needs to be, because ultimately if you look at it, the underlying mechanism in all 4 of these dispute resolution is same. And each one of these options have come up only as an alternative to what was the previously existing mechanism.
Thank you. So in a sense, you're saying that it's more even quantum. You're too good a person to say nothing else, but then you pointed out what exactly areas of improvement. Coming to Mr. Vivek Johar, as a surveyor, sir, what many a time surveyors have been called upon to do court appearances, both in sort of disputes, whether it is forum or when it is protracted. How do you think an efficient time-bound ADR mechanism will help the surveyor community itself, apart from helping the policyholder into quick justice?
See, good afternoon, everybody. the surveyors or the loss adjusters are called in for the arbitration or the court hearings, this normally is in a very large or a complex claims. We hardly are called in for very small claims, and I would say in dispute, majority of the claims would be less than a particular threshold, which does require our time after our issuance of the survey report is towards the queries of the underwriters or the not unsatisfactories from the satisfaction from the client. So there the time goes in. If we have an effective resolution method, of course, this time savings would be saved for us, but more for the insured or the insurers where they have that kind of disputes going on for small claims also. That can be it has to be very effective. And for the very effective, you have to be a very simple moderation based something topic wherein they can settle the claim in a very fast manner, not like arbitration, or even if arbitration also it takes years together for the settlement of the claim. For a smaller claims, it will not be cost effective. It has to be very, very small, very, very efficient. And technology is one thing which we should be thinking of to bringing any kind of technology where it looks in, it takes care of all the documents, and there we can have a very effective ADR onto this. Yeah.
Okay. Thank you for that. So that's a new perspective on how small claims can be handled and technology leveraging can be done. I'll go to the far end. Satish, as an insurer, most of the time whenever we talk of ADR, the first thing that comes to light for a person is it's something the insurer will frown on in terms. But I know we've been discussing this many times. There are many responsible insurers who want quick delivery of justice, and they would want that policyholder to feel that they have a powerful instrument in their hand, which is less in doubt, and if the mechanism is fast. How do you think an effective ADR mechanism would, in commercial claims, which is time bound and within reach of especially MSME segment, would be actually beneficial to the insurer from your perspective?
Very good afternoon to all. First of all, congratulations for IBAI for celebrating the Silver Jubilee celebrations. And thanks for this opportunity. It reminds me, my former chairman, Mr. G.K. Raman, in his inaugural address in 2001 when Royal Sundaram was launched, he made a statement that we are in the business of paying claims. Even after 2 decades today, it continues to be the very purpose of the insurance company exist. And coming to Mohan's question, I think all the insurers across geography are striving and putting their sustained efforts to have a fair, transparent and speedy settlement of claims. But despite the true intentions of all the stakeholders, dispute do arise. Then there is a question, should we look out some alternate mechanism to resolve this? From the insurer point of view, if you ask me, I firmly believe yes. Especially, as you said, to start with for MSME clients, it is absolutely necessary because they lack expertise, time, and the cost to follow the long journey of the legal proceedings. This will enhance their faith on the overall ecosystem that there is an independent body which can give me a quick resolution if there is a need arises. From the insurer point of view, we are also having an intention to settle the genuine claims in a quick and fast manner. But sometimes different stakeholders take positions and we are not able to resolve it. Probably ADR could be an option where insurers are also looking at equally quick settlement, keeping the legal end as well as balancing the technical and financial aspects of the claim. At the same time, like Vivek was mentioning, it has to be very simple, probably could be digital to a larger extent, and it should balance the rights of the insured as well as it should not entrench into the basic rights of the insurer as per the contractual conditions. So obviously, I would recommend that this has to be there so that it will help insurer to demonstrate their intention to settle the claim quickly, as well as improve the faith on the MSME claims to look out insurance as a better option for them to protect.
Thank you, sir. Hari, I'm looking at you as, I asked him from a surveyor perspective. For you, I am asking you a three-dimensional view or a 360-degree view. You see, we see in the property segment on which you have worked hell a lot actually, that a lot of discounting happens periodically and sometimes irrational pricing happens too. Do you think an effective ADR mechanism which gives time-bound remedy will actually reduce the propensity and the price discovery of a free market will be at a responsible point? Will that objective be settled? Your thoughts on that?
Yeah, the essence of an insurance policy is the certainty of contract. When somebody is buying a policy, he wants contract certainty that it will be at the time of claim interpreted in a fair and just manner, so that he gets what is contractually provided for in the policy. So when there is irrational pricing, heavy discounting as is happening in the market, and in fact a couple of days back there has been a admonition from the regulator also to various insurance companies that the pricing which is being followed in the market is unscientific and has fallen to very low levels. And the claim paying ability of the insurers itself will come into question. So there can be a situation where some insurers may be tempted to use the long winding procedures of arbitration or civil dispute resolution to take advantage of that and not to pay claims or delay paying claims as long as possible. So if there is a effective ADR mechanism in place which ensures that the claims are settled in a quick and prompt manner, then there will be pressure on the insurers because they cannot rely on inefficiencies of the system to avoid kicking the can down the road. They will have to settle the claim. So underwriting discipline could be brought in by a more effective ADR mechanism. It need not be the only thing which will be driving underwriting discipline, but ADR can definitely be, an effective ADR mechanism can definitely be one of the drivers for underwriting discipline.
Thank you so much, Hari. I can see in the clock we have 14 more minutes to go. So I come to Satish actually. On this issue of the ADR itself, just before I come to that, actually our president, Mr. Narendra Barindwal, had a deep dive talk on this with the regulator, and the regulator has even asked IBAI to come out with a sort of a report or a document asking us how we see the contours of this system should be. Even he has asked us to make it going into granular detail on it, which I want professionals like you actually contributing to this effort of IBAI. So in that end, very quickly, if I were to ask you, what do you think are those cases that could, already one thing came in the first round, it must be small claims. So I'm just asking you this, it must be simple, not very complicated stuff. So what do you think are the fit cases for, and what do you think are not so fit cases at all for ADR to touch actually?
Okay. See, for a fit case, I would see one is quantum dispute. Second, policy interpretation where insurers differ from the market practice. Third, there should be documentation gap in the submission. Fourth, there could be a disagreement on the surveyor assessment in terms of salvage, underinsurance, depreciation, and some disallowance, or even a tax interpretation like that. So these are all the scenarios I would say that this can be resolved through ADR, because there is a admissibility part is there. Only we need to arrive at some quantum dispute and some interpretation part, which cannot be at any point of time is one, suspected fraud. any misrepresentation or non-disclosure of facts, any legal, in the sense, any criminal intent involved by the insured or by the third party. So these are all the scenarios where we should leave it to the existing system to continue. Probably the rest of it can be managed with the ADR. I think the majority may fit into the first part, which will help us in terms of resolving the claims to a quick manner as well as to the satisfaction of the client. Also have a legal end to it because of the system in place.
Superb. You can't get clearer than that. Again, you are coming to quantum, and that brings me to what Bipul had also told earlier. I will ask Hari this question. Arbitration, which is there, you've also become an arbitrator now. So, how do you think an effective ADR can specifically remove the cost overrun and the time overrun of arbitration? What would be the structure that you would envisage? Broad structure.
See, the Arbitration Act provides for time limits. It also provides a schedule of fees also. But still, the problem remains that the arbitration takes years, and the fees also sometimes is exorbitant. Why is it happening? Because like every law, there are loopholes. The Arbitration Act says that you have to pass an award within 12 months. But within 12 months of what? 12 months of completion of pleadings. So pleadings can take any amount of time. Number of hearings can take years. So there is a loophole there. Then it says that the 12 months time can be extended by further 6 months by agreement of the parties. And then you can go to court and get it even further extended. So the arbitration can be delayed. Then the second is the fees. The fees is it's not a binding thing. It's binding only when the parties have not agreed to a certain fixed fees. Otherwise, that is also open. So essentially, arbitration becomes time-consuming and costly. This can be prevented if there is a permanent council of arbitration. There are a lot of expert people in the industry, retired people, subject matter experts. So many people are available who are willing to work for the industry at a reasonable fees, that they are willing to commit time. So IRDA or GA Council can create a permanent body, a permanent council of arbitration, where experts can be appointed and they can conduct arbitration or mediation and resolve the disputes in a fast and timely manner. All these processes and hearings and evidence examination, evidence taking, witness examination, all these things are not required in insurance claims. Insurance claim is what is an insurance claim? It is a bunch of papers. So you don't need to call people. You can do a file-based adjudication with minimal amount of hearings. So it can be done in a very fast and efficient manner. All that is needed is will to implement a mechanism for that. That's what I would think.
So in effect, you're saying a dispute of fact should not come, a dispute of law only can be in terms of, that's what I understand.
Yeah, there is no point in relitigating the facts. The facts are there on the file. So you shouldn't bring new things into it. Whatever is there is there. What is required is the interpretation thing. So is it has it been correctly interpreted by the insurer or the loss adjuster? That is the only matter which we should go into.
Thank you, Hari. Vivek sir, the role of surveyor, which is very significant in even dispute resolution. Apart from that, what would you see as a role of a surveyor? Do you see that an independent second surveyor should be in the arbitral process or the same surveyor? So what are your thoughts on how the mechanism of the surveyor as a dispute that has come can be used to effectively speed and quicken this in a revised model for effective ADR?
So when a dispute has arisen, surveyor himself or his survey report is part of that dispute itself. So the same surveyor would always be a sort of thing, always try to justify his acts. But at the same time, when you see that ADR has to be, effective ADR has to be there, a surveyor has to be on the panel. it could be a different surveyor. It has to be a different surveyor, because the other person who is part of the panel might not be technical in terms of loss assessment. He would say that yes, interpretation of the policy is that the claim is payable, but how much is payable? Normally we see is that the claim bill of the insured is granted as a thing, which is again unjust sort of thing. So the thing is that yes, surveyor has to be there who can give the right kind of assessment, that this, in case ADR is resolved and the thing is resolved that yes, the claim is payable, to what extent it has to be payable, the surveyor will come into play. The first and the foremost would be this thing. And again, coming back, again, we ought to have this kind of, because we do have arbitrations, we do have court litigations, which everybody is agreeing to, which takes years and years together. And it's mostly in the large and complex cases when we say that, yes, this case is known. But smaller clients or MSCs, where smaller claims are there, they don't just go into any kind of, or they go into litigation and they waiting for years and years together. They have to come to a conclusion which can only be effective ADR of within a threshold limit. And the qualification of coming of that claim into the ADR role also has to be taken into account. Yeah.
So yes, it's good to involve. I understand that from where you come, that it's point well taken. So coming to you, people, you are a very unique person. You have been an insurer. You're now a legal professional too. So with that sort of an insight, what do you think? An ombudsman was doing for retail claims. If suppose that gets extended, recently regulator talked about internal ombudsman too, and then also you whenever I've discussed with you, you talked about this claims panchayat. So can you throw light on both these things?
So Mohan, claim panchayat was just a phrase or a term that I used. Basically, I'll just touch upon what I said in the first part when I spoke about the underlying system, which kind of is, provides the chases for these resolution methods that we currently have. As Hari mentioned, arbitration was apparently an alternative for claim resolution method, dispute resolution method, which is private between the two parties. You enter into a contract and you agree that instead of going to the normal, the usual judicial forums, you try to settle it out yourself. But apparently that is also not working. And the reason which I see, and that's my personal opinion, it can be subjective. That reason I see is that it is because of the way it is conducted. India, and like all English-speaking countries which follow the English law, we have got what is known as an adversarial system of model of this judicial delivery. And over there, basically, it's the lawyers who are, driving the force. And the entire thing is verbal, it is oral. You have to make this. So even if the judge knows, what the case is about, yet still you have to present it so that charges can be framed, the cases can be decided, and it has to be agreed. Similarly, the oral, the dispositions that are there, plus cross-examination, plus Evidence Act and CPC Act, they tend to prolong these, and so they effectively lose the meaning because a case denied or a claim, a justice delayed is as good as a justice delayed. Now you talk about ombudsman. It's not that every country follows only one system of judicial process. Both systems exist. So essentially, there are two systems. For those who are unfamiliar, let me explain what adversarial and other is an inquisitorial system. What inquisitorial model is. As I said, adversarial is where the lawyers drive it. Judge is essentially a neutral party who listens to the lawyer and decides on the merit of argument as to what decision he has to give. In inquisitorial, it's the judge who is driving it. Lawyers are not that big a force. They are just trying to assist the judge. It is generally a codified law. It's a Roman law practiced in most of the Europe. Now, if you look at it, ombudsman in India also in the retail, it is basically an inquisitorial system. You don't have a lawyers arguing before a ombudsman. He sits there, he decides on his own, and he gives a judgment. A lawyer might assist him. Retail claims are relatively simple, so maybe he does not require assistance of a lawyer in being able to
or do they feel lawyers will complicate the process?
they will not complicate. I mean, I would say, that thoughts does come in that they are probably trying to prolong it only for a motivated interest. But I would say, as a lawyer now that I work as one, that their interest is only to present the best case for their client. And obviously, in that, they don't want to take shortcuts. So both the parties, try to outbid each other in trying to prove their case. And it definitely prolongs the case. But in inquisitorial system where you have a ombudsman, and ombudsman incidentally is a European word, is a Scandinavian in nature, in origin. So ombudsmen were Scandinavian, and it was basically for public authorities that they were appointing it. Now, if you look at it, even arbitration, it's a very effective method of settling claims. Only thing is, as I said, because we invite judges over there and they bring their own, the way that they have worked. So they try to bring in the lawyers, and judges basically are generalists. They do not know about the insurance, the nuances of the insurance. If you have to put a business interruption claim from them, they have to be, they have to literally learn the whole thing new. And therefore, the lawyers, the experts, and all these things come in. But if you look at it, arbitration is a very straightforward clause. It is under Section 19 of arbitration. It is not bound by CPC or Evidence Act. You can have, like Panchayat that was there earlier. You can have appointed people from insurers, from brokers, from the clients, the experts over there, and they drive the case. There could be a legal person who can, assist them in that. And all this, what I feel, what this will do is will cut down the time very, very sharply. You don't have endless arguments going on, adjournments going on, tariq per tariq thing does not happen over here. And you have a time limit in which it can be done. So I feel this is what ombudsman, if you extend it to commercial claims, and probably because there are 4 or 5 of the experts sitting in it's a panel, it has to be different than retail one. That's why I called it Panchayat.
I know it's such a topic, half an hour, 40 minutes doesn't do justice to it, especially with people with decades of experience, but it's a good starting point, and we will all be associated in making this report. For example, Hari is a very famous votary of this, something called mid-RB calls. So you mediate first and then arbitrate later. Before we close, some thoughts on that sort of thing that you have in mind?
Yeah, many times the things that go into arbitration need not be arbitrated. Arbitration is mainly for complex matters and those which require intense, arbitration is an intense process. But in many cases, there is nothing to arbitrate. It's all, sometimes it is just ego issues or some other things which need not go into arbitration. Those can be resolved by mediation. So if there is 1 or 2 small issues which needs to be thrashed out, then it can be done by mediation. And mediation, if it precedes arbitration, there is another advantage also. If there are 5 issues which is holding up the claim, if 2 issues are already resolved by mediation, then what remains for arbitration is only 3. Otherwise, you are spending entire time in arbitration for 5 issues. So the process gets more efficient if you first try mediation and then go into arbitration.
Yeah, super. There is an audience question on the fact that they don't agree with this, that only quantum disputes should be going into an effective area. There should be admissibility issues also. That is, for instance, if a claim is denied or repudiated, it must be part of this. I completely agree with you. That was not the idea. They said, what are the aspects of a new already you have admissibility issues which is coming into this. So quantum dispute should also be the already arbitration. So the extension of arbitration or med-arb is for quantum disputes as well. I guess anybody wants to add to that? If you can see the question behind you, it is there in that. Yeah. Why not?
So meanwhile, replying to this question, which what we are talking is, I've just told that the criteria of incoming into the ADR for any claim to come into it, that has to be fixed. It could be admissibility, it could be quantum, or that both of the things can be taken care of.
So admissibility is not the only issue. It is admissibility as well as the quantum.
Yeah, so I agree with them. Basically, you can't separate just admissibility from the quantum. See, the one point that has often been made that it should be only, the ADR mechanism should only be deciding on matter of facts, not on matter of law. But typically, the current legacy arbitration clause that we have, which decides only on quantum. Now, quantum is a fact-heavy issue, whereas admissibility is law-heavy issue. And there has been a demand from the broker association itself that arbitration clause should include both admissibility and... So therefore, there is definitely a need that any ADR that we think of should not only be limited to one particular, but should be...
So that answers, yes, the point well taken. Yes, sir.
Yeah, so, good afternoon, everyone. My name is Jay Govind Tripathi. I'm the CEO of Sworgin Insurance Broker Private Limited. This question is not in my official capacity. This question is in the capacity of the, the interest of the policyholder, and which is, I think, the primary role of the Insurance Broker Association of India. Now, the point which the panel is talking about, 2023, 27th October, there was a guidance given by the Honorable Supreme Court to the IRDA to implement and change the arbitration clause provision in all the commercial line policy, remove it from the retail policy, and put it in all the commercial line policy to include even the repudiation and denial also as a scope of the arbitration. Now, 3 years has been over. I think this panel is again discussing the same important topic, but my suggestion and recommendation to the Insurance Broker Association of India would be to go back to the IRDA and say, and monitor it with the insurer, that with the interest and involvement of the insurer, whether they have actually implemented this across all the commercial line policy. If not, there should be some panel set up, and this is only to protect the interest of the policyholder today and also in the coming future. So this is my question as well as suggestion that, up to what level insurer have been able to incorporate an arbitration clause in the commercial line policy, which also addresses the repudiation dispute, not only the quantum dispute, which is a precondition in all the commercial line policy, that precondition claim being admitted, quantum being under dispute. That should not work. I think industry has to take a shift to make sure that policyholders' interest is adequately protected, and other, the provision which this House has recommended. Thank you. And his thought on this.
Try to answer that question. Why, obviously, everybody thought that insurer regulator has goofed up when it came up with the circular. We said that there has to be a separate agreement for, why should it not be built into the policy itself? But if you look at it, I mean, probably what regulator did was with infinite wisdom, he decided that there has to be a separate agreement. Because an agreement of this nature, arbitration is an agreement between two parties. Well, it will work, in case of insurances where the parties are likely to remain the same at the time of the claim. So, for instance, in a property or say in casualty liability, where the insurance remains, it's non-assignable. It works because what regulator has come up with is a general this thing that there can be a separate agreement. But in case of a marine, where the insured changes, where the policies are assigned, the same agreement cannot hold for them. That if you sell assign a policy to somebody, say in Singapore, probably you would like to have the dispute settled through the normal procedures over there instead of the arbitration clause which is there in India. So what brokers need to do and what probably the insurers and regulators need to agree is that maybe you can agree at the time of the issuance of policies of non-assignable nature to have the revised arbitration clause built into it.
Absolutely. The underlying assumption is in a non-assignable policy, you are assuming actually that they wouldn't be still agreeing on taking the arbitration out of the Arbitration Act or jurisdiction. That underlying assumption is there. The implied assumption, I understand that. It's been an interesting discussion, as I told you. Before we promised them that we are not going to create a dispute on this. So thank you all very much, and it was amazing to have you all here.
Thank you, everybody. Thank you.
Thank you.
Thank you, and may I request Mr. Rastogi to please join us here on the stage in presenting the mementos. And Mohan sir, you were talking about the dispute. We are ensuring that dispute resolution, you will be part of the next session also. Yeah, then you join as a panelist now. So thank you once again to our very senior insurers, surveyors, legal experts, arbitrators. Thank you very much for this session. The next session, ladies and gentlemen, we focus on the small, medium enterprises who stand as engines of our growth, the backbone of Indian economy, and towards strengthening them and hand-holding them, especially in the time of need and crisis, for they in fact get subjected to some of the major risk, be it again various financial risks, be it the change in the tariffs or the export-import law or the supply chain disruptions, the technological advancement, the geopolitical changes, and probably they need the insurance cover the most. So this discussion with our panelists is going to be focusing on how IBAI can enable, support and champion their growth journey. I invite our moderator first to be taking center stage, Shri Ashok Kumar Jain. Inviting our panelist, Lipika Kalra, the General Manager, United India Insurance Company Limited. Representing one of India's oldest and most trusted public sector general insurance, she brings extensive experience in advancing customer-centric insurance solutions and strengthening the sector's commitment to inclusive risk protection. Inviting Shri Sunny Bhardwaj, the head broking InsurTech and emerging market, ICICI Lombard General Insurance Company, leads strategic partnerships across the broking and InsurTech ecosystem, driving innovation, digital collaboration, and expanding insurance accessibility. Shri Mandhi Juneja from Axis Max Life Insurance Company. He has played a pivotal role in expanding distribution networks and driving new growth initiatives, contributing to company's mission of delivering comprehensive protection, savings, and retirement solutions to millions of customers. And Mr. Mohan S., who was part of our previous panel, leading it, the chairman of Pavna Brokers, the vice president of IBAI, a veteran of the industry, and in fact, the idea of having a session for the SMEs has been his brainchild, I'm told. So good to have him here in this session. And with that, I hand over to our moderator, Mr. Jain.
Good afternoon. good to see such a big strength 2 sessions after lunch. So thank you for staying by. And this session, ma'am mentioned, is not about SME insurance, but it's about SME brokers. So we are talking about that. So this issue arose last couple of pointers before I start asking them some of the points. As in morning we heard that initially we had about in a couple of years time 30 or 40 brokers in the country. Now we have reached about 800. And more IRD has been giving licenses in even tier 2 and tier 3 cities. So now more or less every divisional headquarter has got a local homegrown broking company, which is good. Now obviously not everybody is going to go national, so they face different kind of challenges. Then another thing which we did last year, those of you remember when this 25th year celebration was launched, IBAI had commissioned a study by McKinsey about how do we move forward, what new frontiers can be broken in or opened in insurance. So one of the point came out is that which happens in many other industries, not that is specific to broking, that say few broker having a dominant market share. So then issue arose for the board that how do we support the brokers which are not so large in size, those who are possibly operating a single branch or 2 branches. So how do you support them? So this is the purpose of this discussion. We have got a fantastic panel. We have got a ma'am from oldest insurance company, which is down south, United. Sunny is like middle. Now he's the largest private insurer, represents ICICI Lombard. Then we have from life insurance, Mr. Mandir. And Mohan is very, very passionate about welfare of SME brokers. So very, very good. So I have this panel. So let me start. So what we'll do with this first question, I'll request you all to take this first question. Everybody can give one perspective on that. So now, as I explained, now SME broker represent like almost 90% of total broking community in the country. What do you believe is the single biggest opportunity, in your opinion, which SME brokers have got in the marketplace?
So, insurance, as we know, is the sunrise sector. So today, general insurance has a penetration of just 1%. Ample space for many players to come forward and earn well. So when we talk of SME brokers here, SMEs traditionally, I think, contribute around 30% of India's GDP. And only about 3% of SMEs are insured. These 3% that is insured also, in fact, is not taking insurance as a protection tool. Rather, they are taking insurance either as a compliance measure or probably as a collateral. So there is a lot of space there which an SME broker can fill in better than any large broker. More so because we cannot deny that insurance remains a personalized line of business. And the claim comes when the insured is already reeling through some misfortune. Then at that time, if the broker who is more localized stands by the insured, I think that fulfills a big part of his responsibilities. It makes the claim process also easier to handle and gives the necessary trust, confidence to the client also. So I wish in the next 5 years or so, there's a lot of big opportunities lying there for all SME brokers to come and win the unpenetrated general insurance segment and also contribute meaningfully in insurance awareness and penetration. Thank you.
Your take.
Yeah. So before I start answering this, I think I must congratulate IBI and the entire broking fraternity for 25 years. So what a journey it has been. I think right now you guys dominate 60 to 70% of the commercial market, right? And 40% of the total industry premium, which used to be roughly 12-13% contribution 10-12 years back. So I think the way you guys are growing, it's phenomenal. And I believe since morning, there has been a very, very less round of applause for the broking fraternity. So can we have a big round of applause, please? Yeah, so coming to this sector, 800 brokers. But the thing is, top 5 brokers contribute to 50% of the market. And if you go, another important stat, it was in fact published in IBAI study only. If you go to top 30 brokers, 97% of the industry premium is placed in top 30 brokers. So balance 770 brokers roughly are placing only 3%. So if I am a SME broker or a small broker who is not part of this 30, so should I be demotivated or motivated? In fact, if I'll be in their place, I'll be highly motivated because I should see this as a huge opportunity. And these top 30 or top 5 people, they have not earned it like just easily. They have also invested big time in I would say the right talent, right expertise. That is why they have reached here. So if I am a SME broker, I would see this as a huge opportunity. So this is one opportunity. Another opportunity, what is happening in our country. See, our country is going through a phase where I believe the investment cycle, we see capex investment, it's once in a lifetime opportunity. You see the number of GCCs coming, spending on infra, spending on renewable, new industrial corridors happening. So I see opportunity everywhere. But the problem is, everybody wants to focus just on the top 8-10 cities. When I travel to the likes of Cochin, Trivandrum, Jaipur, you can say smaller cities, Coimbatore, I see huge potential, lot of big clients, 5 to 10, 15 crore clients sitting there, being served by mostly agents, because the entire broking fraternity, most of them are fighting in the top 10 cities. So I see a lot of opportunity in India for these brokers, not only in this pie of the top 30, but also parallelly new products which are coming up. Another thing, traditionally, a lot of brokers have been very, very proud of that we do not do EB. We do not service EB, very low commission, service intensive business. We do only non-health. They used to say it with high proud. So that was right. If in the last 7-8 years, this was a correct statement to make. But now I think a lot of people need to reevaluate their business models, because if you see sitting today, group health is roughly 55 to 60% of the corporate business. Right, and it's going to become 70% of the corporate business in the next 2 years. So you cannot ignore 70% pie and just concentrate on the non-health segment. So I would highly encourage a lot of SME brokers also to invest heavily on this EB practice, because there's a lot of stuff that can be done and a lot of money can be made there. Yeah.
So thank you, Sunny, for this great insights. Yeah. Sir, you represent life insurance and any other thing, even general insurance you understand, so yeah.
I think, it's a big opportunity both in life and general. I'll pick it up from what he mentioned. I think right now, there is a huge opportunity because the way investments are coming, there is a push from the government on Make in India campaign. And there's tremendous amount of investment which is flowing into the country. Most of this will flow into MSMEs. There are mid and small size emerging enterprises. Which are run by promoters or shareholders, small group of people, being part of the manufacturing ecosystem. They carry a lot of risk, right? They have the requirement for detailed dialogue in terms of the risk that they face as a business would come in the form of liability, come in the form of succession planning, continuity of business, supply chain disruption, all of this which come in the gamut of general insurance. While we do take effort to talk about these things, I think we still miss one important factor, which is the biggest risk for these MSMEs is the person who is running that show. So we talk about all the other stuff, fire insurance, theft insurance, etc., a lot of things. But when we go to meet these MSMEs, we fail to talk about what if the owner promoter is not there tomorrow. To my mind, I think on the corporate side, this is one of the biggest opportunities. How we can de-risk this continuity and succession planning of business by ensuring the person who is running the show, the key man who is running the show, The other part of this story is on the retail side. I think most of the SME brokers are currently missing out on the retail segment of the business completely. I think this is where we need to start owning the customer right during his entire life cycle. So India is a young population. Merge this with the growth that we are witnessing in our economy, both in manufacturing and services. The disposable incomes are going up. If we catch people young, if we build a business model around the entire journey of their life stages, where throughout their life they will buy at least 7 to 8 policies towards meeting their investment and life insurance goals, we are actually missing a big opportunity here. We are only going around with the same group of customers, which are typically HNI. We are fighting hard to get the maximum share out of them. But we are actually not building a business model today which takes care of this important part. So I think the biggest opportunity for me is on 2 fronts. One is the key insurance for the people who are running businesses, and on the retail side, owning the customer early and working with him throughout his entire life cycle.
Thank you, Mohan. Your take?
My take is like, first, before I say that, no, you said I'm very passionate, but more than me, there's one person in the board who's more passionate, who egged me into talking to you all about this session, was CB Varghese. So I should place that on record.
CB, where are you? Yeah. I actually told him, CB, why not you come in?
No, absolutely. He's equally passionate, if not more. So that, what Mr. Sunny Bharat was saying is that report that was commissioned by us only, which you know, Mr. Ashok, is that it said 97%. We all know 80-20 principle, but this strange 97-3 principle which operates, 97% of the brokers doing 3% of the business. Most of my broking brethren will agree that this will have to change for the healthy growth of the industry. So, representing IBAI also, I would just take this opportunity to tell you all that IBAI has been doing quite a few things in terms of helping the small brokers. Say, some of the initiatives you have taken. For example, Mr. Rastogi is there. That the training that he did, you are part of Ashok and Hari Radhakrishna. Amazing. In fact, you extended it to even anybody who wants to join it. And I'll tell you, as a professional with 40 years experience, I can say the quality of those are extremely good. And it's a big hit with even the small brokers. People who cannot train their employees can actually benefit a lot, and the best part of it is you even put YouTube channels on it. A great initiative. BQP renewals, for example, made it at a very affordable cost for brokers, which actually helps the small broker in a big way. The recent compliance SOP that you have done, Rastogi has been part of it, and many other people have been part of it, is amazing, because compliance can be quite a nightmare for a small broker, as well as the rightly so compliance is increasing. There are several things to be done, but this discussion is at the right time. So 2 things will have to be done. One is how, as IBAI, we actually help the small brokers. Say, for instance, this DPDP Act and the fallout of it. For instance, the minimum fine is 50 crores. You try today taking a cyber insurance for 50 crores, it wouldn't cost you anything less than 35-40 lakhs. When you and me know the commission of the report that we commissioned, we even asked our fee to be on declaration basis for less than 1 crore. Quite a good few hundred brokers were less than 1 crore. And I am shuddered to think what would they do if they were to insure themselves. If they don't insure, the idea is even more frightening, that what happens if there is some release into the dark web and DPDP Act operates? Most of us collect sensitive data. So this conversation is going on at the right time. And coming to opportunities, yes, as Madam said, India is growing, and SME sector is also growing, and therefore opportunities are plenty. If right strategies are placed, actually, I think this industry is going to go enormously, and SME brokers can benefit.
Thank you, Mohan. So Mohan has already started rolling ball on the second question which I was to have. So maybe again I start with
my old habit.
He possibly anticipated the question. So, ma'am, what could, so the SME brokers some extent need bit of handholding, little bit of handholding, because capital is less, and even human capital is also less, because it's ultimately service business. So they need bit of handholding there. So how could, let's say, some example Mohan gave what IBAI is already done, and maybe adding some more points to that. So what could insurers and IBAI either together, individually? How could you think of some points which can be taken away for later on implementation?
Yeah, so as you said that they need the hand-holding in the beginning at least. So obviously they have to be guided about the client acquisitions, the sales pitch that they need to make. Then the product customization where both the insurer as well as IBAI can actually help. Insurer more so because they can actually bring about products which suit the palette of all the SMEs, their needs and other things. Then what kind of add-ons they could be suggesting, all that knowledge sharing sessions they can provide and guide the SME brokers. Not just that, there is the need of, a robust tech this available to them portal where they can actually compare the quotes of different insurers, the terms that are being suggested, so as to able to guide their insureds properly in that manner. So that kind of portal will also help. Then there are other issues where insurers can handhold, especially the claims part and the quote stat part, where the turnaround time, if the insurers be a little more supportive, they provide the quotes in time and beautifully structured to suit the SME's clientele. And then secondly, at the time of claims, if the services are smooth and seamless, it will only help the SME brokers to grow more, because ultimate test of any insurance is claim. So if the claim is settled properly and the SME broker is guided how to facilitate the whole process, how to guide their clients to get the fruit of the insurance policy, because ultimately that is where the entire insurance service foundation rests. So I think there both IBAI and the insurers can play a very pivotal role. Then sir talked about this BQP. So of course, this small SME brokers can be benefiting from succession planning also, because if they are resting their hopes only on the present BQP that they have, and suppose that BQP actually exits, so it will create a lot of big problem for the SME broker. So all those things, the training needs, the handholding towards through the process, be it the underwriting, the claims, the tech part of it, or even the compliance part, where they need to be looking into quarterly submission of returns, the complaint logs, other things that he mentioned about DPDP Act. Then there is the cyber threat. So all those things probably SME broker cannot manage on their own. So probably they will require the support of either IBAI or some big broker who can help them sail through this rather easily, where they can provide some cloud-based data protection or regulatory technological portal where they can be assisted with the submissions, or maybe a professional indemnity policy, what to take, how to take, and the importance of that. So I think once these SME brokers are fortified in these respects, then the whole journey for them will be much easier and much smoother. Thank you.
Yeah. So I also believe, as ma'am said, insurers can play a massive role in handholding this. I think the way we can integrate with some of our partners and ensure that they realize their full potential, I think as insurers, it's our responsibility also, and we have been doing that. I'll just talk about what we have been doing at ICICI Lombard very, very actively, because this is a very, very large vertical for us, where we handhold a lot of SME brokers. I think most of our partners, we handhold them on what are the emerging markets where they should go, which are the upcoming industrial corridors in the country. So we always give them leads on where the industry is coming up, which are the new products coming up. Now, recently surety has come up. It is becoming really big. So we have been training a lot of our SME brokers on surety because it's not a traditional insurance product where you will have complete knowledge like fire and marine. So which are the clients who are buying surety? Which are the type of clients and which are the agencies which are preferred, not preferred, so that they do not waste their time beyond a point, because people can get frustrated also. They can say ki, I have sent you 10 slips, but you didn't quote it on any one of them. So we need to guide them on what are the preferred areas for the insurance industry. So we have been doing a lot of that stuff. And see, at HSA Lombard now we have started to master the concept of micro monopoly. So what micro monopoly means is that you do not fight it out with the generalized market. You create your own micro monopolies. Can you find out some one product where you are the best in the country? And I think I am proud to say that we have 5-7 such examples where we have our SME brokers who have done a micro monopoly. So let me tell you, one of our broker from a very, very small town has done a micro monopoly in doctor's PI. So last year we crossed 50 crores of premium only in Dr. PI, 50 CR of premium, right? So right now with one of our SME brokers, we are exclusively working on wedding insurance. Though this has been a very, very traditional product, everybody knows wedding insurance, but we have completely changed the way it's sold, the way product is designed, right? With that partner, now we have already, along with that partner, already tied up with 30 luxury properties, where the property only is going to pay the premium, not the person who is doing the wedding.
He should be given a hand for this, because he's migrated 1% from 97% to 3% now.
Yeah. So this is, see, SME brokers should focus on micro monopolies. They should find out one field where they should become masters. A lot of SME brokers have started to do very well on the affinity front. I can tell you, yesterday we closed a deal. I would not name the client. So it's a lingerie wear brand for women. Right. So they were asking us, is there any insurance product? Is there any insurance product? So with one of the brokers, we designed a product where we are giving just breast cancer cover for 25 lakhs. Just breast cancer. Very dirt cheap product because it's focused only on breast cancer. You buy any lingerie wear from that shop, you get a breast cancer cover. So we completed the renewal yesterday. We got a 4 crore premium and the client was saying my sales have jumped up 40%. Right. Due to this product. So there are a lot of innovative ideas. I think as insurers we can guide. And if anybody of you sitting here wants to work on a micro monopoly concept with us, you please come. We'll design the product together. We'll give you a heads up, right, over competition for sure. Another thing we are doing for SME brokers is on the tech side. If you are a small broker, right, you want to build your own website, but you don't know what to do, you please come to our office. Our entire IT team will be at your disposal. They will guide you how to create a website, which vendors you should engage. We will make you meet the vendors because we have been negotiating high volumes. So the prices we can get you for that tech support would be massive. So a lot of these initiatives I think we are taking for SME brokers, and I completely feel that insurers can add a lot of value. Yeah.
I believe this is one of the biggest area of collaboration between insurers and IBAI for the simple reason because most insurers possess the depth of training knowledge. They have the processes and techniques to do an effective training. And IBAI has the credibility and the reach in the industry. When these two things come together, I think the capability becomes the biggest agenda. For example, in Access Max Life, we have almost 500 plus trainers across the country, spread across the country. I am sure most insurers would have similar strength or more. We have a lot of things which we can bring to the table for our distributors. We run 2 initiatives every year, which is the India Protection Quotient, where we do a survey around protection need of the country. And the other one is IRIS, which is the Insurance Retirement Index Survey. Through both these surveys, we understand the trend around protection and around retirement. And we share these insights with our distributors every year. It helps us build our products. A lot of innovation that we have seen in protection and in annuity products, in our products has come through these surveys over the last few years. So a lot of these enablements go to our distributors. I think besides this, this entire ecosystem that we can create around digitization. So for example, we have another system called, which is an AI-driven where you can perfect your sales pitch to a customer. We have been doing this for a long time since in agency and bank assurance. Now we're extending it to corporate agency broking as well. You can practice your role plays and perfect your pitch to the customer with the help of an AI. And we have seen tremendous amount of lift in productivity because of all of this. So I think when IBAI and insurer can join hands in building capability, I think this is the biggest thing that we can do together.
So Mandir, I'd like you to take another little bit, shifting the gears. Now, AI is a big topic. Actually, I'm here on 25th anniversary function here. And this morning, my daughter sends me, will broker be relevant with AI? She sent me a message today. She downloaded from somewhere, study, and sent it to me. So in this situation, when everything is changing, we don't know which business will work what way. Then if AI tomorrow starts shaping customer engagement, underwriting, and claims, all three, then how can SME brokers leverage this technology? Actually, instead of getting afraid from the technology, how do we leverage this technology to, preserve the personalized advisory model? So this micro monopoly, which is, he spoke about.
I think this has emerged as one of the best things ever. And the reason I say this is because it kind of democratizes everything. Large setups, large institutions, even brokers or insurers have access to capital information, analytics. They can hire specialists for various roles. Whereas smaller players like SMEs or small institutions cannot do this. What AI does is actually, in a way, levels all these things up. To my mind, AI, we all should actually embrace AI completely, because AI is not going to replace what we can do together as human beings. It will always add on to what we are doing. So for SMEs, it's important that we leave all the routine items to the AIs, which is basically customer information, analyzing and doing need-based analysis for the customer, understanding various life stage needs, suitable product, etc., managing customer information. All of this can be done very quickly now. You can draw robust presentation using AIs in a very quick time. You can lay out a presentation, a solid presentation to make in front of a customer. All of this is possible. So we should embrace it, use it, while at the same time honing our skills, which is what the skills that we can only bring onto the table, which is negotiation skill, ability to influence, have a meaningful conversation about the fears of a customer, about insecurities, about risks. These are things that only human beings can do, that we all can do. I think it's time that we enhance and improve our skills around these things, while letting AI do all the routine stuff. In fact, at Axis Max Life, we have been embedding AI into every single process that we are operating, whether it is underwriting, business operations, sales, back-end processing. We have, in fact, went ahead and trained every single individual within the organization on the AI systems. And we continue to do that on a large scale, enabling our teams with all the AI tools, right up to the people who are there operationally at the ground. We are enabling them with the AI tools to leverage their productivity. So I think it goes hand in hand. We need not worry about it. Rather, we should embrace it and make the best use of it.
Yeah, so I would like to add to it. I think small, medium enterprises, SME brokers, they should be the happiest, I would say, because it's made made it a level playing field for everyone. So large brokers with large balance sheets had huge teams, research teams who make a lot of reports. But now with the help of AI, I think if you want to compare a QCR, you want to run a QCR, you want to do a policy benchmarking, I think there are a lot of tools. I think rather than getting scared from AI, they should learn more of AI, that how to use AI. And tomorrow when a claim comes, whatever you say, whatever security we give to the clients always have a doubt in mind, ki kal ko claim milega, nahi milega. So this is how the industry operates, and they would like to deal with the face always. So I don't think AI is anyways going to remove any of the broking work here. Yeah.
All right. Thank you, Sunny. So, Lebika ji, just to continue this conversation further, so what unique advantage SME broker can have over large institutional players when it comes to building trust with the customer? Like you said, claim, moment of truth. You also said moment of truth is claim.
So like two things are there. One thing is that a broker who is localized has the benefit of knowing the culture there, knowing the language there, understanding the market there more minutely when compared to any large broker who may not have that kind of presence in a tier 2 or tier 3 city. So definitely they should use this to their advantage. Secondly, now is the time when there will be market for specialty brokers, specialty insurers, even super specialty lines also. We will be having different kind of specialists, brokers catering to a niche market. So there also the SME brokers have an edge and they have an, an opportunity lying in slumber. So if they use it to the best of their advantage, I see no reason that why they will not stand up to any big size broker and be master of their own field. So as he talked about the affinity or other things, I mean, there are different lines available in insurance sector now where they can train their resources accordingly. So another thing, as I said, that at the time of claim, since you asked, at the time of claim, the very presence of somebody who has done the insurance, standing near the insured and telling him, don't worry, we will take the financial part of it, we will take care. So that is very, very important and, giving the kind of empathy the insured needs at the time of his misfortune. Then facilitating with the claims document, guiding them, hand-holding them, discussing it with the surveyor, being present at the time of physical survey. That all can be more easily done and accomplished by a broker who is present there. So I think if geography-wise, they, concentrate or line-wise they concentrate, they will be able to pool in their limited resources in that fashion and will be more successful in establishing themselves. Thank you.
Thank you, ma'am. So we'll take one last question, Mandirji, to you. And after that, 1 minute, everybody can just conclude. With that, we'll conclude. Yeah. So, Mandir, suppose a new person, young person comes to you. He says, I want to start a broking company. A fresh broking company, completely new. He asks your advice that, what 3 capabilities I should have when I start a new broking company. So what would you advise him?
I think biggest one I would say is building capability, because it's an old saying that knowledge creates awareness, awareness creates choices. And when you are into this business, you would like to have as much information as possible, as much capability as possible, because that gives you an opportunity to scale up into multiple sides of the business. Maybe you would start small in GI, or maybe you would start small in LI or health. Maybe that becomes your focus area initially. But gradually, how do you expand and get into newer businesses? How do you really acquire a customer and make sure that the customer buys everything from you? He goes nowhere else other than you for every single one of his needs. So again, I go back to my first point when I said that, are we actually really owning the customer through his entire life cycle? We are not even building a business model around it. We are actually still in transactions. We are still doing sales push of a policy. We are not into risk analysis. We are really not doing relationship management for the entire life journey of a customer. I think those are very pertinent points that we have to think about. As a SME insurer, why am I not an iconic brand in my local market? Let's say I'm sitting in Nasik market. Why can't I be an iconic brand where the city revolves around me as a brand for all insurance needs, or all needs, financial needs of a customer? But I think we got to start there, and together we need to partner on that. The second point flows from the first one is again customer relationship management, because that is where the crux of the thing lies. For a long-term sustainable business, we have to come out of transactions and build long-term sustainable relationship with the customer. And the third point to quickly add to this is to embrace technology and AI very, very early. Let that do the routine job, and you focus yourself on doing what only you can do.
All right, so we take one audience question. I think we have run out of time. So there's an audience question. I know who wants to take it. Managing and hiring teams is a big pain. Yeah. Because you don't have money, you don't have brand. Who would come and join you? So how this challenge should be met?
Yeah, so I'll take this. I think it's a very, very relevant question. When I travel across the country, I see this as the single biggest challenge. Attracting talent for SME broker is one of the strongest challenges right now. So I think as an insurer, what we have been doing is, obviously they have people, but the kind of people they want, they aspire for, they miss that. But the advantage is that the people they currently have are very passionate. They might not have that kind of expertise, but they are very, very passionate. So this is what I was discussing with Mr. Narendra and Mr. Mohan also in the morning, that we should, with the help of IBAI, we should be doing more such sessions to bring these people up the curve, rather than just thinking that I should have the best person in the industry. Why not make our people best? Right, and because they are highly passionate, I think if we channelize their energy in the right direction, they can become the best. So with the help of IBI, we would like to engage more on the training aspect, not only products but also value-added services, value-added products, and also we can take a new theme of AI, how they can use AI tools to make themselves better, how they can also make such kind of fantastic reports which their competitors, large competitors, have been doing. I think as an insurer and IBI, we can do a lot of stuff in making these people come up the curve.
So thank you. Thank you. So we met your time.
Thank you.
All right, so I think we'll close it. Thank you, panelists. So please, a round of applause for them.
So with a round of applause, also our gratitude in the form of mementos, inviting Mr. Hitesh to be please joining us on the stage. Ladies and gentlemen, we are not going to be breaking for tea, but then there is a running tea outside. You can pick up your teacups and back with us for the next session, which is on InsurTech and AI, the emerging opportunities or threat, which we are going to be exploring and discussing with our panelists in the next session. In fact, it was voiced by one of the speakers in this session and also earlier that AI is probably the best thing to have happened, adding more speed, scale, and of course, more faster, smarter, more customer-centric. But then every new opportunity comes with its own set of challenges, especially as we talk about these emerging technologies, the threat of cybersecurity, this threat of trust and ethics and regulations, which we are going to be exploring in the next session. Threats with these AI and emerging technologies, exploring InsurTech, whether it is a threat, an opportunity, threat or an opportunity, or a mix of both. Inviting a moderator, Mr. Kapil Mehta. Our panelist, Shri Vivek Chaturvedi from Go Digit General Insurance Company Limited, who brings in rich experience in driving innovation, customer centricity and business growth in India's evolving general insurance sector. Shri Varun V from Actor General Insurance, which stands as one of India's leading digital first insurers, transforming the insurance experience through technology and paperless processes and more customer-centric innovation, which we are talking about with AI and these emerging technologies. Our next speaker, Shri Jitendra Singh, the head of claims and fire, ICICI Lombard General Insurance Company. Extensive experience and expertise in claims management and fire insurance. He's been playing a pivotal role in strengthening one of India's leading private general insurers. And Mr. Vishal Sikand, the Joint President, Commercial Lines, HDFC IRCO. 18 plus experience. He's earlier led strategic alliances, product development and innovation. He's headed corporate business groups. And before HDFC Ergo. He was head of international strategy and business development at Ergo Group in Germany. So with our very dynamic panelists here on the stage, I hand over to our moderator for the session moderation. Thank you.
Thank you. Can you all hear me? This mic is fine. Sorry? Yeah, much better. A very warm welcome to everybody. This is a difficult session because post lunch, post tea, but our topic is very exciting. So I think we'll make the best of it. Since morning, I've been listening to the various panel discussions, and all the panel discussions, while they were on different variety of topics, everybody spoke about AI, starting with Pavanjit's panel in the beginning, where there was a sort of everybody agreed that AI can never replace the underwriting team. And then in the previous panel, there was a discussion where they said AI is really useful, you have to learn it. They're very mixed views. And generally, the concerns are that will it replace people? How important is it? There's a lot of conversation. And although the topic of our panel discussion today is AI and InsurTech, I think we will restrict the discussion to just AI, because that is sort of in itself a topic. I'd like to start, I'll start with one question. And the question is really for all the panelists. And we can start with you, Varun, and then sort of move down, which is that in your organization, ACO, for example, tell us, which part of the company you use AI the most today, and how do you use it? So I'll then request everybody to just tell us a little bit about that, so we just get a flavor of what's the use. And at the end, I'll tell you about what we do in our small company. Yeah.
Thank you, Kapilji, and many congratulations to the IBAI. 25 years is amazing. And on a personal note, thank you for shaping me up also, because I was on the other side of the table for 8 long years as a broker. So this feels personal and special. Many congratulations once again. So Kapilji, on ACO perspective, if I look at it, a lot of change where we are done is on the interface piece of it, right? When you look at the policy form, the ease of it, and when you require the most, right? If I have to talk about the group business that we do on the health side of it, very simply put across, the end user or the employee or the employer, what they expect is how much of ease in the policy terms and conditions and how it is relatable to me for that. So that's something that we've got it very, very clearly through AI when you kind of go at our interface, both on the employer portal, the broker portal, or including the app that we have. Same thing for claims. I don't know, I'm sure from a broker perspective, anybody would be able to understand almost 93% of our claims are settled in 1 working day, right? That's on the group health, and the same goes with the motor as well. And the OPD claims and other things, we are able to settle in hours. So we are running slightly on the e-commerce way when we look at it, yes, as far as the AI usage is concerned on the interface piece of it. Yeah.
That's wonderful. Vishal, at HDFC, it'll be very lovely to learn, how.
Yeah. So congratulations, 25 glorious years, beautiful journey. We've been also a part of this journey for the last, say, 25 years, close to now. Now, when you look at AI, usually it started in an organization, insurance organization, largely with use cases in fraud management, fraud identification, then enabling claims for faster and more transparent management of claim. Slowly and gradually, it moved into bringing in cost efficiencies when it came to operations. And I think the last piece that came through, which is now gaining big ground, is into distribution. Now, distribution also means enabling your underwriter to understand the risk in a simplified manner before they actually put a pen to it and put a number onto it. It eases out their operational task. The recent journey that we have seen in HDFC Ergo is end-to-end, though it's on the retail side, but using AI end-to-end, enabling customer to understand the product, solve their queries, make a proposal, send them the link, get the payment and issue a policy. The entire journey of the customer then gets enabled through an AI. I'm not saying that this is the only future that an insurance industry would have. Humans will always be a critical part of how we understand the risk. But yeah, at least it gives a lot more, insights into what risk we are underwriting, and makes the entire process much more efficient, effective, transparent for the end customer.
Thanks, Vishal. Jitendra from ICICI. Yeah.
Thanks. And many congratulations to everybody sitting over here. It's been a pleasure working with all of you. Regarding coming to the use of AI within ICICI Lombard, I must say that in a general insurance space, we must be first among the few who had start working towards it. So our AI journey started maybe 8 to 9 years back. We started initially in our health product, mainly in terms of giving cashless approvals when it comes to gradually moving into the motor, whatever with the break-in inspection, all those apps and all. Then coming to the commercial space, let me give you one single figure. In a year, in a fire line of a business, we roughly sold 4 lakh policies. 95% of those policies are without any human intervention. So be it all pre-underwritten or a simple product. So our pricing bot for fire is working from the last 5 years, who looks into the past data. It's a machine learning vis-a-vis analyzing the critical information that we have. Then it moves into the transit insurance. Roughly close to 98% of whatever transit that we are insuring is being monitored through AI applications. It regulates in terms of any delay, mismanagement, things happening. In terms of project management, we use a lot of photographs, a lot of drone surveys, etc. We consume a lot of data which is available into the account aggregator as well as in the ecosystem to record about the customers. So if you talked about the AI, today it is very easy for anybody to build any kind of a model or chatbot. The key things comes into how you are training those models. And you have to keep in mind that whether you want to host in-house or out-house, etc. So, for example, with ICICI Lombard, from the last 25 years, we have data for each and every photograph that we had clicked for our motor claim. We have digital form. We have data for each and every claim of the commercial line, digitalized. We have data for each and every risk that we had inspected. So what we are doing that we are training our model or algorithms onto our own data so that whatever decisions we are currently taking, how can we transfer those decisions in the future wherever we feel. So in some of the space, small sum insured, fire lines, project lines, maybe complicated things like liability and all. For a small sum insured, all those decisions are currently moved into the AI. And the other thing is assistive mode. For a large things, what AI do, gather a lot of the information from the ecosystem, process it, our past record process it, and present it to the underwriter. So that's the way we are using it currently. And we see that in incoming future, the more and more things will be coming up to and adding to it. Thank you.
That's fabulous. Vivek, from GoDigit.
Thanks, Kapilji, for inviting me. From an AI perspective, I think AI has been used across the value chain. And I will basically give few examples. So there is one use case of AI is where AI is actively involved in each transaction. Second use case typically is where AI builds something and then the transaction works. Most mature usage for AI in our scenario is where customer has the highest friction. One is on the claim side. Second is on the customer service side. On the claim side, what we have built is typically for a motor claim, when a damage happens and a video survey happens, whether it is by customer, it's by the surveyor, or it's by the garage, AI is able to identify the damage. It is able to correlate the narration of the incident with the damage. Then it is able to triage with all the back photographs we have, what Jitendra also said, all the digital evidence we have. So it is able to do the fraud management and then predict whether the damage requires a repair or a replacement. And by the time the survey is over, the assessor has a VRO ready. And then it's a manual check where the and then the VRO is released, which reduces the speed for the repair starting, and it gives a better experience to the customer. The second customer experience or customer irritation that happens is, and I always tell my team, we are not a Myntra or a e-commerce where people think that let me connect with the insurance company today. People come with some issue, some problems. In our call center, we have built AI which continuously tracks every single call. The AI is able to see what is the emotional theme of the call. It is able to understand when somebody is becoming aggressive or the emotions are running high, and it is able to pull a supervisor, which basically helps us in service recovery. So that's the second use case, which is where we have been most mature. Other thing which I am finding, at least in Digit, and 3-4 years back, I read an article and the headline was relevant. Article was not that great, but the article said, what if everybody can code in your company? And that was the time of no code, zero code time, not the vibe coding. That time vibe coding hadn't come. But what I'm seeing is each function or each department, they are able to identify their pain point, and using a combination of Playwrighter, Copilot, Claude, they are themselves able to build solutions, which reduces friction for the team. And that has happened a lot in Digit, where the technology team is not involved. It's the business team which is able to build solutions and make processes better.
I think these are all, that's lovely example, Vivek. I think all of these are very good examples. But the examples you've given are large companies institutionalizing the use of AI, and they're just totally appropriate. In our small broking company, we, for the past 8-10 years, used a ticketing system from one of these large SaaS providers, and that ticketing system would sort of be used. We had 25-30 agents on it. We controlled it because of cost. This year they came to us and they said that, look, they want to raise the cost they charge per seat to us, and we didn't want to spend the money. So we used the tools you mentioned just now, including Codex and so on. And it took us 2 weeks to make our own ticketing system. And the functionality in that ticketing system was maybe 70% of what we had with them. But we're sort of inching forward. And now it's been working for 3 months and it's working beautifully. Now, from the standpoint of a small broker, we've cut out some 10 lakhs of cost. Some cost has got cut out in the whole thing. And that's been a big benefit for us. The claims handbook, which is going to get released tomorrow, is typically done in a very manually intensive manner because you pull public disclosures from 30 insurers, pull out ratios, calculate it, etc. This year we've used AI. It just becomes so much more efficient. Of course, you have to verify everything, and you can't trust it at all. You have to verify everything, but then for the future your models are in place. So I just see it as a huge efficiency. Having said that, I'm going to now ask some specific questions, and actually my first question is for you, Vivek, which I've got, which is that we were speaking outside. One of the channels that you handle is partners, small partners wanting to get into the insurance business, partnerships, aggregation, retention business. And how do you see AI changing the nature of that business? Do you see things happening there more on the front end with partners that you work?
So what we are seeing is from a partner perspective, and that's why I talked about that small business cases, and you also talked about one business case which you built. Now, one thing which we have started doing is taking that knowledge to smaller partners. So we started something called a growth lab, which is basically identifying partners, identifying the use case that we have built. Small things like a lot of small partners spend decent amount of time in commission reconciliation, which actually
lot of time.
Now, if you have the grid and you have the policies, if you put it in Copilot, it's like a 10 minutes job.
It is. Totally
so this is what we have started doing in terms of identifying small use cases, which can be solved with free versions of AI. And we have started running these growth labs with our partners to take them through. That is one thing we are doing. Second, what we see is they also spend a lot of time in preparing quote comparisons. Sometimes, especially in the liability side, the documents run probably in kilometers, which is hard to understand. I don't know how people understand it. But using free-to-use tools to put it together a proper comparison, which they can present and they can also understand.
Yes.
AI also helps them in understanding the gaps, which they can cushion the insurer also.
Yes.
So some of these things which we feel where the small partners makes a lot of sense.
Yes.
Other thing which at least we started doing with AI becoming a part of technology, we also started seeing a lot of bandwidth that we have built in our technology team.
Yes.
So like you talked about the ticketing system.
Yes.
For smaller partners, we have seen small tools that they require, which can make the life easier. Most of the off-the-shelf tools which are available outside, they are not built for insurance industry. So customizing those tools takes a lot of time and cost. What we are basically doing is we are building those tools and then we are handing over to the partners. Tools which are predominantly made for insurance industries. It could be a CRM. It could be a dialer. It's a simple cross-sell engine. Those things we are giving it to the partners, which now we can build faster. As you said, the ticketing system in 3 months. So a lot of these tools, which probably 3 years back used to take a year and a half to build, they can be built with our understanding faster, and we are then handing over to our partners.
Yes. Wonderful. I'm going to move to Vishal now. And, see, you handle a very broad portfolio. It's not just commercial risk, but they also sort of retail, individual lines in the whole thing. How do you see AI helping you price or assess these risks at a time of placement, or when you're thinking about, how you want to underwrite them? Any thoughts on that? And, you could go beyond commercial risk. You could go to broader lines because you have such width in your responsibilities.
I mean, if I talk about commercial lines, then artificial intelligence would become anybody's intelligence in terms of pricing nowadays. So I'm gonna keep myself away from FRIAR pricing piece.
Yeah.
No, I think some of the use cases, typically liability, which is very, very subjective in the way the underwriter assesses the risk. Reading a balance sheet, reading the, public disclosure, going through the website, then kind of finding out, various aspects of risk. I think it's not an easy job for a human underwriter to speed up and deliver a quality service. So in terms of pricing it more accurately, AI really comes in very, very handy when you are on the liability space. Even in terms of small ticket claims, look at WC. Look at a cyber retail policy. These are claims where you can find a lot of information available in the global space, in the internet space, and then you can train your, AI to lead you to a decision, which naturally a human will have to come and sign it off. See, please try and understand, claims is a sensitive area. Now, you can't truly and only depend on AI. You really need some human to come and validate it before the decision goes out. So those are areas. In terms of motor, I think we've seen a lot of benefit with AI coming into play. The pricing, pin code wise, district wise, running algorithms in order to understand what kind makes everything putting it across. That has come very, very handy in our business. Health, especially retail health. I think HDFC Ergo is doing a phenomenal job in the industry today. And has a lot of it, including the claim servicing, which is turning out, claim approvals within, 10, 12 minutes. It's a lot enabled through AI. So we've had some really good success in building onto AI. But having said that, I think AI is just one layer. Everything can be achieved in the way you want to kind of shape up your AI, models. But at the end of the day, the data, the processes of an organization needs to be very, very robust, collecting information and preparing it for a consumption of AI. In the world that we operate today, I think cost becomes the biggest parameter. Being efficient, or the way we say is squeezing the lemon as much as you can. I think AI is assisting us to be far more efficient in our business today.
Thanks, Vishal. And I'm actually going to go to, this is a perfect segue into Jitendra because he's responsible for fire and property. So you explained all the lines, but you kept that out. If you don't mind, can you tell us how AI impacts fire, property, risk assessment, that whole process? Because that is in fact your area.
Sure. And I'll restrict myself to the practices that we follow at ICICI Lombard. So what we do, the technology or AI assist in a three broader way when it comes to commercial line, mainly fire, engineering, marine. So one is in terms of analysis of data. So be it our past record or etc. I'll give you a use case example. Take an example of a marine pricing. So for each marine proposal, you have to review all the claims, come out a certain break-even price, how the things moving, etc. Same way in a GHI. So you receive, be it our own renewal, you have to analyze your own record. If it is somebody else's renewal, you receive a RFQ with a huge amount of a data. You have to analyze that data in a certain manner where you want that information needs to be consumed by the underwriter to take that price. So one thing where we use is the analysis of a data. Second broad spectrum where we use is in terms of assisting the underwriter in terms of providing a knowledge. So some of the larger proposal required years and years of experienced underwriter to do those things. And looking into the scale and volume and the cost, etc., if somebody junior has to take this call, he should be given a relevant set of a knowledge to it. So for example, today, if a petrochemical risk needs to be evaluated on a very technical ground, so whatever information we have, be it in terms of inspection report, data available in an ecosystem, or our past record, all those knowledge information would be made handy to the underwriter who was taking decision at that moment. Third thing is in terms of how we are helping our channel partners to it. So a lot of the time, underwriter wants a risk assessment to be done, and they say that you go and do the inspection and all. So from our side, what we have done, we had created an app and given it to the channel partner that with the help of an app, you yourself or anybody can do the risk assessment. Now, some of the channels say that why a generic app? So what we do, if we receive a proposal for underwriting, then we create a link and give to the channel partner, which is having a very specific set of a question which are suited for that particular proposal. For example, if the proposal is for a location which is prone to the flood, there will be certain question related to the flood, certain question related to some insured occupancy and so forth. And they say that either you forward that link to your plant guy or something, somebody clicks a photograph, answer few yes or no type of a question, so that underwriter get a risk assessment handy to it. So these are the three broad areas in which we are currently using it. And there are many other areas where we want to expand it to the further, be it in terms of a claims, how the assessment needs to be done, reviewing whatever assessment be happen. My colleagues talked about liability, how we can understand the multiple wordings and do the comparison, how it's be deviated from a standard wording. So these are the areas in which we're currently working to implement it.
Thanks, Jitendra. And now, what I wanted to ask you, Varun, when we spoke last, what I understood about ACO's business is that a large part of it is D2C, but there's an emerging focus and sort of a desire to build out the B2B business. You're sort of doing a large part of that, mostly on the group health insurance, wellness, employee benefit. How does AI play a role in that part of the business? A little bit Jitendra referred to, but sort of more elaborately.
See, for us, what matters is the experience what we give to the customer. That is what the focus point is. The client these days, they know very well what they want, right? So you sit in front of the HR or you sit in front of the finance director, whatever it is, the client knows absolutely what they want. So what matters is the service, which is a given, and how do you kind of use AI for the entire service, which is what we specialize in. And the beauty of tech-led insurers is that we do not fail to experiment in building coverages which would fit the customer, right? So that's the mood point over here when it comes as far as the client-centric approach is there. Yeah.
That's wonderful. Before I go on to the next set of questions, I thought I'll just pause and ask if any, I know there's a time at the end to ask questions, but is there anybody who'd like to ask a question now? You can do that, or otherwise I'll just continue. Sorry? Oh, there's a question. If it's okay, we'll just sort of take that question to break the flow. The question is, we hold a lot of client data. What are our obligations under the data protection law when that data goes into these platforms? I don't know if anybody knows the answer to that.
Let me attempt to answer it. We are aware of these laws. That the reason we want all our AI engine and the data things needs to be held within our boundary walls. Anyway, being a subsidiary of the bank, we follow the protocols of the banks, and the data would be completely lied to us. Even to that extent, certain critical field like the name of the customers, locations, and certain things which help identify phone numbers and email, all those things has been typically masked or converted into the codes whenever we are running into the model or things. So that thing is there. And nowadays, if you talk to any licensed version of even the Teams or Copilot or even the Chat GPTs of the world, they say that your enterprise data will be held within your own domain. So they will not take it to their overall master cloud and train their own model. So that thing is there. Nevertheless, as the listed company, most of the insurers has to comply with the relevant data protection law, and I'm sure that we all are working in that direction. Yeah.
So there, obviously, ICICI Lombard is doing a good job of it, but this is definitely a slightly gray area because the amount of data, and there are many litigations going on across the world on exactly this matter. But if you have a system where the whole data is a proprietary to a company, AI, then of course you're much safer than using a general open source. Any more questions anybody like to ask? Okay, I'm going to move to, I'm going to change the order of the questions a little bit, just given the time constraint. And there's a question which I'm going to ask to everybody, which is that, how do you see the role of brokers or advisors like virtually everybody here in this room change over the years with AI coming into the role? And, maybe you could start, Vivek, and then we can go to Jitendra and Vishal.
Sure. I think
yeah, it's coming.
Okay. So previous discussion also, it was beautifully covered in terms of how the role will change. So I will keep it crisp and avoid repeating. But what we are seeing right now is a lot of things which are routine. There people are identifying and they are automating it. What will happen more is, and which does not happen in our industry has a very high information asymmetry with the customer. Corporate customers still understand something. Retail customers don't understand anything. And what the AI will do, it will bring that understanding to retail customer. Like if you take a health insurance claim and the final bill that an insurer releases, that's like 8-9 long pages of line item entries, which a customer can't understand. What the customer sees, his liability to pay. Going forward, more so when the younger generation comes, which is predominantly bought up on AI, which everything is asked through an AI, for them it will be very easier to just put the claim and ask, whether am I supposed to pay this 40,000 rupees? And AI can actually say whether this specific line item, which is customer's liability, actually is not a consumable, it is actually should be covered because it's part of a process or something like that. So customer which currently is not able to ask questions will be able to ask questions, which from a brokers and a partners and also an insurance perspective, we will become more accountable in terms of what we publish or what we give to the customer. Second, customer will also be able to differentiate the advice he is getting, whether that advice is a superficial advice or whether this advice actually has value. And that would be the interesting interplay which our industry will enter probably in 5 years, 6 years down the line. Yeah. So that's something which I feel will change how we work.
And what you're describing will actually make the broker's role more difficult. Because you're accountable and you have to sort of add value.
For brokers also, a lot of the things which right now the teams would be doing would be automated. Yeah. Customers will not want a price comparison or a plan comparison. Yeah. Customer would probably expect why I need it, what is the trade-off I have, what is the protection gap I have. So the brokers will also have to develop that advisory. And actually, in Digit, we started doing this. So for our sales team, any relationship manager, any conversation that they have with any of our partners, it is actually now being transcribed. We analyze it and we actually see whether the discussion is where we are giving solution to the partner, or are we still, the discussions are rudimentary about commissions and pricing. And for brokers also, it's very easy to see where the teams are right now. One can understand with, if like all the conversations that your team is having with the customers, if you have the transcripts, you will also know which of your members are actually building solutions or which of the members are actually working on the routine part of it.
I'll go to you, Jitendra, on the same. The question was how AI will impact brokers and our role. There's a question which has come here, but we'll see in the end if we have a time.
Let me answer it by giving a very simple and a layman example. All of us remember when the Google map was introduced. Before that, the skill of driving is not only to drive a vehicle, but to know the address and also to know what is the shortest path one needs to be follow in order to gain there. But the moment Google Maps come, the technology had removed knowing how to reach to one of the place at the optimized time. So the same way, what the AI do, it provide a level playing field for the people who may not be that competent. So which means that a smaller broker is as good as a big broker if we use a right side of a technology and use it to its advantage. The second example I would like to quote you, think of any healthcare business. You always hear of doctor role, some AI come, it will be expert sitting, give online services and all. But you think from a nurse role. What do you think a nurse do? Simple take care, putting injection and all. Now you think, whose job is it at the stake first? Is it the doctor's job or the nurse job? So the caretaker's job would always be there. So somewhere as a advisor in insurance lines, we have to see that if we are coming into that particular shoes, that if we becoming a caretaker to the consultant, will always be there. Financial consultation is something like that only. People like to talk. Nobody like to have a financial advice. If somebody house is at a fire, we believe that they like to call somebody a human rather than just sending an email or a report a claim. Similarly, for any of the proposal, people like to talk. It's a very basic and a psychological things. But the technology can assist the person. So a 2-year experienced person can be as good as a 20-year experienced person if you follow the right set of a tool, having a right set of skill and knowledge, know what needs to be asked and what needs to be told. So that's the way I believe that we all have to imbibe that thing in order to move further.
That's fabulous. I'll go to you, Vishal.
Quick on this. I think the role of the broker will move more strategic than only a transactional. In my belief, we will get to see industry much leaner at the insurer side. A lot of work, we will have no option but to, in order to be more efficient and cost effective, we'll have to be much more leaner. And a lot of work will then move to the, the broker desk. That's where the broker will also use technology to make recommendations based on various domestic, international benchmarks, specific getting into the industry, making the client understand or provide the client with much more richer insights into their business. Not to forget, AI will also help the broker to negotiate with the insurance company much better. So I think these are some things that when I look into the future, I think it's going to be, it's not an option, but this is the reality that we will see maybe 5 to 7 years down the line.
Yeah. And then we'll have Varun. Yeah.
Very, very excited for the future on the AI, because I'll tell you very crisply, AI will make the broker strong, right? In the sense technically, and the producers like the insurtech players will become more administratively more superior and effective, so that the tech and what the knowledge house that the broker gives, they kind of work together. That's what is, I feel it's going to happen, and I voice out to what Vishal was also mentioning across on the same.
So that is fabulous. If it's possible to summarize the various views, just to give a sense, what I heard is that we are going to be more accountable. That was one clear message. The second message was that even the small broker, the SME broker we were talking about in the previous session, can easily take on the large broker. That's the second message which I heard. I think we have to be more strategic. We will have to deliver benchmarks. Expectations from us will be very much higher than perhaps what it is today. And fourth, obviously we'll get better tools to be able to negotiate with the insurer. Perhaps in a way, some part of the balance of power may move towards the broker. So I think that is an excellent summary of what AI can do for us. What is non-negotiable is that everybody in the room has to really get into this AI and understand it and use it with our own hands. That's the only way you can wrap your mind around how this works. I think anything else?
I just have one closing point.
Of course.
I think the vision in which that we discussed about this AI was 2047 by 1 billion. It will not happen by hard sales.
Yeah.
It will happen by AI.
Yeah.
Thank you.
Fair point. I think we're through. Thank you very much. There's one question which was left, but we'll take that offline. Yeah. Thanks so much.
Thank you very much.
May I request Mr. Venkatesh to please join us in presenting the mementos. So AI definitely empowering tool, enablement tool, adding towards adding more speed, scale, and efficiency. Next, that's going to be the last session of the day. Before that, I would like to just inform the August gathering at the end of the session from Studio 2, the delegates who have not yet collected their delegate kits, they can collect it from Studio 2. Even the IBAI members, the mementos you can collect from Studio 2, but that's going to be happening once we close here after this last session. In Studio 4, there is a presentation from Shima and also by Lloyd. That's going to be first by Shima, then by Lloyd. And at 7 o'clock, we are going to be starting with the felicitation awards, and which also has a musical evening along with the dinner. Many thanks to all the sponsors for the support which they have extended to us, to our platinum sponsors who are our co-title sponsors, ICICI Lombard General Insurance Company Limited, the New India Assurance Company Limited, GICRE, to our diamond sponsors and to our silver sponsors. Thank you. The last session of the day, ladies and gentlemen, reinsurance, capitalizing global capital and emerging opportunities in GIFT City. And we have seen that reassurance is actually the backbone of a resilient insurance ecosystem, and of late it is gaining greater strength with the recent liberalization of foreign capital, and then the GIFT City offering a globally competitive platform to the reinsurers. So this session is going to be examining how reinsurers and the reinsurance brokers can actually capitalize on this expanded capacity, foster innovation, and shape the next chapter of growth for India's reinsurance sector. Our moderator of the session, Mr. S.K. Rustagi, is going to be moderating the session. Once again, joining us as our eminent panelist, Shri K. Mahipal Reddy, the Executive Director, IFSCA GIFT City. As mentioned earlier also, more than 3 decades of experience in insurance regulation and supervision. He oversees the insurance and pension verticals at IFSCA, helping shape India's global insurance and reinsurance ecosystem from GIFT IFSCA. Shri Sanjay Mukashi, the General Manager, GICRE, India's national reinsurer. GICRE plays a pivotal role in strengthening risk capacity, supporting insurers across the globe, and further enhancing resilience through world-class reinsurance solutions. Our next eminent speaker, Shri Ritesh Shah from the Neom Group, a leading consulting and advisory firm specializing in regulatory, compliance, governance, and business advisory services. And Srimati Priyanka Bhalla, she joins us from Abu Dhabi National Insurance Company, ADNIC Gift City. ADNIC, one of UAE's leading multi-line insurers, and through its presence at GIFT IFSC, it is strengthening cross-border insurance and reinsurance capabilities while contributing to India's emergence as a global reinsurance hub. And from here, I hand over to our moderator, Shri S.K. Rustagi.
Thank you and good afternoon. And this is the last session, as in today. But it is having the varied panelist. On the left-hand side, first is my regulator, GIFT City regulator, which is the fast emerging regulator and is competing with Singapore, DIFC, Dubai, and so on, and London Syndicate also. On the second to Mr. Mahipal is basically from the father of reinsurance as far as India is concerned. That is GIC Re. Third is again the first Indian Lloyd Syndicate, which has happened, started in January. Is it correct? January? So we should be proud of first Indian syndicate being there. GIC was there as a syndicate, but as far as from the, you can say, green field syndicate. And the fourth one is the GIFT City, one of the oldest multinational company, which is a direct side and reinsurance side company in the Middle East, well-known companies. So we have a variety of panelists with us. As far as the reinsurance is concerned, everybody knows here reinsurance. Reinsurance is behind the curtain, it works. We as a direct broker, most of us, are concerned with New India, ICICI Lombard, Tata AIG, and so on and so forth. But on the back of them, it is the reinsurers who plays the vital role, who give the financial strength to these direct companies on which they ride the policies and all those things. Reinsurance, there are two regulators. One is IRDA and second is GIFT City. That is a unique composition. So IRDA is the growth engine for Indian entities, and GIFT City is a bridge to India to global scene. Both work as a complementary to each other. They are neither competitive nor parallel. That is a unique position of Indian regulators is there as on date. You might have heard of order of preference also. You cannot go to, like in direct side, you can go to any company, whether it is New India, National, or Tata AIG or HDFC. Here there is an order of preference. Order of preference means first you have to go to GIC and Indian reinsurance companies which are in mainland in India. Then you have to go to GIFT City, and then left over you can go for foreign things which are empaneled. Around 300 reinsurance companies are empaneled by IRDA. So that is the order of preference. Recently, as Mr. Mahipal was saying, MGA notification has come on 8th of July this year. 8th of June, sorry. 8th of June. My bad. 8th June. So it is almost 1 month old. And I had been there to discuss that what type of MGA is there and what type of potentials we have as a broker. if we convert ourselves to AMGA. So it is as on date for direct side. We will deal with a little bit more. So that is a future prospects for all of us. He has also told about Gift City. There are a lot of direct business opportunities. So that also we will talk while talking to reinsurance also. So basically, reinsurance, we have done 1.12 trillion premium so far last year. Last year means 24-25. The data which is in GI Council. And out of that, around 700 billion has been done in India. Later on, it has been offshore to foreign countries. That is the fourth stage of order of preference. So Ritesh, the first question is to you, because you are the latest, youngest one in the group. So you've been part of multinational reinsurance and now you are building a fresh global platform with the, as far as you are concerned. Lloyd Syndicate 2047. From the vantage point spanning both the old order and the new, what is really driving Indians' dependence on a handful of large reinsurers? And how serious does this gap become a penetration growth?
No, thank you for putting this question and thank you for inviting me. When we talk about penetration, I think that India has still a long way to go. Because if we compare India's penetration, which is hovering at around 3.5 to 3.6%, when we compare this to developed markets like US, which is at 12%, or Japan at 9% and Germany at 6%, we still have a long way to go. Now, when we see India's growth story, we see a substantial investments in infrastructure. There is a evidence of economic growth. Manufacturing units are being set up substantially in different occupancies, and which creates an opportunity for insurance penetration. Now, insurance company alone cannot absorb this penetration. They need a capacity from reinsurers to promote and to grow the insurance book in the market. Now, why do we need foreign reinsurers? When we talk about complex risks like petrochemical plants or nuclear power projects, semiconductors, data centers, these are very complex risks. And sometimes there is lack of technical expertise in the local market, because of which we need to rely to some of the foreign reinsurers who are based globally and do have expertise to underwrite such risks. Now, foreign reinsurers, the most important advantage or the benefit that foreign reinsurers have is that they diversify their book right from US markets to Australian markets, spanning across Middle East, Asian markets, because of which they can absorb catastrophic losses quite nicely and also put large capacities. When we talk about foreign reinsurers, they have been in the market for decades. And if we talk about some of the reinsurers, they have been in the market for centuries, like Swiss Re's, right? Now, when we talk about their extensive presence in the market at a global level, they have come across various events, both hard market and soft market, and they have been able to successfully maneuver this challenging environment in finding innovative solutions. Now, when such reinsurers come in the market, which is still growing, the penetration is low, we can expect innovative solutions from such reinsurers. And when we talk about penetration, penetration cannot happen without a reinsurance capacity. Because, say for example, if there are a couple of handful reinsurers, and if the market is growing substantially, there can be a situation that due to low capacity, the coverages would be very limited, the prices would be higher, and the clients may not like it. This creates a need where many more reinsurers have an opportunity to be in the market, provide reinsurance capacity, and help in the growth of India's insurance story. So, in a nutshell, I believe that reinsurance capacity, and I would compliment the efforts being taken by the regulator IFSCA in helping various reinsurers who were cross-border reinsurers some years back and have actually set up offices in India and have been able to provide the much-needed reinsurance capacity in the market and also able to provide reinsurance capacity in other markets as well. So that's in a nutshell that I can compliment.
Thank you, Sanjay. Thank you, Ritesh. Well explained. Sanjay ji, you sit on the underwriting coal face of some of the India's most complex risks, because GIC is GIC after all. Energy, infrastructure, CAT, large commercial exposures. Is real the constraint be here capital, or it is underwriting expertise and the specialty capacities which are still catching up?
Thank you, IBAI, for this opportunity. Between capital and underwriting capabilities, actually, we can't see it as a choice. Both have an equal role. But if you ask me, what is the tighter constraint, I would say that it is the underwriting expertise. Why I'm saying this is reinsurance, as we all know, is capital intensive. The specialized risk, the specialty risk, the complex risk require huge capital support. And that is where reinsurers come to the support of the insurance industry. Having said that, and as Ritesh ji also said, that reinsurance thrives on global spread. Reinsurance thrives on diversification. So, although we are talking of penetration, we are talking of 2047 vision, what we should aim for is an optimal risk architecture. What I mean is, we need not aim to have 100% retention. The complex risks should avail global capital. We should plow our losses from global capital. And that is how reinsurance industry works. As Ritesh ji also said, that from US to Australia, reinsurers have spread. Even GIC is an international reinsurer. We have footprints in 137 countries across the globe. So capital constraint is something that we can live with and we can import. There should be access to global capital, but yes, I'm mindful that while doing so, maximizing retention in India should be our goal. Now I will come to capacity constraints, the expertise constraints, which I said that it is little more tighter, because all said and done, we are a developing country. We have a vision of becoming a developed country by 2047, which looks very ambitious. But for a country like us, such an ambitious target is a must. And the technology, much of the technology in various fields, we need still to import. So the same gets reflected in reinsurance. So therefore, in reinsurance also, we need to import expertise. And when I'll go back to plowing capital from global players, when we use global reinsurers' capacities, we also get their expertise. And that is how the reinsurance industry works. And for India, it can have a model with a core of the reinsurance capacity coming from the domestic players like the Indian reinsurers like GIC Re, like FRBs, and rest of the capital, rest of the expertise can come from others.
Perfect, sir. Well explained. I was just remembering like export-import deficit. So you have explained in that manner. So you are importing technology, you are importing expertise, you are importing capital also, and you are exporting also. So the deficit being Atmanirbhar means my export should be more and my import should be less with the time. So, and second coincidence, 2047, and your syndicate number is also 2047. That's a coincidence. My apology.
It is intentional.
I do not know whether it is intentional or
Intentional to.
Is it? I thought some numerology.
Likewise, GIC Re has a syndicate at Lloyd's which is called 1947.
So, Maipalji, you are one of the people who actually shaped GIFT City reinsurance ecosystem from inside the regulator, cutting through the pitch for genuinely working today. And what structural gap are still holding you back, if any?
Good afternoon to all of you. Good afternoon to all of you. So, the number of registered entities at GIFT IFSC in the last 1 year alone, it is 25. And overall in the ecosystem, it has grown from 800 to 1200 entities. Almost every month every year there are 100 registrations. So this shows that the strength of this is robust, flexible, and internationally benchmarked regulations, which are aligned to attract the global players here. And the tax certainty is another thing which government recently announced, 20 years of tax holiday. Maybe coming to the other point, what are the structural gaps still holding back? I would say there are structural gaps, but anyway, it is in the process, it is in the progress to address them. One is many players do ask about arbitration center. Still, compared to DIFC and Singapore, GIFT IFSC has no independent arbitration center. Still, if there is any cases, they will go to commercial courts. So that is one certainty the players want, and they are trying to evaluate one of the parameter. But however, you know that an expert committee has been constituted to have arbitration center here, and the government is actively considering. It is a work in progress, and I am sure that soon government will come out with some solution to have arbitration center here. Second is about, also the players knows about talent. Relocation of talent. Perhaps they are the best one to answer it rather than I focus on that, but it is coming from, reflection is coming from them only. The talent is one of the constraint. However, that is also being taken care by some of the foreign universities have established their branches to groom the certificate courses, the financial courses. Then there are tie-ups, there are MOUs, and NIA Pune, III are going to open their chapters here so that it is locally trained. So all these measures have been taken. So I think these are some of the structural gaps, and of course about awareness. The awareness about GIFT IFSC may not be that. So again, that IFSC takes up the activities of outreach internationally and locally. Like one of the event is the Global Reinsurance Summit we take up, and that has given good results to have an outreach event. So basically these are the gaps. But however, I think over a period of time, they will be addressed.
Definitely. Thank you very much. In spite of all these odds, the speed on which Gift City has developed, especially in reinsurance, whether it is brokers and whether it is reinsurance company, is tremendous. Compliments, sir. So, youngest person and the lady, Priyanka.
Yes, sir.
India is expected to become one of the world's largest insurance market over the next decade. As risk exposure continue to grow, how do you ensure that Gift City becomes a preferred gateway for attracting new underwriting expertise, international reinsurance capital, and innovation while contemplating India's existing reinsurance ecosystem?
Thank you so much for giving me this opportunity to be here and share the dais with the stalwarts of our industry. Just about a couple of months back, I was sitting on that side of the table and was very proud to be a part of the broking fraternity as well. To address your question, sir, I think we should start with acknowledging the foresight with which the Gift City has actually been set up. It is an absolute bold move, that the government of India and IFSCA together have, put together, which is now setting up an absolute ecosystem for the insurance and the reinsurance industry. Yes, we do have a lot of world-class reinsurers, right? As our FRBs, we have GIC Re, which have always catered to the requirements of the insurance industry by, in form of innovations, by, putting down the capital and writing risks. Gift City, I feel, is not to replace that, but it is in addition to what the FRBs and GIC is already doing. They are doing a world-class job. And I believe the reinsurers and the insurance companies setting up there intend to follow the same footsteps, right? Adding value to it. Now, if I say from ADNIC's perspective, ADNIC being present in so many countries, we write business from practically every country in the world. We were looking for an ecosystem where, we could have the regulatory confidence. And that is what we found in the IFSCA regulations. It gave us the comfort that, yes, we can invest and we can invest for a long-term perspective. Having said that, we set up the branch and we are here to extend our expertise, our capital, our capacity in every way possible. Now, if you also look at it, right, it is not all, I think opportunities are not really only on the treaty side of business, but with the growth that is happening in India, with the various risks that we see, the infra risks, just like Ritesh mentioned, all of this need RI solutions, specialized RI solutions, and those solutions can be offered effectively by all the reinsurers who are setting up offices now in the Gift City. Okay, so if I look forward, what could be the three top priorities, for Gift City, and what are those three things that they should be addressing? One is, of course, the regulatory confidence that they have to continue maintaining and keep an open dialogue, which they have been doing all this while. And it is commendable. It is, we feel the comfort that, yes, we can go up to IFSCA, we can talk to them and put across our queries very comfortably. And we do get a response, which is really helpful. Secondly, it is attracting greater diversity of participants. By that, of course, our government is working on getting the MGAs to open their offices. But it's not only restricted to the MGAs, right? We could also have participants like, your cat modelers. You could have your insurtechs who could open up offices there. Brokers, of course, are doing it. So having said that, when all of these parties come together, it actually builds a very strong ecosystem, which is needed to get GIFT where it is supposed to go, and also make it a center of innovation. Today, we have a lot of peculiar risks. You see AI, you see parametric, climate change, all of these risks, cyber risks, right? All of these need a very particular way of underwriting. And we are still learning, we are still getting there, and we are taking help from a lot of our foreign partners at this point. If we could make GIFT City as a laboratory for it, where innovation can be encouraged, I think we will be there. So I feel success for GIFT City lies in actually addressing all of this. The number of people are going to keep coming, sir, and everybody can see what we saw when we opened our office in GIFT City. So thank you.
I can say Amin. So Mahipalji, you have spent 35 years across IRDA Oriental as well, and now IFSCA, watching Indian regulatory architect evolve. What recognition or framework does an MGA model still needs before it scales responsibly here in India?
This MGA framework has been notified by IFSA recently after the amendment in the Insurance Act. But before that also, a progressive step was taken by IFSA. Without the enablement in the Act also, it went ahead to give a joint registration for insurance company and MGA, but that was recognized under IIO. It will be treated as insurance office, not as an intermediary. But post Act amendment, since it is treated as a specialized insurance intermediary, we have to change and ask the applicants who have already filed applications to migrate to the new framework. So this is at the initial stage. So when we are formulating the framework, we thought that we should go in a stepwise. Otherwise, there are certain technical issues involved in opening it to all. So that is why we first started with the framework open for direct insurers. And after that, we will have to resolve certain issues related to reinsurance. So that is step 2. But right now it is open. And also we have kept parity with what a composite broker can have the same capital requirement. So on par with the insurance broker. So MGA can also be on that. So going forward in domestic also, as you are trying that MGA framework should be notified. So that all depends how already I think brokers are playing that role in terms of providing underwriting skill set and specialized product design and all that. So same thing can be done under the roof of MGA. Yes. So I am sure that it will be recognized as one of the important service. That is why it has come in the Act. So it's a matter of time that in domestic also will have a robust MGA framework that will complement and also help both industry as well as the intermediaries.
Definitely, MGA is a critical thing, and it takes its own time for anything to evolve. It started with them starting with one single underwriter. Then the notification came that MGA is also an intermediary. Definition of intermediary has been changed by the government. And then GIFT City came with the multiple pen underwriters in MGA, but on direct side. Priyanka, as a regional insurer headquartered in UAE, what convinced Adnic for this right time to invest in GIFT City? And what does say about India's evolving role in the global reinsurance market?
So for Adnic, when the decision was being made, there were 3 basic questions. Why India? Why GIFT City? And why now? Before I answer as to why India, I would like to state that till date, Adnic never had a branch office. India is the very first branch office that Adnic has set up outside Dubai and Abu Dhabi. So I think that answers most part of it. Now, why India? Indian insurance industry, right? It is at a very defining phase. India is transitioning from being more of an important insurance market to now being a reinsurance marketplace as well. Now, GIFT City has set up international standard platform, right, with a very clear vision. And it is that vision that we believe in, because of which we decided that, yes, this is the place to set up an office. This is the place to set up the branch. Now, also, why GIFT City? Because Adnic is at an inflection point where we understand that the penetration for India is going to be at a growth stage. You are only going to see an upward trend going forward. Secondly, the economy is expanding. Initiatives like these are also being a right platform, which helped us in making that decision that yes, this is something that we should definitely be doing. Also, we believe that it's great to be a part of the industry when it is at a growing stage, rather than entering when it matures, right? From our perspective, we also feel that being a regional reinsurer, when we are setting up an office here, we can bring in a lot of regional perspective, which also, internally gives a lot of option to the cedents that yes, there is an alternative capacity which is available, which can back us, and which also brings the expertise to address those complex risks. Because ADNIC has been around for the longest time, right? Even before, I think it's been since the last 17 years that I have seen, in the industry, I have worked with ADNIC myself. So with the expertise, with the experience that ADNIC brings, yes, it is the right time. Also, we feel that, with the two economies having deepened their ties, this is just another pillar which adds on to the cooperation between the two countries. So ADNIC has absolute faith in the growth of the market. Thank you.
Thank you. Now, since my career in insurance, while appearing for reinsurance paper in fellowship or in ACII, I had read about sidecars, I've read about cat bond, I've read about insurance-linked securities and all those things. But that is not a known instrument in India. So Sanjay Mokashi ji, what do you think? Whether this fresh capacity comes from cat bond, ILS, sidecars, not traditional reinsurance, why don't we go directly to the capital market to have these type of things? I mean, what is that and why we are not, why India is shying away from that?
The traditional reinsurance capacity or capital will remain foundational for a market like India. Basically, it won't be fair to say that India lacks cat bonds, ILS, or alternate capital as we call it. Because we are at a different stage of market evolution. In a true sense, it is this century that we are seeing reinsurance industry growing, keeping pace, the traditional reinsurance, keeping pace with the market. And yes, there are obvious advantages of ILS, cat bonds. There is additional capital available, choice available to the buyers, liquidity that it provides. It is impressive, and it is bound to come in our market in due course. In fact, we are getting benefited from whatever the other reinsurance centers have witnessed over a longer period. That will happen here in the shorter period. And IFSCA or Gift City can provide sandbox kind of environment. So yes, it should be made use, but we have to be mindful that there is an evolution that is happening.
Yeah, there is a stage for that. Maipalji, you told in initial talk that these things are coming in Gift City.
Yes. The framework for insurance-linked securities and catastrophic bonds is under progress. So this can be done by a special purpose insurer. For that, you require a definition of special purpose business. Special purpose business is a part of reinsurance business. So right now in the Insurance Act, we have 4 classes of business: general, life, health, and reinsurance. So within the reinsurance, again, a category is required, what is called special purpose business. This is to benchmark with the international jurisdictions like Bermuda has done. They have brought an amendment in their Insurance Act to insert the special purpose insurer. Likewise, Hong Kong has done. They have also amended their insurance ordinance and brought a separate framework. And UK also separate regulations for, they call it transformation vehicle. And similarly, in NIC also in 2001, they brought same definition of special purpose insurer. So similarly, we are taking these studies and now already maybe it may not be correct to announce it here, but we are already pursuing with the Government of India to bring some kind of notification under 2CA of Insurance Act, which will be applicable to IFSCA. So once that is done, we will come out with separate regulations that will enable special purpose insurers to issue this insurance linked securities. Morning we were talking about banks seeking capital relief out of credit insurance. So this is another way of insurance companies seeking relief of capital from the capital market. So this is, I think, a bridge, and this is when they can do it, I think we have to do it. So it is a similar kind of arrangement. So you have to integrate the financial ecosystem, and this is the way. And I think IFSI is now better placed to come out with the framework.
Thank you. Since time is up, so the last fireside question. Each one of you, one reform in one sentence. What is the single biggest step that unlocks the next wave of risk capital for India? Priyanka, you can start with.
Just in one quick sentence. Create a deep, globally connected risk market where capital can be deployed, diversified, and recycled efficiently.
You have added all the executives.
I would say maintain a competitive, stable regulatory environment, because a lot of eyes are on India, specifically the two regulators that are existing in IRDA and IFSCA. And with the way the GIFT City is increasing, obviously the eyes are on it, to see how the new reinsurance capacity can contribute to the overall growth in the India insurance market.
Apart from agreeing with both the panelists, I'll add one more, that we can attract capital when there is a greater transparency in capital deployment that is provided to the entities that want to open shop in India. And that is maybe risk-based capital regime framework that we can bring in.
So there is no one way of doing things in one way of regulation or so. There are multiple ways. Now we have to complement the traditional insurance with alternative risk transfer and non-traditional reinsurance, and also be open for the other frameworks. Maybe they may not work immediately, but they will be working in future. So be a future-ready framework. So like IFSI is now issued a consultation paper on the mutual insurer protection and indemnity club. So keep it open, keep all the frameworks. Maybe shortly, captives also should be open. So all over the world, I think 25 to 30% of the premium is being handled by this. So I don't know, in India, we are withholding that may be going into self-insurance pools, or it is being self-insured, and that may not be coming into the formal system. If that has to come into the formal system, some of the informal systems should also be formalized, and that framework should be thought of, or equivalent frameworks like mutual, captive, and this insurance linked securities should be thought here also. And if it is done, I think there will be more relief for the capital.
Yeah, so many things can be done and will be done. One question I am taking it with the permission of ma'am. With reinsurance booming in the GIFT City and with that support, insurance companies reducing the fire premium in competition and risking their solvency, particularly PSUs, what steps are reinsurers GICs planning? I mean, all the three.
Since GIC is named, I'll take that question. Of course, I'll answer from GIC's point of view only, because I can speak for GIC. Reinsurance is a business, both it is competitive, it is collaborative also. If someone wins a reinsurance placement, there need to be follow markets that are available, that are ready to follow that particular reinsurer's code. So that's how, although it is competitive, it is collaborative also. Having said that, GIC Re is a PSU, public sector undertaking, but it has been in competitive environment for a long time now. Right from the beginning of this century, it has been in the competitive space. Though there were no FRBs then in the first decade of this century, cross-border reinsurers were competing for Indian business. So FRBs came, now additional Indian reinsurers, IIOs have come. So yes, the scale and intensity of competition has gone up. Competition has come to our doorstep, as I keep saying. This is a competitive world. As a reinsurer, we have been here for more than 5 decades. Market knows us. There are deep relationships that we have with our clients here. We are an established brand. We leverage that relationship that we have with the market. Addition to that, we have data for all these years, which helps us in analytics. It helps us in understanding domestic risk better than no one else, if I can claim that. So, as a reinsurer, we are also a listed company. So we must also ensure that whatever we do, we satisfy all our stakeholders. And while we have to do that tightrope walking, that is support insurers in this competitive environment. Someone has, the question also has something about fire premium. We have seen intense competition. So yes, we have to, on one hand, we have to support our insurers, our cedants. On the other hand, we have to ensure that we protect our balance sheet. How we can do that is by using the reinsurance levers, the handles, in such a way that in this difficult situation, we protect our balance sheet, but we also don't desert our cedants, insurers. Having said that, earlier, I also mentioned that we are an international player. So we write business from many countries. We have 3 branches, 3 subsidiary companies. We will leverage our presence in the global market. We will enhance our presence in the global market. We have our strategy in place, and we are ready to face further competition. As Mahipalji said, that few more IIOs are in the pipeline. Yes, we are ready. There is another challenge that we have. We generate talent. Now we have to retain talent. So
even for brokers, lot many things are going to Gift City.
Yeah. So just to summarize, we are gearing up on all fronts. Yeah. Thanks.
Thank you. A big round of applause to the And just an announcement that IBAI training on 2nd and 4th Saturday. This Saturday, since this is the 4th Saturday, tomorrow, this training will be off. That's why the invite has not been sent. So, is baar ki chutti hai, because we all will be here. So, next 7th will be the 7th or 8th July will be the 2nd Saturday, 8 August, sorry. And then it will continue as it is. Those who do not get invite either by mail or by WhatsApp can either WhatsApp me or to Anand. Anand from IBAI, everybody knows him, he is coordinating. Then we will include those invites while sending those invites. We will ensure that that invites reach to you as well.
So thank you to our panelists for decoding reinsurance for us. And may I request Ms. Rashmi to please join us in presenting the mementos. So thank you once again to all our panelists, and a special thanks we would also like to extend to our sponsors, our partners in success, our platinum sponsors, ICICI Lombard General Insurance Company Limited, the co-title sponsors, New India Assurance Company Limited, GICRD, all three of them are co-title sponsors, the diamond sponsors, Bajaj General Insurance Company Limited, IndusInd General Insurance Company Limited, Shima General Insurance Limited, the Oriental Insurance Company Limited, Axis Max Life Insurance Limited, ICICI Prudential Life Insurance Company Limited, and Care Health Insurance Limited. Our gold sponsors, Acco General Insurance Limited, Agriculture Insurance Company of India Limited, Chola Mandalam. May I request all to kindly step forward for a group photograph. May I request all of you to please step forward for a group photograph. You can step forward for a group photograph. Thanking Go Digit General Insurance Limited, IFCO Tokyo General Insurance Company Limited. They are all our gold sponsors. National Insurance Company Limited, Raheja QBE General Insurance Company Limited, United India Insurance Company, Royal Sundaram General Insurance Company Limited, SBI General Insurance Company Limited, and so many sponsors and partners in success definitely motivates and inspires the organizers. SBI General Insurance Company Limited, Tata AIG General Insurance Company Limited, Tata AI Life Insurance Company Limited, our silver sponsors, Precision Informatic Private Limited, SmartPing, Binary Semantics, Lloyd, and Lumic AI. And ladies and gentlemen, as we close here, in Studio 2, the mementos to the IBAI members are being presented. You may kindly collect from there. Also, we have, in case you've yet not collected your delegate kit, again, it's in the Studio 2. In Studio 4, we have two presentations which are beginning by Shima and then by Lloyd. And at 7 o'clock, that's another hour from now, the Felicitation Awards with the musical evening is going to be organized here, followed by a networking gala dinner and fellowship. And tomorrow morning, 10 o'clock, we're going to be starting with the session. The chairman, IRDA, is going to be joining us in that session. So have a great evening. Enjoy your other two sessions which you have with Shima and Lloyd, and then the gala dinner tomorrow morning. Request you all to be in the hall seated by 9:50 so that 10 o'clock sharp we can start with the session. Thank you once again. Good day further. Jai Hind. Ladies and gentlemen, the organizer saying we are ready to extend our gratitude to each and every member of IBAI by presenting you the mementos, but unfortunately people are not joining us in Studio 2. So please be, if you can please join us in Studio 2, collect your mementos. That's a special token of our gratitude from the organizer side to each and every member for your participation, for your support. And further, you may also collect your delegate kit from Studio 2.
"25 years ago, a single heartbeat marked the beginning of Bharosa, a promise born with one simple purpose: to protect what truly